So, guys, we are live now. We are absolutely live. Can you all hear me? Can you all see me? What's the status of audio video? Kindly let me know. Can you all see me? Can you all hear me? Can my beautiful voice strike your ears? Just a second, I'm not able to hear my audio. Sir, your voice is beautiful. Okay. See, now I can hear it. Okay, perfect. Okay, ji. So, hello everybody. Vanakkam. Good morning to all of you present here. Again, welcoming you all to this day two of our 3-day marathon series for CA Final Direct Taxes and International Taxation, that too in full English. Yesterday, we covered up the entire international taxation. Today, we have to cover up the small topics. Sir, what will be the small topics? What we are going to discuss? I shall discuss everything. First of all, you tell me how you all are doing. Please brief you out your daily lifestyle, how you are doing. Please let me know in the comment section so that we can start off with today's session. Sir, meanwhile, I can brief you out. Today, our basic aim is to complete all those chapters now that are small in size, which you yourself, if read now, it will take a lot of time. What chapters are we going to cover? It is covered in the thumbnail. If you see, appeals is the first target. According to me, most people tend to skip this chapter because they think that it is a part of assessment. We should not do it. My target is completed within 30-35 minutes. We shall complete it. Then we have GAR. Of course, you are going to see a question in exam. Then we have DRC, always a skipped topic. Then we have miscellaneous provisions, tax audit, black money, clubbing, deductions. Then we have ICDS as well, because I think ICDS is a topic now which people tend normally skip out before exams. So we shall cover that as well. In this entire process, what I want from you all, just sit back, relax, listen to what I say. Okay. Sir, how we are going to cover? See, I am going to cover the content from my relevant book. If you want this book, you can buy this book with the link given in the description. If you don't want to buy now, use your book, whatever book that is, that's okay. Question answers I will be solving from my super 150 question PDF. I have shared that in Telegram, and link for the Telegram channel is in the description. So, without wasting any time, let us start with the topic, that is appeals and revisions. Appeals and revisions. Two words mentioned. Part of assessment procedure chapter, but yet very different, yet very important, and yet very beautiful chapter it is. So, appeals and revisions. First of all, whenever you are aggrieved by any order, assessing officer passed any order against you, where do I go? If any order has been passed against me, where do I go? If your sister beats you, you go to your father, you go to your mother. The same way. If assessing officer passes order against you, you go to a higher authority. Now, what are the given higher authorities? What higher authorities do we actually have? Sir, we have Joint Commission appeals. We have CIT appeals. Alternatively, we can file a appeal to anybody, not to both. But within 30 days from the order, we are going to file the appeal. We have Income Tax Appellate Tribunal. If we are aggrieved by the order of the CIT, we go to ITAT. We shall file appeal within 2 months from the end of the month of the order of CIT appeals. If we are aggrieved by ITAT, we have to go to High Court within 120 days. Yesterday we studied a topic advanced ruling, where we studied now we can go to high court within 60 days. For advanced ruling, time limit is 60 days. But for normal cases, we have to go to high court in 120 days from the order. Remember, there is a difference. And if we are aggrieved by the order of the high court, we shall move on to Supreme Court within 90 days from the date of the order. Best part of all, three orders are not appealable. There are three orders now which cannot be appealed at all. First of all is if there is any interest of any 234A, B, C, we cannot appeal for that. Always understand interest is a byproduct, so we cannot appeal for that interest. We can simply appeal for the reason for why addition has been made. If addition has been deleted, interest will also be deleted. So we never appeal for interest. Revisionary order under 264, I will tell you what it is. An order of DRC. If DRC passes any order, now we cannot appeal that. We shall discuss this as well because we have a chapter DRC coming further. Joint Commissioner appeals. Appeal to Joint Commissioner. See, if assessing officer passes any order, now then you can go to Joint Commissioner, but assessing officer should be below Joint Commissioner. If ITO passes, you can go to Joint Commissioner. If Assistant Commissioner, Deputy Commissioner passes any order, you can go to Joint Commissioner. So very simple. Sir, what type of order they can pass? So they can pass any assessment order, any kind of assessment order, scrutiny assessment, income escaping assessment, best judgment assessment, any assessment they can pass. Any rectification order is appealable as well. Sir, any intimation order for TDS, any intimation order for TCS, any intimation order under 143(1), any such orders are appealable. Or any order which is passed by the officer lower than the Joint Commissioner, any order that is passed. For example, assessing officer declared as assessee in default. That is also possible. Against that as well, we can go to Joint Commissioner appeals. Sometimes when case is pending at CIT appeals, now department CBDT might transfer the case to Joint Commissioner appeals as well. Right now they don't do, but when this provision came now for the first time, then they used to transfer. Appeal to CIT appeals, CIT appeals, CIT appeals, CIT appeals, or I call it Sita. Hey Sita, you know Sita. Says we know Sita. Hey Sita, if we are aggrieved by the order of the Joint Commissioner, we go to CIT appeals. Any Joint Commissioner passing order, we shall go to CIT appeals. Below Joint Commissioner, we shall go to Joint Commissioner appeals. Perfect, sir. What orders orders are appealable to CIT appeals? See, first of all, any assessment order, any rectification order, any intimation order, and at last, sir, any order passed by the Joint Commissioner is appealable to SITA. When you have to go, sir, you have to go within 30 days. You have to go within 30 days from the order of from 30 days from the order notice, whatever it is. Within 30 days, you have to go to CIT appeals or Joint Commissioner appeals. Depending upon the case, you have to go to either. Okay, you don't have to go to both of them. You have to go to the one of them. If order is passed by Joint Commissioner, then go to SITA. If order is passed by below Joint Commissioner officer, then go to Joint Commissioner appeals. Certain points. See, it is said that we have to go to Joint Commissioner within 30 days. But what if we delay it? What if we go after 30 days, 40 days, 35 days? Will they allow us will they give us the condonation? Right answer is yes, they give us the condonation. Even if we go late, now they allow us. Sir, whenever we file appeal, now we have to submit three things. First of all is statement of facts. Statement of facts is submitted. Sir, what is the statement of fact? See, what has been the case? We filed return of income on this and this date. We claimed credit this and this date, but department while processing the return disallowed this much credit. So this is the case. Brief summary of the case is statement of the fact. Second thing that you have to furnish is grounds of appeal. Why, according to you, you are correct? What legal backing, according to you, you have? Some sections you have again in your favor. Some judgments you have in your favor. What is the ground of fighting the appeal? What is the basis you have to tell? And at last, you have to pay the prescribed fees. All these have to be submitted in form number 35. This is called memorandum of appeal. So three things: statements of facts, grounds of appeal, fees, all in form 35. This is called memorandum of appeal. Joint Commissioner and SITA are requested, just requested. These are requested to pass the order within 1 year in which the order is passed. See, in which appeal is filed. Today, if appeal is lodged now, within 1 year from the end of the financial year in which appeal is lodged, they are requested to pass the order. Not even ordered, they are requested. These CIT appeals, these Joint Commissioner appeals are requested to pass order within 1 year. They are not ordered. This is not a hard line. This is just a recommendatory time limit to these people. See, they are going to entertain appeal only if we have paid the taxes. See, if I want to go for appeal now, I must have paid my share of taxes. And if I am not furnished even ROI, then in that case, I have to submit the relevant advance taxes. Then only they are going to entertain my appeal. Can they put a stay to the grant? Sorry, can they grant a stay to my demand? See, as soon as an order is passed against me, any order is passed against me, what happens? The department will start recovery proceedings. Department immediately starts recovery proceedings. If I want to save myself from recovery proceedings, I have to go to CIT and request for the stay. And the right answer is CIT appeals and Joint Commissioner appeals can put a stay to my demand. Lawmaker says it is possible that during assessment you must have given some less evidence to assessing officer. Can you give some additional evidences to CIT appeals, Joint Commissioner appeals? Right answer is yes, we can submit some extra evidences, extra evidences to CIT appeals as well. Joint Commissioner appeals as well. In what situation? These situations are important. These situations are important. First of all, we went to AO and AO refused to take it. Then we can give the evidences to CIT appeals. We went to AO, but we were prevented from giving these evidences. Then we can give the evidences to CIT appeals. We went to AO, but AO passed the order before considering the evidences. So in three situations, we can submit the evidences to directly CIT appeals, Joint Commissioner appeals. If AO refused to take evidences, we were prevented from furnishing the evidences, and at last, AO passed order without considering, without even taking the evidences. In these three cases, we can submit additional evidences to CIT and Joint Commissioner appeals. Sir, very simple topic. And that's it. That's all about CIT appeals. Now we have ITAT. ITAT, ITAT, ITAT. I don't know what people call in real life. I personally call it ITAT. My principals used to call it ITAT. Some people call it ITAT. Khair, whenever you go to ITAT, Income Tax Appellate Tribunal, if your income is up to 50 lakh rupees now, total income is up to 50 lakh rupees, then single judge bench is going to hear your case. There will be only single judge sitting in front of you. If your case is very special, reason for stay in demand. Reason for stay in demand. Bhai, demand is against you. Otherwise, department will come and sell your assets. Department will come take away your assets. So, bhaiya, you want to stay in demand, na? Demand is against you. If they don't give a stay, department will go away, seize your assets, sell your assets. So you want, na, there is a special reason. Otherwise, you will be homeless, you will be bankless, you will be shareless. I mean, you will not have any shares, you will not have any bank, you will not have any property. Department will come and say, take it off. So there is a reason. Otherwise, recovery proceedings will start. Division bench, what it says. See, if your case is very special now, then ITAT may decide with a divisional bench, which might include more than two judges. But ideally, what happens? ITAT functions on division bench where we have two judges only. What two judges? First judge is a judicial member and the other judge is accountant member. What is judicial member? He is a retired High Court judge. Accountant member is CA in practice for more than 25 years or a lawyer for more than 10 years of practice. These are the accountant members. Now in this case, decision is taken by majority. Sir, but what about three? If there are two judges, one a judicial member says assessee sahi. Accountant member says the department is correct. In that case, who is going to win? Sir, they both will refer the case to president of ITAT, who shall in turn draft the case. Who shall in turn draft the case or refer the case to third person, and that third person will help in deciding that who again in whose favor judgment shall be passed. Perfect, sir. Which orders are appealable to ITAT? See, ideally, every order of CIT appeals or every order of CIT appeals or Joint Commission appeals is appealable to ITAT. Every order is appealable. Some special orders, for example, orders of DRP. Whenever you are aggrieved by DRP, Dispute Resolution Panel. If you remember, in case of foreign company non-resident, whenever there is a draft order, that draft order is sent to assessee. Assessee might object to that draft order to DRP, and if the DRP gives the guidelines to AONA, assessee can only argue at ITAT. Assessee can only appeal to ITAT against that DRP guidelines. This is what is written here. If there is a revision order under 263, we shall study what revision order is later on. That can be only appealable at ITAT only. At last, any order passed by CIT, PCIT. I mean, see, above Joint Commission, whoever passes the order, now you can finally appeal at ITAT. So CIT, PCIT, CCIT, DGIT. If these people file the order, now pass the order, then you have to go to ITAT. What type of order they pass? For example, cancellation of registration of a trust. If trust registration has been cancelled, then You have to go to ITAT only. So these orders are appealable at ITAT. Sir, at ITAT, na, both can go. Even SSC can go. If I am aggrieved by the CIT appeals order, even department can go if it is aggrieved by the CIT appeals order. Till when we can go? Lawmaker says 2 months from the end of the month of the order. As soon as we receive any order, 2 months from the end of the month we shall take. See, in this entire chapter, we always have 2 months from the end of the month, 2 years from end of the year. We always have 2 years from the end of the year. Okay, always end of the year is silent. We have to go within 2 months. Even if we delay, na, it will be delay will be condoned. Delay will be condoned. Delay will be condoned. When we go to appeals at ITAT, listen, we have to again submit the 3 or 4 things. First of all, statements of fact, what actually happened in our case. Grounds of appeal. Grounds of appeal imply why we are fighting the appeal. Third thing, copy of the order of assessing officer. What order assessing officer passed? What was the order of the CIT appeals and against which you are filing the appeal? This is called memorandum of appeals. This is filed in triplicate. This is filed in triplicate. Important point, dear all, dear all, dear all. Oh, very important point, very important point. Stay of demand. Stay of demand by ITAT. Listen very carefully. See, CIT appeals can give a stay to demand anyway. There is no conditions attached. There is no limit. But ITAT has some limited powers as to stay of demand. Okay? What powers they have, you need to understand. First power is you will only understand these powers if you like the video and subscribe to the channel. Otherwise, you will not understand this. I'm honestly saying you will not understand this if you have not subscribed to the channel. Arey Baba, Arey Baba. In between, how you are sleeping? I mean, you are not even shy enough to just ask for the subscription. I mean, I have become, I mean, bulletproof now. No shame. Now, if order is passed for 180 days now, ITAT can grant a stay unconditionally. Unconditional grant is 180 days. Can this 180 days be extended? So this 180 days can be extended. Original plus extension can be maximum 365 days. Original plus extension can be maximum 365 days, not more than that. But this extension shall be only given now if delay is not because of SSC. Not because of SSC. This is the legal language I'm telling you, legal language. Not because of SSC. So 180 days unconditional. 180 days, maximum 365 days, original plus extension. That too can be given by ITAT, but this will be only given when SSC has not done any delay. Department might delay, ITAT might delay, anything, anybody can delay, but SSC cannot delay more than 180 days. If he has done, then stay will not be given. Sir, this is the legal language as per Act. But what happens after 365 days? Ideally, stay should vacate. Ideally, stay should vacate. Lawmaker says ideally stay should vacate. So department can start selling away your assets. But there is a Supreme Court judgment which save you. Pepsi Foods Limited Supreme Court judgment is there that saves you, which clearly states that stay shall continue even after 365 days if delay is not because of SSC. That means indefinite stay will continue if SSC has not delayed. Indefinite stay will continue. First of all, what did I say? Stay of demand is maximum 180 days. Can give extension for delay, but not due to SSC. But remember, original plus extension shall not exceed 365 days. After 365 days, what will happen? So stay shall stand vacated if disposing of appeal is attributable to SSC. If SSC has defaulted now, in that case, stay shall be vacated. But if the delay is not because of SSC, it is because of department, it is because of ITAT. In that case, that stay shall continue. This was said by Pepsi Food Limited in the case of Supreme Court. Whenever you want a stay to demand, whenever you want assessing officer not to start recovery proceedings, you shall offer at least a 20% of the deposit. You shall offer 20% of the deposit amount. What 20%? So 20% of the taxes, first of all. Second thing, 20% of what? Sir, disputed demand. Undisputed, you have to pay. Which is not arguable, you have to pay, but which is arguable, out of the 20% you shall pay, then only there will be a stay of demand. Perfect, sir. Can ITAT admit additional evidences? Yes, it can admit. Order of ITAT. See, ITAT can confirm the order of the AO. Assessing officer, sorry, CIT passed the order, ITAT can confirm that. ITAT can reduce that. ITAT can set aside the assessment. Anything ITAT may do. But sir, ITAT cannot enhance the assessment. Believe me, ITAT cannot enhance the assessment. What does that mean? See, if your income was 10 lakh rupees, ITAT can increase it. Can ITAT increase it? Right answer is no. ITAT is always for the benefit of the assessee, so it can never increase it. It can always increase it. See, in our syllabus, it is just a 20% deposit. It is only mentioned. Okay? See, penalty interest might hype up any. So taxes is the basic thing on which you have to pay. Interest penalty is this byproduct, so you don't have to pay that. Now, memorandum. Acha, ITAT should pass order within 4 years. ITAT should pass order within 4 years. It is recommendatory for ITAT to pass order within 4 years. Do they actually have to file order? Not mandatory. It is not mandatory time limit. This is just a recommendatory time limit. Okay. There is a MOCO. There is a concept of MOCO. Concept of MOCO. Memorandum of Cross Objection. MOCO. Now, what happens is, for example, this was assessing officer versus Rahul. Case was happening, assessing officer versus Rahul. And this case was happening at CIT appeals. And Rahul won. Rahul won at CIT appeals. I won. Yeah, I won. Department immediately went to ITAT. As soon as assessing officer submitted the case or submitted the cases to ITAT for taking the case, ITAT tells me, oh, see, Rahul, against you case has come. I have an option to file a cross objection. I will say to ITAT, see, ITAT, this is a poor AO. He has already lost. This is the case. This is the grounds. This is the statement of fact, and this is why he has lost. Do not take his case. Do not even take his case. So I am filing a cross objection so that ITAT doesn't even take the case. I am filing cross objection so that department doesn't even take his case. That is nothing but memorandum of cross objection. Sir, in what form we have to file? It is form 36A. No fees. Within 30 days of the receipt of the notice of the appeal, we shall file MOCO, memorandum of cross objection. Rectification of mistake by ITAT. See, if ITAT has done a mistake in the order, ITAT passes the order. It is also a bench of humans. It can do some wrongs. It can do some mistakes. ITAT can do some mistakes. It can pass some wrong orders. Can it correct its order? Right answer is absolutely no. ITAT doesn't have power to review or correct its order. But yes, if there is a mistake which is apparent from record, then ITAT can rectify. For example, in an order, there was mentioned 2 plus 2, and by mistake, ITAT has mentioned 5. Oh my god, 2 plus 2 is equal to 5. ITAT has passed an order with 2 plus 2 is equal to 5. It is mistake which is not debatable. No doubt it is wrong. So this mistakes can be corrected. Otherwise, if there is a material discrepancy, if there is a major conceptual error, if there is any other thing, ITAT cannot review the order. ITAT has to go, refer the case to High Court. ITAT cannot revise its order. It can only change the order for which mistake is apparent from record. Sir, what is the fees required for going to ITAT Joint Commissioner? See, first two things are not even relevant. Don't even see that. Third thing, if assessee has assessed income more than 2 lakh rupees, then for Joint Commissioner and CIT, you have to pay 1,000 rupees fees. If you want to go to ITAT now, in that case, 1% of the assessed income, maximum 10,000 rupees fees is required to be paid. Okay, this is the basic 1,000 or 1% 10,000, whichever is lower. In other cases, for example, we have been declared assessee in default, then 250 rupees. Or for example, our registration has been cancelled, we are going to ITAT, then 500 rupees. What if the department files the appeal? This is the bad thing. So they are not required any fees. They should also be required fees so that at least they are under control. But no fees by the department. See, we can even submit additional evidences which we have not submitted at the time of assessment. We have not submitted at the time of CIT. We can submit the additional evidences as well, provided Decision is made by IT authorities without giving the opportunity. If our decision was made without even giving the opportunity, plus ITAT thinks that additional evidences will help them to make a better decision, then only you can submit additional evidence. Otherwise, you cannot. Comparison between the powers. This is important. Huh? Can CIT appeals and ITAT give a stay to demand? We have demand outstanding. Can they put a stay? Right answer is yes. Both of them put a stay. Can they condone delay? If we delay in filing the application, can they condone? Of course, both of them can condone. Both of them have this power. Can both of them do inquiries? Right answer is of course, sir. Both of them can do inquiries against us. Power to admit additional evidences. See, if I want to submit additional evidences, can I submit? Yes, sir. At both the places we can submit. Power to submit the additional grounds. Very important. Earlier, when I submitted the appeal, I had only few grounds in my favor. But as soon as appeal progressed, a new Supreme Court judgment came. Can I use that as my ground? Right answer is yes, you can submit additional grounds as well. Power to enhance the assessment. My income was 50 lakh rupees. I went to CIT so that my income is reduced. But sir, CIT increased my income. Can CIT increase that income? Right answer is yes. CIT appeals can increase the income, but ITAT cannot. CIT appeal can, but ITAT cannot. CIT appeal can, like ITAT cannot increase the assessment. This is very important point. ITAT is only for the benefit of the person. They can confirm and reduce the assessment. Yes, both of them can confirm the assessment. Both of them can reduce the assessment. Perfect, sir. Perfect, sir. Perfect, sir. Now, power to set aside and refer back to AO for fresh assessment. This is very good power. See, case came to ITAT. ITAT says, Athu, she, what type of assessment you have done? She, do it again. Can ITAT do this? Case came to ITAT and ITAT says, Achi, tu, very bad. Do this assessment again. ITAT can order the fresh assessment. ITAT can set aside the AO's order and ask them to do the fresh assessment. But can CIT appeal do that? Sir, CIT appeal can also do that, but only if the case relates to 144. What does that mean? If case relates to best judgment assessment. See, ideally, CIT appeals cannot request assessing officer to do the fresh assessment. But if case relates to best judgment assessment, where a party has not cooperated, now in that case CIT appeal can direct to assessing officer for fresh assessment as well. Otherwise CIT appeal doesn't have this power. I personally think this is very important point. This was amendment last year which was not tested last year, and a gray area which might be tested, who knows. Now, can a CIT ITAT recall their order for for doing rectification apparent from record? Can they recall their order? Can they recall can they read their entire order for rectification purpose? Right answer is yes, sir. They can do. Both of them can do. Can they actually rectify mistake which is apparent from record? Of course, they can hear order as well. They can rectify as well. But sir, can you hear the entire order for other basis, for other reasons? Right answer is no. You cannot hear your entire order for any other reason. You cannot review your order as well. At last, sir, can you submit additional claims even without filing revised return? What important point is, let me tell you. See, if assessee filed ROI with income of say 50 lakh rupees, after filing ROI, he realized that I forgot some deductions, some expenses I forgot, some exemptions I forgot. Arey Baba, he was crying. I forgot these things. I forgot these exemptions. Point here is, if you have filed return, if you want additional claims, additional deductions, additional exemptions, you can only claim at the time of a revised return. You can only file revised return. Can you claim this deduction exemption at the time of 142.1? Right answer is no. A fresh claim is not allowed. Can you claim these deductions, exemptions, या फिर expenses in 148? Right answer is no. Can at the time of assessment you can claim it? At the time of assessment? Absolutely no. But at the time of appeal you can do. At the time of appeal, you can submit the additional claims which were not submitted earlier. Even without filing revised return, you can submit the additional claims. Very important power in both the senses. Now we have appeal to High Court. If we are aggrieved by the order of the ITAT, then we have to go to High Court. Now, when do we go to High Court? For example, we have with us Janvi. I'm telling you a real life example. You know what? Janvi was going, from nearby my house. My house has a big mango tree. ठीक है? Janvi felt and saw those mangoes. Oh, 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 beautiful mangoes. She took a stone, threw this stone to the wall. Difference of two can recall their order. See, first recall is for rectification purpose, and this other recall is for the merits. Merits means whatever order passed, you want to change that order. For example, bad debt claims earlier was disallowed by the ITAT, but now ITAT thinks that it should be allowed. So can it again rehear the case and allow that? Right answer is no. Once order is passed, they cannot recall their entire order for the merits purpose. For changing the entire order, you cannot recall. But for rectification, you can rehear your case. Now, Janvi threw a stone to my mango tree. I shouted, Janvi, chor, 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 chor. I shouted, chor, 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 chor. Janvi says, no, sir, I have not taken anything. She denied. She denied. She denied that she has not stolen anything. My point is, at first, I have to establish this fact na, that she has stolen the mangoes. And this is what question of fact is. People arguing what happened, what not happened, that is the question of fact. Okay, very important thing I'm telling you. This will be tested in some of the other questions. Listen, question of facts imply what has happened, what has not happened. That is question of fact. Who decides what has happened, what has not happened? It is decided by lower courts. It is decided by CIT appeals. It is decided by ITAT. High Court never interferes in question of fact. High Court only interferes in question of law. Now, what is question of law? See, Janvi threw the stone to my tree, and mangoes she stole away. At first, she denied that she has not taken. So this is question of fact that whether she has stolen or not. Once I showed her the video camera, see, I took a video camera. I was vlogging at that point of time. At the same time, you stole. Therefore, you were caught in the camera. Now, Janvi became all of a sudden very, cautious. She says, what if, sir, what I have wrong, what wrong I have done? This is our Mother Earth. Can't I have fruits from my Mother Earth's trees? Who are you to ask me? Now she is telling me the legal angle. So now we have to check whether she has done legally correct things or not. So this is question of law. Question of fact was whether she has done things or not. Question of law implies whether she has done what it is legal or not. High Court will never interfere for question of fact. Facts are established at ITAT only. High Court will only tell the legality of the case, and that is why High Court only answers the question of law. But there is one exception to that. What is one exception? Determination of arm's length price. Under transfer pricing chapter now, we have determination of arm's length price. If arm's length price determination is subject matter now, in that case, High Court will answer that question as well. Arm's length price is particular case. Now, it depends upon case to case basis. It is question of fact only. But High Court assumes it a question of law, and High Court will interfere and will help in determination of arm's length price as well. What did I say? High Court only answers question of law. For with respect to arm's length price, High Court can even help in calculating the arm's length price. High Court has a say in arm's length price as well. Now, whether High Court can review its order, if High Court feels that it has passed a wrong order, can it review? Of course, sir, it can review. It has powers because of Supreme Court judgments. If new fact is discovered, if High Court discovers that mistake has been made because which is apparent from record, or if there is any other sufficient reason, in that case, High Court can review the order. All these cases are where High Court can review the order. Now, appeal to Supreme Court. What does appeal to Supreme Court imply? See, first of all, it is appeal it is appeal against the High Court only. Supreme Court can review its order if two decisions are contradictory. For example, three judges bench gave a judgment that assessee is correct, and later on, three judges benches say the department is correct. Which shall prevail? Lawmaker says which is latter in time, na that shall prevail. Whichever order is passed, latter shall prevail. Then Supreme Court judgment is binding on all IT authorities. Listen, whatever judgment Supreme Court's pass, it is binding on all the IT authorities, including every court. No court can deviate from the judgment passed by the Supreme Court. In addition to that, sometimes Supreme Court gives additional remarks, so that additional remarks are also binding in nature to all the IT authorities. Sometimes Supreme Court passes judgment without taking into account the legal provisions based on customs, based on their own understanding, based on old case laws. Supreme Court passes some judgment without considering the legal provisions. That judgments are also relevant. That judgments are also to be considered. That shall also be followed by the lower courts. Sometimes what happens is, for example, listen very carefully. There was a question asked once. For example, assessee versus department case is happening. at High Court. SSC versus department is case is happening at High Court. High Court passed order in the favor of the SSC. High Court passed the order in the favor of the SSC. Now department went to Supreme Court. Till the time case is pending at Supreme Court now, the lower assessing officers are not even considering the High Court's order. They are not even considering the High Court's order. See, important point here is whenever High Court passes an order, unless it is overruled, unless it is changed by Supreme Court, this has to be followed. Assessing officers cannot say that this thing is pending at Supreme Court, so we will not follow the High Court. Unless it is overruled by the Supreme Court, now till that time High Court's order shall prevail. It is not like that once order has been passed, it has no value because we are fighting at Supreme Court. It is not the case. It has to be followed unless it is overruled by Supreme Court. Now, appeal by department, small provisions, but yet most people forget about this. See, to avoid assessee from being caught in appeals in very, very small cases, now, department CBDT has fixed up a monetary limit. If your tax effect is up to 60 lakh rupees now, then department will never move to ITAT. If it loses at CIT appeals, it will never move on to ITAT. If your tax effect is up to 2 crore rupees, then department will never go to High Court. If your tax effect is up to 5 crore, department will never go to Supreme Court. These are the monetary limits up to which department will not move to these authorities. If your tax limit is more than this, then only department will move on to higher authorities. Very basic fundamental point it is. Remember, if as department doesn't file appeal in my case, it can file appeal in others cases as if department doesn't file appeal in my case, it can file appeal in my case only in upcoming years. So this is not an excuse so that I can use it in other cases. Monetary limit is to be checked on every cases. This cannot be used as an excuse by somebody else. I have a question. For example, tax payable is 55 lakh rupees. Interest is 6 lakh rupees. Penalty is 2 lakh rupees. All in all turns out to be 63 lakh rupees. Now, can department move to ITAT because of this tax effect? Can department move to ITAT because of 63 lakh? Right answer is no. Right answer is absolutely no. Whenever department wants to go to ITAT, now department has to check the pure tax effect. Excluding interest, excluding penalty, excluding any kind of fees, department has to check that and then only it can go to ITAT. Perfect, sir. Perfect. Section 263, revisional order. Now listen. For example, assessing officer issued an order to me, and I felt it's not good. I said, "Yo, sir, what is this? Our relation is very long. Departments would come and go, governments would come and go, but our relation is very constant." I said, "Assessing officer, please pass order in my favor." Assessing officer said, "No, no, no, no." I said again, "Yo, sir, please pass order in my favor." Yo, sir said, "No, no, no, no." I gave a box of green paper, and department passed order in my favor. Wow. Me and assessing officer are passing orders in each other's favor. The assessing officer received some green paper. I received order which is in my favor, but loss is of government. In that case, sir, what will happen? See, if these two people are actually corrupt. Okay, in this case, what happens now? There is a concept of a revision. If CIT sees this thing, if commissioner, principal commissioner, chief commissioner, principal chief commissioner just sees that AO has passed a erroneous order, a wrong order, or transfer pricing officer has passed an erroneous order or prejudicial order to the interest of the revenue. That means interest of revenue is hurt. Interest of revenue means department is at loss. Taxes are lost. In that case, CIT, PCIT can pass a revisional order as they may deem fit. If they deem fit, they can pass a revisional order if they deem fit. What is an erroneous order? Lawmaker says that if any of the order is passed without doing inquiries, it is erroneous. If any of the exemption is given, deduction is given without doing inquiries. For example, you are into startup. You have claimed 80 IBA, but you don't 80 IAC, and you don't have even registration under startup. For example, order was made as per not as per CBT instructions, or order was not as per High Court, Supreme Court guidelines. In that case, it is considered erroneous. What happens if order is considered erroneous? See, first of all, commissioner will check out what order has been passed by the AO. If commissioner thinks that there has to be some changes made, he will request the changes. If commissioner thinks that income has to be enhanced, reduced, he will inform this to AO. If commissioner thinks that whatever order has been passed by the AO has to be freshly passed, as commissioner will ask for a fresh assessment. Okay? Reasonable opportunity of being heard will be given to assessee. Basic line it is. Now we have time limit to pass the order. See, time limit to pass. See, commissioner can pass order within 2 years from the end of the year in which AO passed the order. I will come on to this timeline later on. See, if assessee's matter has been decided in appeal, then such matter cannot be revised. Whereas, if assessee matter has been divided appeal, such matter cannot be revised. Whereas other matter can be revised. We shall come on this point as well. First of all, two or three pointers in this revision. Very important, tricky area. I mean, this was not expected from ICI to ask, but they asked once. Okay, let me tell you what they asked. AO passed an order on, say, 15th March 2024. Department can do revision up to when? So 2 years from the end of the financial year of the AO. So end of the financial year is 31st March 2024. Plus 2 years, that means department can initiate recovery or revision up to 31st March 2026. This is the last date up to which department can start revision. Commissioner rightly started, CIT rightly started revision on 26th March. He ordered that revision will be done. Orders are erroneous. There has to be revision being done. Commissioner ordered that thing. He said to AO, but AO communicated this to assessee on 5th May 2026 after the time limit has been passed. Now see, CIT initiated revision well on time, but assessee received the intimation after time. Whether assessee is correct or department is correct. In this case, now, for the first time, department is correct. Because for the purpose of revision, it is issuance of notice that matters the most. Receipt of notice is not. Service of notice is not important. Just issue of notice is important. If notice is issued well on time, it is absolutely fine. It is absolutely fine. No questions, no strings attached. It is very well, very correct revision. Perfect, sir. Second thing, if any case is already pending, if any assessment is pending now, then revision cannot be done. Or any of the assessment is pending, they can department to another assessment. Right answer is no. In the same case, for example, commissioner felt that acha 10AA should be disallowed in my case. So it initiated revision under 263. While doing the processes now, department saw, oh, not just 10AA, 35 AD shall also be disallowed in some cases. So he issued a fresh notice to 263. Right answer is department cannot issue this fresh notice as well. Department cannot issue the fresh notice as well. Once notice has been issued under 263, everything shall be mentioned in that only. Multiple notices should not be allowed to issue. Okay. Now we have rectification of the other order, section 264. 263 talked about if mistake is on account of department, loss is of department. 264 is about loss to assessee. If there is a loss to assessee, if there is loss to assessee, then assessee can request a department to revise their order, revise its order. Assessee can even request a department to revise its order. Now, point here is, can assessee go to appeals as well? Right answer is assessee can either file an appeal as well, or he can go for revision. He has an option. He can go to appeal, he can go to revision. But why in the God's name assessee will come to this revision? He will not go to appeal. Reason is very simple. If he has to go to appeal, time limit is 30 days. But if he has to go for revision, time limit is 1 year. So application shall be made within 1 year. That is the advantage why he would go for this revision. In this case, what would happen? So as soon as he applies to commissioner, the commissioner will check out if order has been passed. It is prejudicial to the interest of the assessee. In that case, department will correct that order. Remember, assessee can file 264 only if there is no appeal going on. If time limit to file appeal is pending now, he shall waive off his rights in appeal. He shall waive off his rights of appeal in writing. Then only his section 264 application would be admitted. In no way he can go for both appeal and revision. In no way he can go for both the things. If Himself wants to, if he himself files the application within 1 year from the end of the year of application, department is going to do the revision. So you cannot file appeal against this. Now let me tell one important concept. This is important. Now this is very important. Doctrine of partial merger and doctrine of total merger. Very important concept. For example, this is Rahul. I have P&L where I have sales of 100 crore. I have direct expenses of 60 crore. Net profit of 40 crore. I am eligible for 10 AA, 100%, 40 crore, and my PGBP is 0. My PGBP is 0. As soon as assessing officer saw this, he passed an order disallowing 20 crore, adding 20 crore because he thinks that only 50% should be allowed to me. I immediately went to Sita, and Sita removed the additions, removed additions. That means at CIT appeal, it is finalized that my 10 AA would be 40 crore only. At CIT appeals, it is finalized that whatever claimed I have done is correct. At CIT appeals, it is finalized. Seems fair. At CIT appeals, it is finalized that whatever claims I am doing is correct. Now there was somebody looking at this depot. There was somebody looking. He is called commissioner. He sees. Oh, 40 crore of 10 AA, not allowed, not allowed. Can he revise this case? Can he revise the case which has already been decided in appeal? Can he revise a case which is already revised in appeal? Right answer is no, he cannot revise. He cannot do any revision which has already been decided in appeal. He cannot do that. He can. But sir, if he finds out that out of this direct expense of 60 crore rupees, 20 crore, yeah, 15 crore is to be disallowed, can he initiate revision under section 263 for this 15 crore rupees? Right answer is yes, he can do this. That is called doctrine of partial merger. What does that mean? From department's point of view now, there are multiple matters in a case. Multiple matters can be in a case. If one matter has been decided in the appeal, such matter cannot be revised. But if other matters are there in the appeal, other matters can be revised. Any other matter can be revised in the return. Other matters are revised because every matter is a different, and that is why partial merger concept applies. But here is a catch. Sir, what if assessee himself wants to say that I forgot some 10 crores of deduction. I forgot 10 crores deduction. Can I get 10 crores deduction under 264 revision? See, this case has been decided in appeal. 10 AA has been decided in appeal. But assessee wants some other deductions which have not been decided in appeal. Assessee wants some other deductions. Can he extra claim 10 crore rupees by filing 264? Right answer is no. From SSC's viewpoint, entire return is a single matter. If anything has been decided in appeal now, then no revision under section 264 can be done. No revision under section 264 can be done at all. What did I say? What did I say? If department wants to revise, then every matter is a different matter. Matter decided in appeal cannot be revised, but other matters can be revised. But sir, if assessee wants to get a revision under 264 now, if any of the matter has been decided in appeal, no other matter can be revised. No other matter can be revised. This is the hypocrisy. For department, anything can be revised. If they find that out of the 60 crore, 15 crore is to be disallowed, they can revise it. But if assessee says that out of the 60 crore, 10 crore I forgot, I want to claim 10 crore more and want to claim 264, I cannot get. And even whatever the order passed under 264 is, cannot be appealed as well. You cannot appeal as well. Wow, sir. Wow. We had never understood this point, this like this before. And you have not even subscribed to the channel. You'll not believe this. Yesterday, I saw 60% of the viewers have not subscribed to the channel. 60% of the viewers would just come and do not subscribe. Section 158A, what this says. Section 158, what it says? It says the simple thing. It says a simple thing. For example, understand this, what it says. For example, my case, I have won the case at ITAT and I am fighting at High Court, or I am fighting at Supreme Court. For my case only, in some other year, department has again gone to ITAT. Department is already lost at ITAT. I am fighting at High Court in old previous year, but for a fresh year, again department has gone to ITAT. Don't you think that it is wastage of resources? I am fighting on the same case at Supreme Court, whereas department is willing to fight again at ITAT. It will be wastage of resources now. So lawmaker says I can request a department. I can request a department to wait till the decision of High Court and Supreme Court, so that once order is passed in my favor or against my favor, till the time they can hold. Department may accept and or reject that application. In Form 8, it is done, application is done. Department may accept that or reject as well. This last point you can skip out. Come on to this DRC. Do we have question answers from this? Let's find out. Do we have any good question from this chapter? Anybody having any doubt? See, this is a stay of demand only. Up to 180 days, it is unconditional. More than 180 days, up to 365 days, it is allowed if delay is not because of SSC. After 365 days, demand stay shall continue if delay is not on account of SSC. Then we have, sir, commissioner issued one notice under 263. Again, he wanted to issue another notice. Can he issue? Right answer is no. And at last, sir, that Supreme Court remarks that I told you, some same things. If Supreme Court gives any remarks, these are my binding on the SSC. Dispute Resolution Committee. Sir, did you understand the appeals? Did you understand the appeals? Was it worth studying or worth leaving? Just tell me this thing. Was it worth studying or worth leaving? I mean, after watching this video, even if you don't read it of your own and just watch this video and appear in exam, I do think it is worth watching the video and just appearing in exam. And yesterday, you know what? I saw my yesterday's video and I was able to grasp things at 1.75 as well. I don't know, you might be able to grasp things at 2x as well, but at 1.75, it was very convenient of me to hear myself. Maybe that is the reason. Maybe that is the reason why, because I know what I am speaking. But as a student, at what speed you are comfortable, please let me know. Because a day before exam, this 50 minutes video, even if you watch at 1.75, maybe you might complete it in just 30 minutes. And 30 minutes is worth giving. Believe me, 30 minutes is worth giving to this chapter. If a question is asked for 4 marks, it is worth doing now. It is literally worth doing. So two more important things. Okay, two more important things. Premise has to be set. Okay. First thing, always have a glass of water when you have this long lectures now. Always have a sip, 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 so that you are always hydrated. There is too much warm temperature, heat waves going on. You should be habitual of drinking a lot of water, because in the exam, your dehydration might cause an issue. Second thing, if you are watching this video, do subscribe to the channel and like the video. Again, left in my advertisement. Done, sir. See, Dispute Resolution Committee. Dispute Resolution Committee. Government may constitute DRCs. Now, what will be the purpose? See, DRC, I am 100% sure that you must have not done. Or you, even if you have done, you must have forgot. Just listen to this in 10 minutes. We will be done with entire chapter. Now, government shall constitute one or more DRCs. Whatever it wants, it can constitute. To resolve the disputes of specified person who opt for dispute resolution in respect of the specified order. So if you are a specified order and you are a specified person, you can go to DRC. Specified person and specified order can go to DRC. Okay. Who is a specified order? Listen very carefully. Any order in which income variations are up to 10 lakh rupees. What does that mean? I filed return with 30 lakh of income and my assessed income is 38 lakh rupees. Sir, variations is just 8 lakh rupees. If variations is up to 10 lakh rupees now, then we can go to DRC. Income order is not based on search, order is not based on survey, order is not based on requisition, and order is not based on any DTAA order. Apart from that, sir, apart from that, if your total income declared should be up to 50 lakh rupees. Total income as per ROI should not be more than 50 lakh rupees. So three things for order to be specified order. Variations not more than 10 lakh, income up to 50 lakh rupees, no search order, no requisition, no survey, no DTAA order, then you are a valid order. You are a valid order. Sir, what orders? Actually, if we precisely say what orders are appealable at DRC, intimation order, rectification order, any assessment order, any demand order, any draft order of DRP as well is appealable to DRC. Sir, who is a specified person? Who is a specified person? Listen. See, ideally, every person is a specified person. Everybody can go to DRP, but there are 5 people who cannot go to DRP. 5 people cannot go to DRP. First of all, is any person against whom detention under COFEPSA Act has been made. So you have been detained under COFEPSA. COFEPSA is Conservation of Foreign Exchange and Manipulation of Foreign Exchange and Prevention of Smuggling Act. This is COFEPSA Act. You have been detained under COFEPSA. You cannot go to DRC. Second thing, under these 6 acts, you have been prosecuted plus you have been convicted. You have been prosecuted and you have been convicted. What are those 6 acts? Indian Penal Code, Unlawful Activities Prevention Act, Narcotics, Drugs and Psychotropic Act, Benami Act, Money Laundering Act, and Corruption Act. Under these 6 acts, you have been prosecuted and you are a convicted as well. Okay? The department has proved that you are convicted. In that case, you cannot go to DRC. If you have been prosecuted under Income Tax Act as well, if prosecution proceedings have been initiated under Income Tax Act as well, you cannot go to DRC. If you are a Section 3 notified person, Section 3 notified person of Special Courts Act, you cannot go to DRC. Or if black money proceedings have been initiated for a specific assessment year, then you cannot go to DRC for that relevant assessment year. Sir, wherever there are PCCITs, at that place there would be DRC. Who will be the members of DRC? See, there would be 3 members. At least 2 of them would be serving IRS officers and 1 of them would be CIT officer or above. Sir, they shall be appointed for 3 years of period. These shall be decided by CBDT. And at last, sir, removal of these officers would be done by central government. Reasons has to be recorded in writing. Reasonable opportunity of being heard to be given before removal, and a majority will decide, because three people are there, so majority will decide what to do. Now, how process of DRC goes on? Understand? Whenever I want to go to DRC, I have to file order. I have to file the application within 30 days. Within 1 month from the receipt of the order. As soon as I receive the order, within 1 month I have to go to DRC. In Form 34 BC I go, and 1,000 rupees fees I pay for DRC. Things are fair. Things seem fair. Sir, as soon as I file the application, this application is screened. Once this application is screened, it shall be either accepted or it shall be either rejected. It shall be accepted or it shall be rejected. Seems fair. Sir, if they accept it, they shall communicate to us. If they want to reject it, they shall give us the opportunity of being heard. If they accept, they shall communicate. If they reject, then they shall give us opportunity of being heard. By serving a show cause notice, sir, we have to respond. If we satisfactorily respond, then proceedings will drop. Proceedings will continue, they shall accept. If we do not give satisfactory response, now they will reject it. Whatever they do, acceptance or rejection, they shall communicate to us. As soon as they accept our application, we have to withdraw appeal from CIT. Appeal and DRC cannot go together. If we have already lodged appeal, we have to take that appeal off and submit the proof of withdrawal to DRC within 30 days. How DRC will function? See, DRC will call for information from IT authority, SSC, and assessing officer. From wherever DRC wants information, it can call, and the other person has to submit the information within stipulated time as well. What DRC may decide, listen up. For example, SSC, income was increased by, say, 5 lakh. Penalty was charged 2 lakh. And there was a jail against SSC 1 year. What department can do, what DRC can do? So DRC, first thing that DRC can do, income increment 0 Income removal, income additions can be removed. Penalty zero, jail zero. First thing, everything zero. That is also possible. Second option, no, additions shall remain, but penalty shall become zero, jail shall become zero. That shall also can be done. Third thing, sir, income shall also be increased, penalty shall also be increased, jail shall also be increased. So all the three things remain intact. This is also what DRC can do. This is also DRC can do. Okay. Whatever it does now within 6 months, it has to do. Within 6 months from the application, DRC has to do these things. Whatever order it passes now, it shall serve a copy to AO and SSC as well, and AO shall pass AO shall modify its order accordingly. Order of DRC is not eligible for appeal at CIT appeals or ITAT. I have told you now, you cannot argue DRC's order at ITAT as well, nor you can go to DRP. Sir, DRC will only give you immunity to prosecution if you have paid the taxes. They will only waive off your penalty if you have paid the taxes. If at any point of time you do not cooperate, you fail to submit any evidences, you concealed any material information, or you fail to demand, if you fail to pay the demand, in that case, DRC will terminate the resolution. I mean, DRC will terminate the proceedings. Powers of DRC. So DRC can waive off any penalty imposable, grant immunity if assessee has paid taxes and cooperated to DRC in full. We have one question from DRC. Let's do it. Let's understand as to how questions are being asked. Question number 85 of Super 150. Mr. Vijay furnished a return of income for assessment year 25-26 declaring the total income of 28 lakh rupees. He received an assessment order under 143.3 and on 26/11/2026, enhancing the total income by 5 lakh rupees. So whether increment is 5 lakh rupees, it is valid. 5 lakh increment is valid. 5 lakh increment is within the limit. He is aggrieved by the said order and wants to go to DRC. Can he go? See, declared income is up to 50 lakh rupees, increment is up to 10 lakh rupees. That means it is a valid order. Only thing matters the most, it should not be a search case, it should not be a requisition case. These things should not be there. He informs you that no order of detention has been made, no prosecution proceedings have been instituted against him. Okay, perfect. But only penalty is levied, so penalty does not imply prosecution. That's fine. Can Vijay file to apply to DRC? Yes, he can file. If yes, what is the time limit? 1 month. He also wants to know whether if he is aggrieved by the order, can he file any appeal? No appeal is allowed. Would your answer be different if assessment order is based on DT information? If assessment order is passed based on DT information, in that case, sir, appeal. In that case, you are not eligible to go to DRC. Easy peasy. Wow, sir, 1 hour and two chapters done. 1 hour and 2 chapters done. Don't you think it was worth doing? I mean, I know you always intend to do these type of small chapters, but you always end up missing them out because you are not even left with 10 minutes at last. Clear? If it is clear, just mention the word clear. Moving further, tax planning, avoidance, and GAR. First of all, we shall understand the entire chapter. Then I will tell you, uh, a Brahmos missile as to how do we solve that question. I will tell you a Brahmos missile as to how do we solve the question and which will always give you right answers. Always we give you right answers. I will give you a Brahmos. You will understand that. 4 terms are in front of us: tax planning, avoidance, and GAR. First of all, what is tax planning? See, if you have any kind of legitimate deductions, ATC, ATD, any kind of legitimate deductions, and you use them to reduce your tax liability, it is planning. Second thing, if you have a exemption regimes, for example, one if you want to claim some exemptions, 54F, 54EC, if you are validly claiming the exemption, then it is again planning. Third thing, if you have any kind of regime selection, for example, BAA, BAB, BAC, which regime you are opting and it reduces your tax liability, again it is planning. Sometimes people do tax harvesting as well. For example, you have unrealized losses and you realize them, set it off against your capital gain and buy the shares again. This is harvesting, that is also allowed. Sometimes what happens is you have an option to buy asset, or if you rent out that asset, you have an option to take that asset on lease or to actually buy. If you take the asset on lease, you will get deduction of lease rental. If you buy the asset, you can claim depreciation. You have a call. So these are plannings, which is apparent that it is allowed by law. You will see and understand that planning is absolutely allowed by law, and there is no such impact of planning. Department promotes planning. Second thing is management. Management simply implies timely compliance of law. What does that mean? See, if our TDS is there, we are paying TDS on time. If we have advanced tax, paying advanced tax on time, ROI, filing ROI on time, so that interest is saved, late fees is saved. We get 15 GH from the different buyers so that we don't, from different lenders so that we don't have to deduct a TDS. Apart from that, sometimes what we do is we furnish 15 GS to other people so that our compliance is done. We remit EPF, ESIC well on time so our disallowance is not attracted. So it is tax management, timely compliance of law. Third thing is evasion. What is this evasion? See, we forcefully transfer our income. We have two units. One is 10 double and the other one is normal unit. We are forcefully now not even maintaining books of accounts, our normal unit. We are just showing every income in 10 double A. Illegally, we are showing. Not transferring legally, illegally, we are showing. Illegal means are evasion. For example, that you do in your office. Expenditure of 20,000 rupees in cash, breaking them into 2 different days. Taking off the sales, whatever done in cash, so that your turnover, so that your tax is reduced. Are you getting this point? Illegal means that is very apparent that what you are doing is illegal. If you are doing any illegal thing stuff, that is evasion. Now department has multiple ways to correct the illegal means. Department has imposed multiple penalties to correct the illegal means. They have done that. Now in this process, now there is a new term device, that is tax avoidance. What is tax avoidance? Tax avoidance, if you will see now, you will see that you are legally following the law. You are legally following the law. You are not illegal. You are legally following the law, but you are preventing so much of taxes which lawmakers do not intend to give. You are getting so many advantages that lawmakers are not willing to give you that advantages. Why you are getting that advantage? Because you have tried to find out the drafting errors in law. You have tried to find out the drafting lacunae in law to take up to your advantage and to take, I mean, to use it in your benefit. So this is called tax avoidance, where you are legally correct, but you end up saving too much of taxes. Fine, sir, that seems fine. Now, how government would like to control the tax avoidance? Evasion is easy, penalties, simple, easy. Evasion is very simple. But what about this, sir, tax avoidance? How do government correct the tax avoidance? How do government cover the tax avoidance? Sir, if government wants to do cover the, I mean, if government wants to prevent the tax avoidance, it should come up with rules. Government should identify, acha, this transaction leads to tax avoidance. We will amend Income Tax Act and save it. Acha, this also transaction leads to tax avoidance. We will amend the Income Tax Act and make new laws. Government has done time to time. Transfer pricing came because of this tax avoidance only. Transfer pricing is nothing but specific rules. It is a specific rules which is meant for anti-avoidance. Because earlier, what people used to do, people used to transfer their income at a different price. They used to save the taxes by because of transfer pricing. So transfer pricing came as a specific rule to avoid tax. It is SAR, specific rules. Government came up with 94B, limitation of interest. 30% of EBITDA shall be only allowed. Government came up with domestic transfer pricing. If any entity is transferring profit to 10 double A unit, legally correct, but illegal. Legally correct, but tax benefit involved, unnecessary tax benefit involved. So we have specific rules, specific domestic transfer pricing rules. Again, SAR. Multiple things government did. For example, if you are making payment to a related party means your mother, father, brother, sister, LALD, extra payment. So you are reducing your income and increasing their income. Illegal means government is also a provision, section 40A2. If you try to take out your money from the business in the form of deemed dividend, government has come up with specific rules as well. If you try to do indirect transfer, government has come up with that rules as well. So government from time to time has tried to come up with new rules to cope up with tax avoidance, but the fact is specific rules are insufficient. Every year government would come, every year there are 150 crore people who will try to find out the lacunas in the law, and they will be end up they will find out sooner or later. They will find out new ways to prevent or to new ways to avoid taxes. They will find out. Now, how to prevent them from tax avoidance, government came up with a general rules. Government says, see, now we don't understand anything. If we find out that you are doing this transaction and you fall within the general rules, we will disregard the transaction, we will take away your tax benefit. These general rules are nothing but GAR, general anti-avoidance rule. So to avoid tax avoidance, government has come up with two things. To avoid tax avoidance, government has come up with two things. First thing, specific rules, every year it comes up with, but specific rules are not sufficient now. So government has to come up with general rules, so that if somebody falls within the criteria of general rules, now government will disregard the transaction and government will take away the benefit. This is the general anti-avoidance rules. Now, government will not always invoke the general rules. Provision says if benefit in India is up to 3 crore rupees now, then general rules will not be invoked. If benefit in India is up to 3 crore rupees, then general rules will not be invoked. If transaction has been entered before 1st April 2017, then again general rules will not be invoked. If FIIs invest in India with prior approval and they do not take the benefit of the general rules now, then too GAR would not be invoked. General rules will not be invoked. Instead of saying GAR, I am saying general rules. They both mean the same. So when general rules will be invoked, lawmaker says if you do 5 things now plus tax benefit, then general rules will be invoked. Then GAR would be invoked. What are those 5 things if you do? Say if you do a transaction which is not at arm's length price, then GAR would be invoked. Transaction you are not doing at arm's length price, but you have tax benefit, then GAR is invoked. I will tell you what it means. I will tell you later on. If transaction results in misuse of the provisions of the act, plus you get the tax benefit now, then GAR will be invoked. General rules would be invoked. Or if you do a transaction which is not done bona fide basis, then to general rules will be invoked. If your transaction lacks commercial substance or deems to lack commercial substance, in that case, general rules will be invoked. So there are 5 instances. If you do these things plus you have tax benefit now, then general rules will be invoked. Prince Bantal sir says, Sir, saw your video few days back. Since then, theory chapters aapse kar raha hu. Can I say I love you, Prince? Can I say? It means a lot to me. ठीक है. Chalo. What did I say? General rules will be invoked only if you do 5 things. Plus you have tax benefit. General rules will be only invoked if you do 5 things and you have tax benefit. Then only general rules are invoked. Now what are these 5 things? Let us understand one by one. Transaction not done at arm's length price. Very carefully listen. Sir, if we do not do transaction at arm's length price, then then in that case, GAR, how GAR is invoked, we have transfer pricing rules now for that. And it's not about that. Let me tell you. See, this is Rahul and this is Rachel. Okay. I sold goods to Rachel of 100 crore rupees. Market value is 130 crore. But sir, if Rahul holds 26% or more in Rachel, then in that case, if Rahul holds more than equal to 26% in Rachel, then Rahul and Rachel are associate enterprises. And we have transfer pricing rules applicable. Since we have specific anti-avoidance rules, so GAR would not be invoked. General rules would not apply. But sir, what if we do not hold 26%? We just hold 25%. We just hold 25%. What about that? What about that? Sir, if she is not my associate and then too I am transacting at a price which is not arm's length price, then what would do? Ultimately, I am taking benefit. Tax benefit is involved. In that case, what happens? Sir, we will have general anti-avoidance rule because tax benefit is happening. Tax benefit is happening across both of us. Tax benefit is happening. And since tax benefit is having and transfer pricing could not be applied, therefore car would apply. सर श्योर सर बाकी आपकी थ्योरी में एग्जामिशन में हेल्प करेगी होपफुली फॉर श्योर इट विल हेल्प प्रिंस इट फॉर श्योर इट विल हेल्प I hope you understood. If transaction is done with associate enterprises, now then we have specific rules, so GAR will not apply. But if transaction is otherwise, okay, transaction is otherwise, that means we do not have any associate enterprise involved. In that case, the GAR will invoke. Same example that we took is written here. We try to misuse the provisions of the Income Tax Act. Now listen, very carefully, listen, very logically, very logically. There is a company called Singtel. Company is a foreign company. Okay? Foreign company has assets in India 80 crore and assets in Singapore 70 crore. If you check out the total assets now, 150 crore. Out of that, Indian assets are 80 crore. Can I say less than, can I say 50, more than 50% of assets are located in India? In that case, this company would become Indian company. This company would become resident because poem would lie in India. Yes, yes, yes. Are, oi, oi. Wake up, wake up, wake up. Focus, focus. If there is a foreign company who has 150 crore of assets, out of that 80 crore are Indian assets. Can I say this company would become resident because it fails ABI test? Sorry, it fails ABI test. This company would become resident. Now, what this company did, just listen to this. What company did? Company revalued its Singapore assets. It revalued its Singapore assets. So, at what value they are revaluing? So, revalued at 100 crore. Now what happens? The total assets are 180 crore and Indian assets are 80 crore. Now if you see now, this company becomes non-resident. And at what value assets are taken at Singapore, it is not mentioned. Indian assets are given that we shall take at depreciated value, but at Singapore we are not given now. It is just mentioned that book value we have to take. Whether we have to remove the revaluation or not, we don't know. So just see, just by revaluing it, earlier it was resident, now it has become non-resident. How much taxes this company has saved? How much taxes this company saved? Sir, this is nothing but misusing the provisions of the act. This is what it is. It is misusing the provisions of the act. Act is silent as to use book value or fair market value. So you are using fair market value for your benefit. But in Indian assets, you are using book value. In that case, it is a misuse now. If it is a misuse, so what shall we do? Sir, we shall invoke GAR in this case. If tax benefit is involved, then we shall invoke GAR. Third thing, any transaction entered which is not bona fide. What is not bona fide? Not normally entered. For example, Rahul makes any payment. Rahul makes any payment to Rachel. 20% tax liability would be attracted. But what I did? I transferred my money to Mauritius. Their tax rate is just 2%. At 2% TDS rate, I deducted and I paid to Mauritius. From Mauritius, I transferred this money to Egypt, where tax rate is just 4%. And from Egypt, I transferred to Panama, where Panama 2% rate, and from Panama to USA 1% rate. So overall, at 10% only, I transferred this money. Instead of directly transferring money to Rachel at 20%, I transferred this money in 4 different countries and took a tax arbitrage. I did treaty shopping also. Lawmaker says any transaction entered in a manner which is not ordinarily entered. This is not ordinarily entered transaction. It is an abnormal transaction. It is not a bona fide transaction. In this case, this transaction would invoke God. This transaction would invoke God. Sir, perfect, perfect. Transaction lacking commercial substance. What does that mean? Location of an asset, place of the residence is to obtain the tax benefit. Location of the asset, place of the residence is to obtain the tax benefit. What does that mean? For example, yesterday we took an example. For example, we have Kishore. Kishore one day was making sambar. Sambar was he was making, and he poured some harpic in that sambar. And why did he pour that? We really don't know. But he poured some harpic in the sambar, and he poured some sugar in that. And for no reason there happened a blast. And that blast, the droplets, wherever that blast droplets felt now, hair started to grow in that place. Kishore made a very great discovery, and that discovery was registered in Panama Islands. Oh wow, sir, Panama Islands. Now here, location of the company is only to take the tax benefit. Can GAR be invoked? Sir, we do not have any provisions of Income Tax Act. GAR will be invoked. GAR will be invoked, sir. GAR will be invoked in this case. Location of the asset is only to take the tax benefit. Therefore, GAR would be invoked in this case. Government would assume that this is Indian company only. This is the Indian company only. Oh my dear God. Then what's the next point? Arrangement does not significantly affects the business risk but attributes tax benefit. What does this mean? Let me tell this as well. For example, this is Rahul. Rahul has 10 crore rupees. Fingers crossed. Rahul has 10 crore. Rahul wants 10 crore. I want a 10 crore. Okay. Rahul gave this money to Rachel at the rate of 10%. Rachel gave this money to Phoebe at the rate of 10%. Phoebe gave this money to Chandler, 10%. Chandler stays in Panama, and Chandler has given the same money to Rahul at the rate of 6%. Now just think of it. I had a 10 crore, and again, after round and round of money, there is no change in cash flow. I again have 10 crore rupees. I had 10 crore and I again have 10 crore rupees. Did I do some mistake? Chandler gave this money to me. Chandler gave to this money to me at 14%. Let us assume 14%. Okay, Chandler gave this money to me in 14%. Now I am earning from Rachel at the rate of 10%. But on the same money, I am paying 14%. Just understand this. I have not received any money in my pocket. My money circulated back to me. But directly, indirectly, my money has been shifted to that country and I have to take deduction. And this is way beyond transfer pricing. This is way beyond 94B because 94B is applicable to one layer of transaction. I am making a very big layer of transaction where there is no change in cash flow, but it only attributes to tax benefit. I just have tax benefit. I just have benefit of 4% interest expense. I have tax benefit on that component. So any transaction which not significantly affects the business risk cash flow but attributes to the tax benefit. Then we have round tripping transactions. A round tripping transaction is same as if Rahul transacts with Rachel in USA directly 20%, but via Mauritius, Panama, Mexico, I can just transact at 8%. So I round trip that transaction. Transaction involving accommodating party. Let me take an example for this as well. For example, this is Rahul and this is Rachel. Rachel lives in a country with which India has a DTAA. And India says that if Rachel holds up to 10%, then tax will be charged in that country. But if it holds more than 10%, then tax would be charged in India. This is what the DTAA says. So Rachel actually holds now 15%, but she has created two subsidiaries, Rachel 1 and Rachel 2, and both of them hold 7.5%. So that amount is taxed in that country. Rachel holds via two companies. So these two companies are nothing but accommodating parties. These two companies are accommodating parties. These two companies do not have their own commercial substance. In that case, whatever the income of the see, we shall club them and we shall find out. Acha, if she holds more than 15%, more than 10% now, then tax would be charged in India because the subsidiaries do not have any commercial substance of its own. Okay? Any impact which has cross or cancelling effect, this will also be considered as deemed to lack commercial substance. What did I say? Listen very carefully. Five things. First of all is not at ALP if transaction is not done at arm's length ties. Second thing, misuse provisions. Third thing, not bona fide. Then fourth oblique fifth, deemed to lack commercial substance. Commercial substance. or lack commercial substance. How would you know that a transaction lacks commercial substance? There are 5 instances. Location to take tax benefit, no change in cash flow, round tripping, accommodating party, or cancelling effect. If any of the 5 things you see around, plus there is tax benefit involved, now you can simply reasonably say that GAR is applicable. Simply you can say that GAR is applicable. While looking at the transaction, it lacks commercial substance or not. If period is given, time of arrangement is given, payments of taxes is given, facts that exit route is provided, it is irrelevant. It is irrelevant for deciding whether the transaction lacks commercial substance or not. Perfect, sir. Equity may be treated as debt. Equity may be treated as debt. Department can think, okay, if you have invested money in somebody else, department might treat it as debt. If debt is given, department might treat it as equity as well. Any capital receipts can be treated as revenue receipts. Any revenue receipts can be treated as capital receipts. Any expenditure deduction, relief, rebate can be recharacterized. Expenditure can be claimed as relief, relief can be claimed as deduction. Anything can be recharacterized. What if, sir, GAR is implied? GAR is applied. Whatever the tax benefit you have got, that will be that will be taken off. You have to pay taxes on that. First thing, disregarding of all the transaction, whatever the transaction you have done, that shall be disregarded. Treating the impermissible transaction as if it were never carried out. Any impermissible transaction you have done, department will assume that you have not even done that. You have not even done that, that shall be assumed. And after that, sir, disregarding the accommodating party, whatever accommodating party or connected party you have now, they shall treat it as one only. They shall not treat it separate, they shall treat it as one only. Simple thing. Simple. GAR was simple. If 5 of the things is applicable and tax benefit is there, department treats it as impermissible avoidance agreement, and once they treat it as impermissible avoidance agreement, general rules are applied and tax benefit is taken off. GAR always overrides income tax and DTAA as well. This is the basics of the GAR. This is the entire chapter of GAR. Let me tell you a shortcut trick as to how do we solve the questions. There is a shortcut trick as to how do we solve the questions. Let me tell you. I have uploaded a Bhula series video. It's in Hindi, but some subtitles are given in English, so you can even refer that. Again, I am making a revision of GAR for you all. How to solve question and answers. Step 1. Always understand step number 1 is identifying whether we are doing any planning or evasion. Whether we are doing planning or evasion. First step always involves planning or evasion. If it involves deductions, if it involves chapter 6A deductions, 10AA deductions, if it involves exemptions, if it involves regime selection, if it involves harvesting, or if it involves buying or renting, these are called planning. If not planning, just check out the evasion, whether the bogus expenses debited, whether reducing the income in contravention, whether shifting of income unlawfully, these are evasions. If there is planning and or evasion, you have to rightly answer is there is no, no scope of mistake. If planning is happening and you write it evasion, no marks. If evasion is happening, you write it avoidance, no marks. Clear cut right answer is expected if planning and evasion is asked. But sir, if there is no planning, there is no evasion, no management, then it might be possible that tax avoidance is happening. Whenever tax avoidance is happening, you have to go to step 2. You have to check, do we have specific rules for that tax avoidance? Whether transfer pricing provisions are applicable to that case, whether domestic transfer pricing provisions are applicable to that case, whether deemed dividend concept, 94B concept, related party payments or indirect transfer are applicable. If these are applicable now, then tax avoidance is taken care of by specific rules. GAR would not apply. Specific rules shall overrule. And whenever there are specific rules applying in your case, most oftenly you will see domestic transfer pricing. So if domestic transfer pricing rule or specific rules are applicable, you have to rightly answer which specific rules are applicable. If we have specific rules and you mention that GAR would apply, 0 marks, clear cut for that. So step number 3, sir, you identified it's not planning, it's not evasion, it's not we don't have specific rules, then GAR might be applicable. Third step, you have to check whether the tax benefit in India is up to 3 crore rupees. Then transaction initiated before 1st April 2017, GAR not applicable. FIIs investing in India with prior approval of DTAA, no GAR shall apply. In this case, the GAR shall not apply. In these three cases, GAR shall not apply. Else GAR will apply. And when GAR will apply, now we'll have four reasons. Four reasons: transaction not done at arm's length price, misuse of provision, not bona fide, transaction lacking commercial substance. Why transaction lacking commercial substance? Because place of transaction is as such, because accommodating party is involved, because round tripping, because there is no change in cash flow, or because there is offsetting transaction. In these cases, now if tax benefit is involved, then GAR shall apply. Once GAR is applied, transaction is disregarded, accommodating party, connected parties considered as one, and tax benefit is denied to you. Sir, step number one has to be rightly answered. Planning or revision. Step number two, if SAR is applicable rightly, you have to rightly answer. Third step, if GAR is not applicable because of limit, because of time period, then you have to rightly answer. But sir, if step number four, why GAR is applicable? Out of this, if there is misuse versus there is lacking commercial substance, either udhar is okay. Some here and there is okay in this fourth step. A fourth step you are not sure now, it's okay. Examiner gives you marks, but in first three step, if you are wrong now, no marks will be awarded. For sure, no marks will be awarded. Follow these as four steps now, and you will see your 4 marks secured in GAR. Akash says in Hindi, small topics penalty covered hai. Small topics, no, it's not covered in penalties. So small topics, penalties, I will upload separate video today only. I hope GAR is clear to you. One question I want to solve of GAR. Question number 84. Critically examine the following cases and check out whether GAR would be invoked or not. You have to answer. Critically examine. Critically, not upar se. Critically examine. Diva is an Indian company having two manufacturing units, Unit A in special economic zones and Unit B in non-special economic zones. So Diva has two companies. A is an SEZ and B is a non-SEZ. Manufacturing activities are carried out by Unit B. So manufacturing done is done by this. Unit A only does the packaging work. Okay, seems fair. Sure, Akash. Packaging of the goods manufactured by Unit B. Okay. In books of accounts, it showed that manufacturing is done by A. Oh dear God. What it says, Unit B is actually doing the manufacturing, but in books it is showing that Unit A is doing the manufacturing. Arey Baba, if you transfer the income legally, then it might be avoidance. But here you are evasion, yaar. You are doing evading taxes. Illegally, you are not showing books of accounts, so it is evading taxes. Arey Baba, this is evasion, clear-cut evasion. GAR would not apply in this case. Jiva is an Indian company, two manufacturing units. Jiva, Unit 1, Unit C of Special Economic Zones, and Unit D non-SEZ. It transfers the goods from Unit D to C, Unit D to C, non-SZ to SZ at a price lower. So profit shifting is taking place. Is it planning? No, sir. Is it is it evasion? Sir, they are doing legally correct. They are not doing any illegal thing. Third thing, sir, second step, do we have specific rules for that? Sir, we do have specific rules. Domestic transfer pricing shall apply in this case if transaction exceeds 20 crore rupees. Domestic transfer pricing shall apply, and in this case, GAR would be applicable. Sorry, GAR will not be applicable. SAR would apply in this case. Did you understand general anti-avoidance rules? General anti-avoidance rules. Anybody having any doubt? Miscellaneous provisions, a topic involving multiple small areas which were left out in every chapter. Basically, it covers three or four areas. First of all is cash, loans and advances, SFT reportings, cash credit and undisclosed incomes, and leftover topics. These have been given in miscellaneous provisions. 269 SS. Whenever you take loan, whenever you take deposits, whenever you take advances in respect of immovable property, and your outstanding balance is 20,000 or more, in that case, any money should be taken via account, paycheck, demand draft, electronic clearing system only. If you take more than 20,000 rupees of cash, account pay, if you cash, bearer check, cross check in the form of loan, deposit, or advance in respect of immovable property, in that case, it shall be violation. Sir, who shall impose penalty? Sir, if you take any loan, deposit, or advance in the form of cash, bearer check in violation of this section, penalty would be levied by the assessing officer. Assessing officer is going to impose. See, this is an amendment. Till last year, Joint Commissioner used to impose the penalty under these sections, but now assessing officer, a lower officer, can also impose the penalty. If you take loan from Primary Agriculture Cooperative Society or Primary Agriculture Cooperative Bank, in that case, sir, instead of 20,000 limit, we have a limit of 2 lakh rupees. 2 lakh rupees you can take in cash, that's okay. This provision of loan is not applicable by these people. If government takes any loan, government takes any deposits, in that case, provisions are not applicable to government. Okay? To or from, but to or from. If government takes any money in loan form, government takes, or if you take from government, provisions are not applicable. Bank, cooperative bank, post office. If bank receives any deposits, cooperative bank receives any deposit, post office receives any deposit in cash, that's allowed. Similarly, people receives loan from bank, people receives loan from post office, people receive loan from cooperative bank, it's allowed. Cash is allowed. But NBFCs are not included. NBFCs are not exempted. Government company taking loan, deposit in cash allowed. We taking loan or deposit from government company, it's absolutely allowed. Any cooperation, any cooperation established under any state act, central act. This LIC can take any money in cash, and we can take money from LIC in cash as well. Any person having agricultural income, he can take loan in cash more than 20,000. That is okay. Seems fair? Seems fair. For example, loan accepted 13,000 rupees via bearer check. Again, deposit accepted via bearer check, so entire 20,000, 25,000 would be penalized. 15,000 taken in cash, then 13,000 taken via bearer check, entire 28,000 will be penalized. First of all, I took 15,000 in account paycheck, then I took 13,000 in cash. Since my outstanding balance exceeded 20,000 rupees, sir, in this case, 13,000 would attract a penalty. Remember, I'm telling this one thing clearly, we don't have to check the cash amount. Cash amount is not relevant. Always understand, cash amount is not relevant. We always have to check the outstanding balance. If outstanding balance is more than 20,000 rupees, now any 1 rupee, even if you take in cash, now that will also attract a penalty. That is why your 13,000 is attracted. Then 15,000 you received in cash, then 13,000 by account paycheck. When you're receiving this 13,000 rupees, your limit is crossing 20,000 rupees, and you are taking by account paycheck, so no penalty applicable in this case. 269 SS is very simple. Taking money in cash. 269T. Any loan taken, deposit taken, advance taken is dealt with 269 SS. But if such loan is repaid, if such deposit is repaid, if any advance is repaid, in that case, if that is paid more than 20,000 rupees in cash, if advance repaid, loan repaid, deposit repaid exceeds 20,000 or more in cash, in that case, it is penalized. Who penalizes you? In that case, assessing officer imposes the penalty. 100% of the loan, deposit, advance repaid in cash is penalized. If government repays, government company, bank, cooperative bank, post office, or any of the cooperation repays, now that's okay. If they repay, that's okay. Sir, whenever you repay now, take the principal amount and interest amount as well. Okay? Always we shall take principal amount and interest amount as well. Section 269 ST. Important, now very important. Achha, 269 SS and NT and one has one pointer. For example, this is Rahul and we are with this Akash. I took 5 lakh rupees of loan in cash. Will this attract penalty? Right answer is yes, 100%. I repaid the same thing to Akash in cash again. Will again be penalty levied? Right answer is yes, penalty was levied twice. If you take loan in cash, then two penalty is levied. If you repay the loan, then two penalty is levied. Oh dear God. Section 269 ST, what it says. If you undertake any transaction, do any sales, receive any rent, receive any capital gain receipts, anything if you receive now. If you receive more than 2 lakh rupees from a single person in a single day, then it should be via account, paycheck, demand of electronic clearing system. If you receive more than 2 lakh rupees from a single person in a single day, or in respect of single transaction, or in respect of single event, in that case, it should be via account, paycheck, demand of electronic clearing system. If it is received in cash now from a single person, single day, or in respect of single event, or in respect of single transaction, in that case, what happens? In that case, it is penalized. It is penalized. Who penalizes you? Sir, again, the assessing officer penalizes you with 100% of the penalty. 100% of the penalty. Sir, remember, if government receives more than 2 lakh in cash, it is absolutely allowed. If banking company receives 2 lakh in cash from a single person, single day event transaction, absolutely allowed. If post office receives 2 lakhs from a single person, single day, single event, single transaction, allowed. If cooperative bank receives, that's allowed. But NBFC, can it receive? No, NBFCs are not exempted. If you withdraw from bank more than 2 lakh, are you allowed? Yes, sir. If you withdraw from cooperative bank, post office, it is allowed, sir. If bank correspondence, bank ATM operators, any person issuing demand draft, any credit card company, any person who receives the awards from the government can receive more than 2 lakh in cash. It is allowed. It is allowed to these people. Now, there are certain things I want you all to understand. First thing is, for example, this is Rahul and this is Prince. Rahul took 4 lakh rupees cash for loan. Now, if Rahul has taken loan, can I say that 216 ST is also violated and 216 SS is also violated? SS because we are taking loan more than 20,000, ST because we are undertaking transaction of more than 2 lakh in cash. Can I say both the sections are violated? Right answer is yes, both the sections are violated. So whether penalty under both the sections would be applicable? Right answer is no. Transaction referred under section 269, SS not applicable, ST. If SS is applicable, then ST shall not apply. Basic provision it is. A very lame provision, I have to tell you, very lame provision, very lame. You will understand that. For example, this is NBFC. Now, if you see na SS, ST, or T, NBFC have not been exempted. NBFC also has to comply these sections. NBFC disburses loan, gives loan to, for example, Ramlal. And Ramlal's EMI is 25,000 rupees per month. Ramlal has to pay 25,000 rupees per month EMI. If you check out NBFCs, per month receipt of NBFC is 25,000. Per annum is 3 lakh rupees. If you carefully see this transaction, can I say that NBFC is receiving this money on account of single event only? Loan disbursement is a single transaction. You are receiving money against that single transaction only now. So annually, this NBFC is receiving more than 2 lakh rupees in cash. So will 269 ST be violated here? Think from NBFC's point of view. NBFC is receiving more than 2 lakh rupees in cash. More than 2 lakh rupees in cash. Now, what's the issue here is, if you receive more than 2 lakh rupees in cash now, you have to undergo a bigger issue. What bigger issue? In this case now, Single event is a loan only now. Loan is considered a single event only. Loan given and against that installment is received a single event only. Again, single event aggregate you are receiving more than 2 lakh rupees. This should be penalized. So CBDT came up with clarification saying that even if you receive more than 2 lakh in cash now, sir, every installment shall be considered as a single event. Not the clubbing of all. Every installment individually is an event. Every installment should be up to 2 lakh rupees. If it is more than 2 lakh, then penalty would be applicable. But if it is less than 2 lakh, every installment, then you have to check per installment basis. You don't have to club all of them. So every installment you have to check, not everything. Okay? So in this case, penalty would not be applicable. Now, why did I say it is a lame provision? Why? Because why in the God's name Ramlal will pay cash? Don't you think that it would be 269T applicable in the hands of Ramlal? 269T would apply in the hands of Ramlal. Don't you think? It is a very lame provision, very, very lame provision that you are repaying in cash. Okay, Ramlal will never repay in cash, but it is a benefit given to NBFC because NBFCs are bigger in number, so they can argue and claim exemption. Ramlal can never claim exemption because he's an individual. See, what did I say? More than 2 lakh rupees from a single person, single day, you cannot receive. In a single transaction, can you receive single transaction means, for example, I sold my car and received 4 lakh rupees. Out of that 4 lakh rupees, 1.5 lakh is today, 1.5 lakh tomorrow, and 1 lakh in third day. See, it is a single transaction only now. If it is a single transaction, in that case, and even in multiple days, if I receive the money, it shall attract violation. Third thing, in respect of single event. For example, I have done marriage. Okay. And I am paying the marriage garden. I am paying for marriage garden 1.5 lakh. I am paying for catering 1.5 lakh. I am paying for hall 1.5 lakh. I mean everything I am paying for 1.5 lakh on different day, different bill. But event was one only. Event was marriage only. So in that case, any payment received by them on different days also shall be clubbed. Single person, single day 2 lakh limit. Transaction wise 2 lakh limit is also to be checked. Event wise 2 lakh limit is also to be checked. Okay. 269 SU. Acceptance of payment through prescribed electronic modes. What does this mean? See, this provision says if for previous year 24-25, if your turnover is more than 50 crore rupees, if your turnover is more than 50 crore rupees, then what you have to do? If your turnover is more than 50 crore rupees now, then sir, you have to receive money via account pay check, demand draft, electronic clearing system. This is what you have to accept. This is for sure you have to accept. But apart from that, you have to accept some extra things. What extra? Sir, you shall offer acceptance of the money via RuPay powered credit card, debit card. You should also have an option to receive money via RuPay powered debit card. You should also have Bhim UPI. You shall have a QR code as well. These three things extra you need to have if your turnover in last year exceeds 50 crore. Everybody has these two things, but this RuPay powered debit card is also important. If you fail to comply now, then 5,000 rupees per day will be penalty applicable. 5,000 rupees per day penalty applicable till the time failure continues. Section 269 SU. This is all about cash loans and advances. Cash loans and advances. Not difficult at all. Very simple provisions. These were very simple provisions. SFT. Do you know? I mean, when I was a child, there was a TV show coming, Saas, Bahu and Chugli, where there was an auntie who used to give up the Bollywood gossips. Everybody has a that type of auntie in their colony who knows about everything. Who fled away with whom, what this person is doing, how much that person is earning. This person has bought a new car. This person is about to getting married. I mean, there is an auntie who knows everything. Her agents are everywhere who tell her the information. That auntie is nobody but income tax. Income tax department has agent across the thing, across the globe. Wherever you do the transaction now, the agents are going to tell to the auntie, see, he has done this. See, he has done this. These agents are going to snitch about you. They are going to do chugli about you. And you cannot escape. Who are these butchers? Who are these snitchers? Lawmaker says, there are nearly 18, 17, 18 butchers, 17, 18 snitchers. What are them? Let me tell one by one. If you pay 10 lakh rupees individually or aggregate to a company for acquiring the bonds or debentures, then that company is going to tell IT department, see, oh, he has got a money to buy 10 lakh of bond, just send him notice. So if you buy bond more than 10 lakh rupees from a single company, in that case, that company is going to snitch about you. That company is going to definitely snitch about you to IT department. Okay? If you acquire shares more than 10 lakh rupees from a company, that company will tell to department, Acha, see, this Rahul has given me 10 lakh rupees to get my shares. Annually 10 lakh rupees he's earning. I mean, just to send a notice to him what he is doing. So this company is also going to snitch about me. If you buy mutual fund more than 10 lakh rupees, if you buy mutual fund more than 10 lakh rupees, what happens in this case? So again, that mutual fund house will tell, Acha, just look at this lad sahab, 10 lakh of mutual fund in a year. Just send him a notice as to why he has bought, how he has earned this much income. So mutual fund house is also going to snitch about us. If we buy foreign currency, if I have gone to buy foreign currency now, this authorized dealer will look into my eyes. He will look into my eyes and he shall complain to department. Acha, Rahul has bought 10 crore, 10 lakh rupees of foreign currency. He will snitch about us. Okay? If I have shares in a company and that company has done buyback and money received by me is more than 10 lakh rupees now, then this company would tell to department, see, I have given 10 lakh rupees to Rahul, kindly catch him from where he has earned this much money. So these are the 5 people who are going to complain about you. Not complain, but to be specific, they are going to snitch about you. Apart from that, who all are going to snitch about you? Let me tell you. If you buy any immovable property whose property value is 30 lakh or more, or whose stamp duty value is 30 lakh rupees or more, anything is more than 30 lakh rupees, na, in that case, the registrar will tell, Acha, just look at this Rahul person, bought 30 lakh of property, just check him how he has earned that. So these registrar is also going to do a chugli against you, that is snitch against you. This is the best part, okay? This is the best part. You will laugh at it, okay? If you do sales of more than, sorry, if you receive cash of more than 2 lakh rupees by doing sales, okay? I did sales, I received more than 2 lakh rupees in cash, which is in violation of 269 ST. Right now we studied. Now, who is going to snitch about it? It is us who has to snitch about us. It is us. We have to tell that we have done the contravention. Wah, 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 wah. I mean, you are saying chore, you are saying a thief to give a to be a guard for a day. You are saying the seller also. You are telling the recipient to tell you have received more than 2 lakh in cash. Okay. If you deposit or withdraw 50 lakh or more in current account in a financial year. So if there is a current account, if you deposit more than 50 lakh or if you withdraw more than 50 lakh rupees from that current account na, in a financial year, either deposit of 50 lakh or either withdrawal of 50 lakh rupees, anything has to be reported. Now, if there is savings account, if there is savings account, and you deposit more than 10 lakh rupees in that savings account, but sir, here cash deposit is there. Deposit does not mean the only deposit, it means cash deposit. Here cash deposit is considered. Deposit can be any amount now, but cash deposit has to be more than 10 lakh rupees. Then bank would tell, see, if you get a fixed deposit done, if you buy a fixed deposit of 10 lakh rupees or more, department will say, acha, he has got more than 10 lakh rupees. Oh, just catch him. Just catch him from where he has earned. Let us also know how he has earned this much money. So that person will tell to department as well. Apart from that, so sometimes what happens is now you already have an FD. You already have an FD. You get that renewed. You get that renewed. You get that renewed. Okay? Renewal of FD is not reported. Originally created FD is reported. Renewal of FD is not reported. If you buy a pay order, for example, you buy a demand draft. If you buy any of the pay order, then bank is going to report, acha, 10 lakh rupees of demand draft. that bank is going to report. If you pay a credit card bill, ठीक है, credit, I don't know how many of you are able to catch that thing. Credit card is a very, I mean, funny thing. Huh? I don't know how many of you are able to understand. There is a show in Tarak Mehta called Chashma in Hindi where we call credit card. ठीक है, they don't call credit card, they call it credit card. It is famous across India. So if you pay a bill, a credit card bill more than 10 lakh rupees, ठीक है, then credit card company is going to report. But sir, if you pay bill more than 1 lakh rupees in cash now, then also they are going to report. So if more than 1 lakh in cash, they are going to report. 10 lakh via any medium, they are going to report. Okay? At last. At last, sir, if there is any capital gain happening, if there is any capital gain happening now, then recognized stock exchange shall also report, depository shall also report, recognized clearing corporation, registrar to an agent, every four people are going to report about your capital gain. If you received any dividend, then company paying dividend would report. At last, if you receive interest, then bank, post office, NBFC are going to report. These three people are going to report about you. These three people are going to report about you. Yes, credit card limit of 20,000 rupees. That CLK bank, yes, चूना लगा के bank. व्हाट प्रिंसेस सर, गार के हैंड रिटन नोट्स का पीडीएफ मिल जाएगा, पहली बार समझ आया इतने अटेम्प्ट में। अब बस एग्जाम्शन चाहिए। उस क्वेश्चन में मार्क्स नहीं आते हैं बिकॉज आंसर लिख के नहीं पता था करेक्टली। हैंड रिटन नोट्स हैव ऑलरेडी बीन शेयर्ड इन माय टेलीग्राम channel, the Bhula series PDF that I use na, up to 5 chapters I have shared that in Telegram channel. You can refer the Bhula series, it is mentioned in that. Okay, now very carefully listen huh? These limits are important. I am very, what do we say, skeptical that in this attempt this is going to be asked. Very skeptical in MCQs they are going to ask. I personally think I want you all to learn this limit. So for that matter, to simplify that, I have highlighted them. Whatever highlights that have been done in blue now will have 10 lakh of limit. Okay, if you these blue ones have 10 lakh of limit, these neon ones have atrangi sa limit, there is no, I mean, conditions, and this red ones have no limit as to how, when reporting will be done. I'm just marking that down again for you. You just make a list, huh? You just write it down. See, in marathon I am writing in marathon. See, I am expecting that you shall also write. So there is 10 lakh limit for five things. First of all, bond. If you buy bond from a company, if you buy a mutual fund from a mutual fund house, if you buy shares from a company, see, these shares, these mutual fund, these are bonds are not bought in secondary market, these are primary market. You are buying from companies, these are issuing these shares, mutual funds and bonds, then only they are reporting. Fourth thing, if you are buying forex or if buyback is happening, in that case 10 lakh is the limit. Apart from that, where else we have 10 lakh limit? Sir, cash deposit in savings account, then we have FD more than 10 lakh, then we have demand draft being bought, and then we have credit card bill more than 10 lakh. These are the 9 instances where we have 10 lakh limit. I want you all to learn this because this, I think, is going to ask in exam. There are MCQs available in 35 case studies of ICI. It is difficult to process question. I am telling you, if this is asked now, you will forget the limit. You think that you know the answer, but in exam you will forget. There are instances where there is no limit. Sir, in capital gain, there is no limit. If you are selling through stock exchange without any limit, it is going to be reported. Second thing, sir, in case of interest, there is no limit. Even a rupee of interest given by bank would be reported. And third thing, any dividend by the company would be reported. There is no limit of these transactions. And vague limits, we have certain vague limits for certain transactions. Sir, what are the vague limits I am highlighting? Immovable property, 30 lakh limit. Sir, say cash receipts, 2 lakh rupees. Current account, deposits, 50 lakh. Withdrawal, 50 lakh. Then we have credit card bill, cash payment, 1 lakh. That's it. These are the transaction. 9 plus 8, I guess it is 7, 6, 9 plus 8, 17 only. I want you all to learn this. I have written in marathon. You are not understanding. Writing in marathon is a sin. Nobody writes in marathon even a word. They just come up, read out, and go away. Though nobody writes, I am doing a sin. Okay? And that sin is only because of you. Because I think you will forget in exam. Okay? I hope you took a screenshot. Now, sir, these are the snitchers. These 18, 17 people are the snitchers. Sir, till when they have to snitch? Sir, they have to snitch up to 31st May of the assessment year. They have to tell to department in SFT. This is called SFT reporting. They actually don't snitch. They have to do SFT reporting. SFT is nothing but statement of financial transaction. If they have issued bonds, debentures, if they have given mutual fund, if they have issued, if they have done any interest dividend given, inter dividend given, so they have to snitch about you in the SFT. Simple. Till when they have to submit the SFT, sir, they have to submit up to 31st May of the assessment year. Sir, what if they are not giving the information correctly well on time? What if they are not giving the information well on time? In that case, what happens? Sir, they will be charged a penalty. Up to 31st May, if you are furnishing, no penalty. After 31st May, 500 per day. And after a certain point of time, 1000 rupees per day. Now, till when 500 would be charged? Very important. Sir, up to 31st May, no penalty. After 31st May, a notice might be issued. Sir, you don't have to consider date of notice. You don't have to consider date of notice. In that notice, there would be a date given to you. In that notice, there would be a date given to you till when you have to file the SFT statement. For example, notice is issued on 1st July, where it is mentioned that you have to submit the statement up to 15th July. So 500 per day till the date mentioned in the notice. Not the date of notice, but date mentioned in the notice. Date mentioned in the notice is important. You have to charge late penalty 500 rupees up to the date mentioned in the notice. After date mentioned in the notice, sir, 1000 rupees per day till the time you actually file. So 500 rupees from after 31st May till the date mentioned in the notice, not the date of notice, date mentioned in the notice. And after that, sir, you will be charged. How much you will be charged? 1000 rupees per day. Sir, if you incorrect file any information, then 550,000 rupees is the penalty amount. Perfect, sir. Perfect, sir. Perfect, sir. Perfect, sir. Perfect, perfect, sir. Perfect, sir. Perfect, sir. Perfect, perfect, sir. Section part 3, cash credit. Cash credit, sir. Cash credit, sir. Cash credit. Cash credit. Unexplained incomes. See, sometimes your books of accounts have some credits, some bank remittance, bank receipts from cash, some cash receipts for which you do not have any explanation. From where did that money come from? Who gave that money to you? Sometimes you do not have explanation. In that case, if you do not have any explanation, now that will be added to your income. That will be simply added to Satyam Kumar says, great work. It means a lot to me. It means, see, whatever work I do is for you only. If it is not great, you will not share it. So if you feel it is great, only thing you have to do is that share it with most of your friends. Whatever Telegram groups you have, whatever Telegram channels you have, whatever the WhatsApp groups you have where people watch CA related content, share these videos to them. Okay? That's only thing I would appreciate. Apart from that, your loving thank is always accepted. But sharing would mean a lot to me. Now, Now the point is cash credit. What is cash credit? If your account has any suspicious receipts, cash receipts, bank receipts, where you cannot put any explanation, where you cannot have any explanation, from where did money come from? Lawmaker says we are going to treat it as the undisclosed income and we are going to charge tax on that. Sometimes what happens is now we say that somebody has given loan to us. Somebody has given loan to us. We sometimes say that it is a loan money. What department would do? Department would go to that some person and ask whether that some person has given loan to us or not. If some person denies that I have not given any loan to Rahul, in that case, it will be treated our income irrespective of our explanation. Sometimes what companies do now, फ्रेंड्स आज ही होगा वैसे ये एवरी हिंदी वीडियो इज अपलोडेड इफ यू अंडरस्टैंड हिंदी ना हिंदी वीडियो इज अपलोडेड आफ्टर दिस आई विल टेक अप द टैक्स ऑडिट ठीक है now sometimes what company do is now company receive the suspicious credits and company call it share application money. What a department would do, na department would go to the person who has paid the money If that person denies that I have not given any cash, any application money, in that case, whatever explanation company gives is not relevant. It will be added to the income. These provisions are not applicable to SEBI registered venture capitalists. That's fine. So if there is any suspicious cash credit to our family, then in that to our account, in that case, it is treated our income. Unexplained investments. For example, department came at the house of the prince. Department people came at the house of the prince. Department knew that there is some suspicious things going on in the prince's house. You know what department did? Department had a lat. You know, lat, a stick, a long bamboo stick. I mean, somebody would be frightened but just by looking at the stick. Department people pointed out, the officer pointed out the stick to prince. And department forced, tell me where the assets are, tell me where the assets are. Department is forcing out prince to tell the where assets are. The prince says no assets, no assets, no assets. Department officer became very angry. He was about to beat prince, but instead of beating him, that stick fell off his hand. And that stick stuck to the wall. You will not believe that. You will not believe that. But there was some powder that was released from the wall. Some powder, some wall putty started shredding. Department officer understood that there is something wrong. Officers scratched the wall and they realized there is entire cabinet behind that wall. Department understood that there is something behind the wall, and then when they found out there were 200 registries in the name of prince. 200 registries. He has properties in Andaman, he has properties in Gurgaon, he has properties in Chennai, he has properties in Mumbai, he has property in Kerala, he has properties in Gurgaon, he has properties in Bangalore, he has properties in Indore, he has properties everywhere. Prince was asked, where did you earn these properties? Where did you get these properties? Prince says, it's nothing. It's God's gift. It's God's gift. I don't know where they have come. Paper is God gift. Ink is God gift. Everything has been God gift. Properties is God gift. I don't know where it is. Arey Baba, department says, if you have any unexplained investments, na, for which is not recorded in books and you do not have any explanation, na, that is added to your income. Now, again, department people came and department people knew that there is something wrong at the prince house. What they did? First of all, they scratched the walls, but this time nothing was found. Department people went angry. They started just pushing the stick through the floor, and there was a sound from the floor. Tung. Again, department people put that stick on the floor. Again, tuck, they did tuck tuck, but sound was coming tung tung. Again, department people put that stick on the floor. Again, the sound was coming tung tung tung. Are you understanding? Department people understood that there is something beneath the floor, and when they found out, there were gold. Every entire floor was covered with gold. Entire floor was covered with gold. Entire floor was covered with gold. When it was asked to Prince, where did you earn this much money? How could you earn this much money? Prince says, it's just a God gift. I had just a piece of land and it automatically converted this piece of land to gold. I don't know from where this gold came from. Ori Babari. Ori Babari. Lawmaker says, if you have any unexplained investments, if you have any unexplained assets or money for which you do not have any satisfactory explanation, it is added to your income. Now, Prince understood what is the issue. What is the issue? See, he is not recording asset in the books of accounts. That is what the issue he felt. So he bought a land whose value was 10 crore rupees, but he recorded that land at just 1 crore rupees. He recorded at 1 crore only. He recorded at 1 crore only. Lawmaker says, if you buy any property and record it at a lower value in books is just 1 crore. But in reality, if you see value is 10 crore rupees, if difference is there, then difference is treated as income. Now, I'm telling you the instance about Prince on. Recently, he got married. His ROI for last 10 years is just 4,99,999. His ROI has been this much only, not more than that, for 10 years. So if you check out his accumulated wealth, this must have been just 50 lakh rupees. But recently he got married in Udaipur, Prince Palace. There is a palace in Udaipur he got married and where he spent 25 crore rupees. He spent 25 crore rupees on the marriage purposes. He spent 25 crore rupees. In that case, department asks Prince, where did you earn this money? Prince says, it's just the gifts. These are just the gifts. Are Prince is a kind of person people would not gift a pencil to him. But how come he got this much of gifts? No gifts even possible. So, sir, if you have done any expenditure for which you do not have any source of income, where did you earn that money to do the expenditure? In that case, such expenditure shall be treated as your income. And if you have claimed the deduction of that expenditure in your PGBP, na, that will not be allowed as well. See, there is a concept of hundi. That means based on some promissory note, you borrow the money and you repay the money. You borrow the money and you repay the money. If you borrow any money on account of hundi, it should be via account paycheck only, demand draft only, electronic clearing system only. But sir, if you borrow money on hundi, whatever money you borrow, that is added to your income. Whatever repayment you do in cash, now that is also added to your income. But if you are borrowing from the same person and repaying to the same person, now only once it is added to your income. Okay? Perfect, sir. Under section 68 to 69D, sir, we are not able to recall the in-depth section. We know 68 to 69D, but what is 69C, what is 69D, we tend to forget. Don't need to worry. Just mention the word exam section 68 to 69D, unexplained income. Just mention this entire series of the section. Do not mention a specific section. That would be okay. If you have any unexplained income under these sections, in this case, what happens? Sir, it is taxed at 60%. 25% surcharge is applicable, 4% education cess is applicable, and whatever the taxes being arrived at, on that 10% is the penalty applicable. 10% of the penalty under section 271 AAC is the section where penalty is applicable. This was cash credit. Miscellaneous provisions. What this miscellaneous provisions talk about? See, there are certain transfer which are called void. See, if department is doing any assessment, or if any assessment has been completed but demand order is yet to come, and you sold any property and department thinks that you have sold it to defraud the revenue authorities, now in that case your transfer would be void transfer. That means even if you have given possession to somebody else, even if you have transferred the ownership to somebody else, now even if you have given possession, if you have even if you have given the ownership, now department has legal right to take it back. Department will assume that no transfer has taken place. So what did I say? If you have transferred any property during assessment or after completion of the assessment to defraud the revenue authorities, now the transfer shall be void transfer. It shall be void transfer. But sir, there are instances where this would not be void. There are 5 instances where it would not be void, and these are 5 independent instances. First of all, our tax payable is only 5,000 rupees. If tax payable is only 5,000 rupees, transaction would not be void. It would be only void if it is more than 5,000. IRA tax is just 5,000, so why I should not be allowed to pay any taxes? Hundi covers. I don't understand, Kumar, what you are asking. Hundi is nothing but money taken on promissory note. Okay, money taken on promissory note. If tax payable is 5,000 rupees, then I can sell asset. That's okay. If the asset that I am selling is up to 10,000 rupees, Arey Baba, there is assessment going on against me. Can I sell my calculator? Can I sell this calculator to anybody? Arey Baba, calculator should be allowed to sell. Na asset is value up to 5,000 only. Na, that means it is allowed to be set off. Asset up to 10,000. Now tax 5,000, asset up to 10,000. Anything of the two is okay. Sir, if I am able to sell asset as an adequate consideration, for example, assessment is going against me and I have a house. This house is worth 1 crore rupees and I am able to sell this out at 3 crore rupees. People are ready to buy. Should I be allowed to sell? Of course, I should be allowed to sell. I am not defrauding revenue authorities. I am getting a fair price for my house, so I am selling it. Lawmaker says, yes, you can sell it. Transfer made with prior approval of the AO. Sir, if I am making transfer with prior approval of AO, it is absolutely allowed. At last, if I am selling stock in trade, now that is also allowed. So 5 cases, it will not be void. First of all, tax payable is up to 5,000, assets sold up to 10,000 with prior approval of AO, selling stock in trade, or any kind of consideration for which proper consideration has been received, that is allowed. Provisional attachment, very important section, very important section. Very carefully listen. If penalty against you is likely to be imposed for more than 2 crore rupees during the assessment or reassessment, AO thinks that it is necessary for protecting the interest of the revenue, then by order in writing, he can attach your property. He can do a provisional attachment of the property. Penalty likely to be imposed for more than 2 crore rupees. Assessment is going on, and it is necessary for the interest of the revenue to attach, so they will attach your property. Before attachment, prior approval of CIT shall be taken. How long attachment would be applicable? Sir, attachment would be applicable for 6 months from the date of the order. 6 months shall be applicable. Sir, can this attachment be increased? First of all, when attachment will be done? Sir, first of all, penalty more than 2 crore rupees. Interest of revenue involved. Assessment is going on and prior approval of CIT taken, then only property can be attached, and that too for 6 months. Can this attachment be increased? Sir, lawmaker says this can be extended with prior approval of CIT only. Reasons recording and maximum extension can be, sir, 2 years or 60 days from the completion of the assessment, whichever is better. With up to this point only extension can be done, attachment can be done. After this, sir, at any point of time, if property is attached, I want my property back. Can I take back my property? Lawmaker says, yes, you can take back your property, but there is an inherent limitation. What kind of limitation, sir? Sir, you have to submit bank guarantee equaling to FMV of the asset. If your property is attached, submit the bank guarantee of FMV of the asset. Then only department is going to release the asset. If I furnish the bank guarantee, department will release. But remember, if outstanding demand is payable by me and I have not paid, department will invoke bank guarantee. Or if my bank guarantee is about to expire and it is less than 15 days left for bank guarantee to expire now, department will invoke the bank guarantee. This is what the entire section is. Three major things. First of all, when department can attach, penalty likely to be imposed of 2 crore rupees. Second thing, reasons recorded in writing. Third thing, interest of revenue involved. And fourth thing, CIT approval taken. For how long? 6 months. Second part, can this be extended? Sir, it can be extended for 2 years or completion of assessment plus 60 days, whichever is later, but only with CIT approval. Third thing, can I take my property back? Sir, I can take my property back, but only if I furnish bank guarantee equal to FMV. That bank guarantee will be invoked by the assessing officer if I don't pay the demand, or if I don't furnish a fresh bank guarantee at least 2 months prior to expiry. Service of notice. What does this mean? Listen up. See, if a notice is served to any SSC, if a notice is required to be served to an SSC, it has to be served via post office or a courier. It has to be served via digital format or any civil procedure code 1908, any other procedure mentioned, like holding that post on your board, on your door, whatever method it is, or any other method prescribed by CBDT. Whom shall notice be served? Lawmaker says if it is an individual, to himself only. If it is a deceased person, then his legal heir. Existing HUF, then manager. Existing firm, then partner. Dissolved firm, then any dissolved any partner who was at the time of dissolution, and any type of company principal officer. Any other person in charge. There is a concept of authorized representative. What is authorized representative? See, if there is proceedings going on against me and I want somebody to represent me on my behalf, I can send anybody. Sir, who can be your authorized representative? Sir, either your employee can be your authorized representative. Your lawyer, your chartered accountant, including chartered accountant firm, can also be your authorized representative. If you have a bank, take a bank account, then any officer of that bank can also be your authorized representative. Anybody who has passed a basic elementary examination prescribed by CBDT can also become the authorized representative, like MBAs also can be. Any other person as will be notified. Now, annual information statement. What this annual information statement is covered? See, every year, income tax portal has a statement called annual information statement, which covers 6 information. Whatever the TDS deducted is there, that will be the statement. Along with that, whatever the SFT reportings have been done against you, that will be in that statement. How much taxes you have paid, TDS, advanced tax, self-assessment tax, whatever you have paid, not TDS, but advanced tax, self-assessment tax, whatever you have paid, that will be mentioned there. Any kind of refund of any last year, any kind of demand of last year would be mentioned. Any kind of pending proceedings against you, or any kind of completed proceedings would be mentioned against you. All these 6 things will be mentioned in your annual information statement. Now, who furnishes this? This is being furnished by PDGIT system. PDGIT system on your relevant income tax account. This is a statement which covers 6 things. Okay? Now, if you are into event management business or filmmaking business, you have an obligation to do one thing. What one thing? Whatever expenditure you have done of 50,000 or more, be it in cash, be it via account paycheck, if you have done any expenditure of more than 50,000 rupees, lawmaker says that you have to furnish a form 52A to DGIT, PTGIT within 60 days from the end of the previous year, stating all the transactions that you have done. Whatever transactions you have done, you shall report that. If there's a foreign company has a liaison office, what does liaison office means? A call center, a office which does not do any business. If foreign company has a liaison office in India, then that liaison office has also to submit a statement of all the transaction it has incurred to 30th November of the previous year. 30th November of the previous year, they have to submit a statement under Form 49C. Now there is an amendment, big amendment, but least relevant amendment. See, government might declare any entity as a reporting entity, which reporting entity has to report certain cryptocurrencies transaction. Now which entities would be reported, not mentioned. When it will be mentioned, reported, when it has to do reporting, not mentioned. What reporting to be done, not mentioned. Nothing is mentioned, but it is only given that government will select some entities so that they have to do some crypto related reporting. Entity crypto related reporting will be done under prescribed form that will be furnished. But sir, whatever form that the entity would be furnishing, if it is defective, then department will give 30 days time to correct that. If return is not furnished by them in specified time, the IT authority may serve a notice and require them to furnish return in 30 days. So if defective, 30 days correction time. If not filed, then notice will be given to file in 30 days. If incorrect information is furnished, then 10 days would be given to correct. Then who, which authority, what information to furnish, when they have to furnish, that will be prescribed soon in time, not right now. That completes your miscellaneous provisions as well. Fearless General Finance Limit Investment Company, question number 88 of Super 150. A residuary non-banking financial company accepts public deposits and repays the same after some period along with interest. Mr. A, an individual deposited 15,000 rupees on 1st May. It is NBFC. Mr. A has deposited 15,000 rupees via bearer check. That means as good as cash only. And another 15,000 rupees. Oh, ho, ho. Another 15,000 rupees via bearer check. See, first deposit was made on 1st May 2022, and the other deposit was made on 30th June 2025. This is the deposit period. This is the deposit period. Seems fair enough. Seems absolutely fair enough. Okay. Listen, if you withdraw, if you take loan from somebody or if you take deposit from somebody now, then 20,000 limit is not per year basis. It is per person basis. It can be based on 3 years, 4 years as well. Even in 3 or 4 years also, you cannot take more than 20,000 okay, in cash. So they have taken via bearer check. Entire 30,000 would be penalized. Mr. A applied for premature withdrawal and company paid him 16,500 via bearer checks. Oh, 16,500 is repaid in bearer check. See, outstanding balance is more than 20,000 rupees. Outstanding balance is 30,000 rupees. Out of that outstanding balance now, it has paid 16,500 in cash. It will attract a penalty under 271E, 100%. Because we don't have to check the cash amount, we have to check the outstanding balance. Outstanding balance is more than 20,000. And 15,500 against the second certificate. Again 15,500. Again this is paid in cash. This will not attract penalty. Why? Because outstanding balance is less than 20,000 rupees. No penalty is attracted here as well. Discuss the violation of the Income Tax Act. We have done that. See, this is with respect to provisional attachment. Whatever we have discussed, as it is theory is being asked. Question number 19. Mr. Bhuvan proposes to purchase for its business raw materials from Mr. Srinivas. So Bhuvan is buyer or Srinivas is the seller. Oh wow. Srinivas insists on cash payment. Bhuvan agrees. And transaction was done of 3,20,000. 3,20,000 rupees was paid in cash. See, for buyer, 48.3 would be applicable. That means disallowed because it is made in cash. For seller, 269 ST would be applicable because more than 2 lakh it is being received in cash. Would your answer be different if it is done on 2 different dates, 2 different raw materials? See, instead of one transaction, buyer paid 180 at first and 140 on second date. Will it attract any violation? Sir, for buyer, it will, yes, it will attract by violation because more than 10,000 is paying in cash, so it will attract violation under 40A3. But for seller, it will not attract 269 ST. Why? Because it is not single day, single person more than 2 lakh. It is not single event as well. It is not single transaction as well. Transaction has been split. This has been the treatment. Come on to tax audit. Before that, I will request you to have a break. It is 12:27. Take break till 12:50. Take break properly. After that, we shall start tax audit and we will understand what important clauses are there, what to study in tax audit, what not to study, how to write, and how to write the answers, how to write the ethical compliances, and what was wrong in Jan 26 paper question. I will tell you everything in tax audit. After tax audit, we shall cover up black money law as well. After that, we shall cover up penalties as well. Then clubbing, then set off. We have a lot to cover. Come after the break. 1 or 2 minutes late is okay, but not more than that. See you guys after the break. Welcome back from break. Are you all back from break? NG? Hey G, are you back from break? Can you all hear me again? Okay, seems fair. Seems fair. Chalo ji. Come on to next topic. That is black money law. Sir, but you said tax audit. Why black money law? My wish. I am conducting marathon. I shall be one who shall decide the sequence. I want to do black money. Sir, why black money? Because I think black money is more interesting. Once you study tax audit, now after tax audit, your willingness to study more dies. So it is always beneficial to study the easier topics once and then come to tax audit. Tax audit has multiple clauses now. At some point, it becomes monotonous. Come on to black money law. Okay. Come on to black money law. What this black money law says. As soon as Modi ji came into power, okay, Modi ji came into power in 15th May, 16th May 2020, 2014. And very next year it came. Black money law came. First April 2015, black money law came into force. Intention was very clear. If any asset is outside India which is undisclosed, or if any income is outside India, now, which is also undisclosed, government will charge 30% taxes on that. If any asset is outside India, that will be charged. That if the asset is outside India, government will charge 30% tax if it is undisclosed. Similarly, if income is outside India, which is not disclosed to department, government will charge 30% taxes on that. Are they going to add any surcharge? No. Are they going to add any education cess? No. Sir, any penalty applicable? Right answer is yes. 300% of the taxes, whatever the taxes are there, three times of the taxes will be penalty applicable. Perfect, sir. Now, under black money law, we have two concepts basically. Okay? There are two concepts. If there is any undisclosed foreign asset, then it is taxed in the year in which AO notices. For example, asset was acquired in 2010, but AO notices in current year, so current year it will be charged taxes. If it was acquired in 2020, AO notices today, it will be taxed today. If it was acquired in 2001, AO notices it right now, it will be taxed today. So any old asset will be charged to taxes in the year in which AO notices. Whereas income is different. Income is charged to taxes in the year in which it was earned. If it was earned in 1718, it will be taxed in 1718. If it was earned in 1617, it will be taxed in 1617. If it was earned before 1st April 2015, it will not be taxed because black money law was not applicable at that point of time. So asset is taxed in the year in which AO notices, income is taxed in the year in which AO income is earned. Now, in this entire chapter, now we do not even study taxation of income. Why? Because whenever you have interest income, dividend income outside India, whenever you have any such income, it is included in bank balance. If you have any bank balance outside, then whatever it will be included in bank balance only. So in some of the other assets, in some of the other format, the income is accumulated only. So whatever income is accumulated, it is in the form of asset only. So we do not consider taxation of income. Basically, we understand taxation of asset only. Now, when assessing officer can tax it, remember, can every assessing or can every asset be taxed in under black money law? Right answer is no. Right answer is no. Assessee can be taxed under black money law if in the year in which AO notices assessee is resident, the year in which AO notices assessee is resident, then only he can tax it. If not, the year in which asset was acquired, assessee was resident, then only AO can tax it. Not every asset can be taxed under black money law. There are conditions attached. If asset was acquired in the year in which it was acquired, assessee was resident, in that year AO can tax it. If assessee is non-resident in current year, but assessee was resident in the year in which that asset was acquired, at that year assessee was resident, now in that case AO can tax it. In both the cases, if he is non-resident, AO cannot tax that asset. If he is non-resident in both the years, AO cannot tax it. Done, sir. With respect to asset, we understood. Sir, what is the year of taxation? Sir, year of taxation is called previous year. The year in which AO notices is the previous year. The year in which AO notices the asset is the previous year. For example, AO notices on 1st April 2025. So previous year 25-26 will be previous year. AO notice on 15th June, then previous year 25-26. 15th September, again previous year 2025-26. The year in which AO notices is the previous year, relevant previous year. Important. Sir, what will be the valuation date? See, ultimately, we have to find out the value of the assets, whatever have been stolen, whatever have been kept outside India, whatever have been undisclosed. We have to find out the value. How do we find out the value? There is an entire process given, but when do we find out the value? It is always the 1st April of previous year. If AO notice on 15th June, then 1st April of that previous year, we are going to value the assets. If AO notice on 15th September 2025, on 1st April 2025, we are going to value those assets. So valuation will be done only on 1st April. Did you understand the basics? Asset is taxed, income is taxed. Both are taxed at 30%. Asset is taxed in the year of AO noticing. Income is taxed in the relevant year in which it was earned. Asset can only be taxed if assessee is resident in the year in which AO finds out, or assessee is resident in the year in which assessee acquired that asset. Simple thing. Sir, what is relevant previous year? The previous year in which AO notices the asset. On that year, only 1st April is the valuation date where we are going to value the assets. Perfect, sir. Sir, for example, if I have some jewelry outside India, if I have jewelry, okay, that beautiful gold jewelry, if I have in the United States, it is kept. Or if I have some precious stones, if I have some paintings, I have a painting of Mona Lisa outside India. Any drawing, sculpture, archaeological collection, at what value it is valued? Lawmaker says, whatever the cost you have acquired, take that. And whatever net realizable value you have, you shall take that. Cost or an NRV, whichever is lower, you shall take that. Sir, whichever is higher, always you shall take that. Take it. Now, in this case, how we are going to take the NRV, it is important. NRV is important. NRV here is important. Why NRV here is important? Sir, in India, we have a concept of registered valuer, but how do we know what is the value in that country? So we shall take that country's registered government valuer. Like in India, we have registered valuers now. Similarly, every country have their registered valuers. We shall take registered value of that respective country into consideration, and we shall find out their valuation report and find out the NRV. Jewelry, precious stones, artistic works, anything shall be taken at cost or NRV, whichever is higher. Very simple it is. Cost NRV, whichever is higher. Now, quoted shares. What about quoted shares? What about quoted shares? Sir, for example, if I have shares of Facebook, how I will value that? How I am going to value that? Lawmaker says, cost of Facebook shares or average trading price on 1st April on recognized stock exchange in that country. For example, Facebook shares are traded on New York Stock Exchange, NYSE. Lawmaker says take the cost or average trading price on 1st April, that is valuation date. Sir, what if stock exchange is not functioning on 1st April, then what shall we do? Sir, we shall take the average price of the last date it was traded. Last working date was traded, we shall take that average price. Sir, for example, we have unquoted shares. If we have unquoted shares, in that case, what we have to find out the value? Sir, we have to find out the value, actual cost of that unquoted shares. For example, I have shares in Rachel Private Limited USA. If I have shares of Rachel Private Limited USA, how I am going to find out the value? Lawmaker says that take the value of the Rachel cost of acquisition of the Rachel Private Limited and A plus B minus L divided by PE into PV. This is what you are going to take. A plus B minus L divided by PV into PE. This is what you are going to take. Now, what is A plus L? See, you have to take the balance sheet of that unlisted company. Take the balance sheet of the unlisted company. and find out the jewelry. If the unlisted company has jewelry, take jewelry, bullion, precious stones, artistic work, shares, securities, immovable property at FMV. If you have any other assets like data, creditor, sorry, if you have data, inventory, if you have cash, any other asset, if you have not, take the book value, reduce the liability, and this will give you A plus B minus L. Total share capital divided by P multiplied by P paid up value, how much we have. So this will give us the value of the total unlisted share capital. This is same as exit tax. Whatever we have studied in exit tax, now it is absolutely same. If five people write down comparison word in comment box, if you write down word comparison in the comment box, I will tell you the difference between exit tax valuation and valuation as per this black money law. I will tell you the difference. If five people write down comparison word comparison in the comment box, five people should write the word. Okay, I will tell you the difference between the two. Sir, what if I have immovable property outside India? What if I have immovable property outside India? In that case, what to do? Sir, immovable property, unquoted shares, not equity ones, but unquoted preference shares. Unquoted securities, for example, bonds and debentures. If I have, sir, if I have any of such securities outside India, then what we have to do? We have to take cost. We have to take NRV, whichever is higher. Cost or NRV, whichever is higher. Three people have written comparison. If other people also write, other two people also write, I will share a comparison sheet of exit tax, of black money law, and even slump sale also I will add. Even slump sale also I will add. So, what comparison did we understood? Sorry, what not the comparison. Okay, five people have to write, and not same people writing five times. Not that's not the case. Okay. So this is about immovable property. What assets are we understood? Listen up. First of all, if we have any jewelry, precious stones, cost scenario, whichever is higher, we are going to take. If we have any quoted securities, what are we going to do? Sir, if we have quoted securities, now then we shall take cost or average trading price. If we have unquoted shares, then cost or A plus B minus L divided by P into PV. That is what we are going to take. If we have any immovable property, then cost or NRV, whichever is higher, we are going to take. Sir, what if we have a bank account in foreign country? What if we have a bank account in foreign country? Then what shall we take? Sir, if we have a bank account in foreign country, now we shall take one thing and we shall not take three things. We shall take one thing and we shall not take three things. Remember, there are three things not to be taken. Three things not to be taken. Always understand, sir, what are the three things? One thing to be taken, what three things not to be taken? Since the opening of the account, whatever the deposit has been taken, that shall be taken. Deposit have been done, shall be taken. For example, I have a bank account at HSBC, New York. I have deposited 5 lakh, deposited 4 lakh, deposited 7 lakh. All in all, 16 lakh it turns out to be. Deposit. Total of deposit shall be taken. Simple. Since the opening of the account, take the total of deposit. That's the only thing you have to take. Seems fair. Three things you don't have to take. First thing, sir, for example, if you withdrew any balance and deposited back the same balance, it has happened that sometimes you withdraw from bank and you deposit back because it was of no use. So if you withdraw from the bank and deposit the same amount back, now in that case, it is not considered as a taken. It is not taken. If you withdraw some money and deposit back the same money, that is not taken. Seems fair. If you withdraw and deposit back, then it is not taken. Again, that's fine. First thing, any deposit withdrawn and again deposit back, it is not taken. Second thing that you don't have to take is, sir, any asset acquired. For example, if I have a 16 lakhs of deposits, out of this I took 4 lakh rupees and bought a house. And that house is also covered under black money law. That house is also covered under black money law. See, the value of 4 lakh is already included in the house now. I mean, this 4 lakh has already been included in the house now, so we shall not take in bank balance. We shall reduce this 4 lakh from here. If any asset is been acquired out of the bank balance now, and that asset is covered under black money law, so we are not going to take the that value from the bank. What did I say? Two things we don't take. Right now I told you just two things. First thing, sir, any withdrawal and then deposited back, such deposits are not taken. Second, anything withdrawals made to acquire a new asset and that new asset is covered under black money law, that then to that amount is not taken. And third thing, what is not taken is, sir, for example, on this given date, I declare my account. I declare my account. Is it possible that I declare? Right answer is yes, I declared my account on this day under Income Tax Act. Later on, if I deposit some extra money na, so I shall deposit some, I have to undisclosed portion will be the only the extra ones. Only the extra ones would be the undisclosed portion. The things that I have already disclosed now is not the undisclosed one. That I have already disclosed will not be subject to exit this black money law. So what did I say? You have to take the deposit. But three things not to be taken. If account has been declared, before declaration, any money you don't have to take because it has already been declared. Second thing, if any withdrawal is done and deposited back, in that case, such deposit is not taken. Third thing, if withdrawal is done and it is in the form of some asset, then if asset is taken now, then withdrawal, then such deposits are not taken. Such money is not taken. Such money is excluded from bank. So did we understand how to calculate the bank balance? Deposit, excluding three things. Withdrawal and then deposit not taken. Withdrawal in the form of asset not taken. Third thing, once declared, so new next time now only that portion shall be taken which has not been declared. This is the value of the assets. This is the value of the bank account that we will calculate. Sir, is it possible that I have some partnership firm interest in the foreign? Rahul, as a partnership firm, I have an interest in partnership firm. For example, I am a partner in Rachel PLC. Yeah, Rachel LLC, I am a partner. Is it possible that I can be a partner as well? Sir, it is possible that I can be partner as well. It is possible. In that case, how do we compute? In that case, how do we compute the value of the house or partnership firm? Sir, for example, there are Rachel PLC has multiple partners. Rachel, Ross, Rahul. There are three partners. Okay. First of all, Rachel LLC, you have to calculate the net assets. How net assets are calculated? Whatever the valuable articles are there, like jewelry, like shares, like building, like printing, like such things like immovable property, you shall take at FMV. Other assets shall be taken at book value and reduce liability. This will give you net assets. That this net assets are always distributed in the ratio of their capital contribution. For example, Rachel contributed 5 lakh, Ross contributed 6 lakh, but Rahul contributed 10 lakh rupees. So first of all, capital contribution shall be done. So for example, our net assets are say 50 lakh rupees. Always, first of all, capital contribution is done. How much capital contribution is done? 21 lakh is being done. 21 lakh is the capital contribution that is to be distributed first, always. So for simplification, let's assume 9. So 20 lakh is the capital contribution done. Always net assets are to be distributed in the ratio of capital contribution. Perfect, sir. Second thing, sir, whatever the money remains, this 30 lakh rupees, whatever this money remains, this shall be distributed in the ratio of dissolution. By default, it is mentioned, by default, it is distributed in dissolution ratio. If dissolution ratio is not given, then such shall be distributed in the ratio of profit sharing ratio. This remaining 30 lakh would be distributed in dissolution ratio. If dissolution ratio not given, then profit sharing ratio. What is profit sharing ratio? Assume it's equal. So 10 lakh, 10 lakh, 10 lakh. So overall value of my share is 19 lakh rupees. First, capital contribution, entire money to be distributed. Then whatever remains is to be distributed in dissolution ratio. If not, then capital ratio. PSR ratio. Asset transferred before valuation date. This is important. Understand. And this is the essence of entire black money law. Otherwise, we don't have anything in black money law. For example, Kumar acquired asset on 1st April 2010 for 10 lakh rupees. On 1st April 2022, he sold the asset for 15 lakh rupees. NRV on that day was 14 lakh rupees. On 1st April 2025, department finds out, oh, Kumar had asset and Kumar sold that asset. See, ideally, he should be charged to taxes. If he has sold this asset, he should be charged to taxes. How much taxes he should be charged? Sir, ideally cost, sales price, or NRV, whichever is higher. Cost, sales price, or NRV, whichever is higher is to be charged. Whichever is higher, we shall take, that is 15 lakh is to be charged. So if any asset is sold before the valuation date, cost, NRV, sales price, whichever is higher is to be charged. All the assets, can you all just read out all the assets for me? Can you all read out all the assets valuation techniques with me? See if you have any jewelry, art, precious stones, cost, NRV, whichever is higher. Quoted shares, cost or average trading price, whichever is higher. Unquoted shares, cost or A plus B minus L divided by PE into PV, whichever is higher. Immovable property, unquoted preference shares, unquoted bonds, cost or NRV, whichever is higher. Bank account, we shall take deposit, but any withdrawal done and deposited shall not be taken. Any asset taken or any asset bought shall be reduced from bank account. And at last, sir, if bank account is declared later on, whatever deposits are being done, that are only taken. If we have any partnership firm interest now, then we shall take the first of all in the ratio of their capital contribution. Then whatever remains shall be taken in the ratio of uh, profit dissolution ratio. If it is not mentioned, then profit sharing ratio. So if any asset is transferred before valuation date, we shall take sales or cost, sales or FMV, whichever is higher we are going to take. Sir, seems fair. One question now I have for you all, and you have to answer what I have done is correct or not. One question I have to one question I have for all of you. All of you shall participate in this one question. On 1st April 2001, I had a house acquired for 15 lakh rupees. On 1st April 2015, I sold the house for 22 lakh, NRV 18 lakh. This 22 lakh was deposited in bank account. Plus other deposits 13 lakh. Plus other deposits 25 lakh. All in all 60 lakh is the amount. On 1st April 2023, I withdrew 35 lakh rupees from here and bought a new house whose NRV on 1st April 2025 is 48 lakh. Assessing officer finds out these assets. Assessing officer finds out these assets. What he did, let me tell. I'm highlighting and doing that in red. What he did. He saw, Acha, you sold an asset. Oh, you sold an asset. Cost 15 lakh. NRV 18 lakh. Sale value 22 lakh. Whichever is higher, 22 lakh is being charged to taxes. He charged 22 lakh as taxes. Then bank account, deposit. 22 plus 13 plus 25. 60 lakh taxed. Oh wow. Bought a new house, cost is 35 lakh. NRV 48 lakh, whichever is higher, 48 lakh is tax. Totaling all of them, 48 plus 60 plus 22. 130 lakh have been taxed at 30% rupees. Can you all tell me what mistake the assessing officer did? Can you all tell me what mistake this assessing officer has done? Can you all tell me what mistake this assessing officer has done? Sir, you only tell now. You only tell. Always, always follow the real step from the back. Understand what assessing officer has done. Sir, sir, if house is acquired before and sold thereafter, what should be the amount taxable? Sir, 22 lakh is fair enough. Whatever the value that has been acquired Whatever the value that has been acquired, that is fair enough. See, this is the amount should be charged to taxes. But sir, don't you think that this 22 lakh rupees is already included in this bank account? When we have taken 22 lakh, when we have taken the 60 lakh rupees, when we have taken the 60 lakh rupees, can I say that out of the 60 lakh rupees, 22 lakh has already been included? So this 22 lakh rupees is taxed twice. So if your value, if house's value is included in bank account now, sir, we shall not charge taxes. This will not be taxed because it is already included in the bank now. Done, sir. In this entire bank process, how much money is there? So 60 lakh is money. 60 lakh money is there. Should this be entirely charged to taxes? Should this be entirely charged to taxes? Sir, 60 lakh is the money. Apna paisa money. 60 lakh is the money. Out of the 60 lakh rupees, how much should be charged to taxes? Sir, 35 lakh is that component that is already included in the houses. I have already told you. If a value is already included somewhere, we don't take that. In the bank balance, we don't take that. So out of 35 lakh, out of 60 lakh, 35 to be reduced. So bank balance would be nothing but 25 lakh only. Oh. And house is fair. House is fair. 35 or 48, whichever is higher. So 48 will be higher. Whichever is higher. 25 plus 48. 73 lakh will be the value. And on this 30% would be charged to taxes. Just mention this point. Did you understand this point? What did we do? Did you understand what did we do? Did you understand this point? See, what my basic point is, if any asset is being sold and its value is included in bank, why are we going to tax that? Ultimately, in bank, it is covered. Or I should say, if any asset's value is included in subsequent asset and we are taking subsequent asset, don't take the old asset. Here, we will not take the old asset because value is already included in bank. When considering banks, almost every value will be taxed in bank, but some portion of the bank will be taxed, some portion of bank will not be taxed because some portion of the bank is included in the immovable property. So we shall not tax that. That is how it is being done. The example, as it is word to word example, has been mentioned in book as well. Now, as you said, sir, comparison word. As I have said, if you would write comparison, and I will share the comparison sheet with you all. I have made comparison sheet. Valuation rules. Just understand, under slum sale, accredited tax, and under black money law, what's the basic difference? Under slum sale, na, we take FSDV, whereas under accredited tax, na, we take SDV or FMV, whichever is higher. But under black money law, we take cost or NRV, whichever is higher. Sir, under black money law, why don't we take SDV? Arey Baba, SDV is an Indian concept. Black money is about foreign assets. How can we have stamp duty value of a foreign asset? Arey Baba, there is no stamp duty applicable in many countries. So there is no stamp duty concept in everywhere. Okay? Shares and securities. Sir, in slum sale, whenever shares and securities have been given, you have to take FMV, and method of FMV is not given. In accredited tax, sir, whenever you have quoted shares, you shall take average trading price. But if you have unquoted shares, now you shall take A plus B minus L divided by PV into PV, P into PV. If you have unquoted securities, now then you have to take FMV as per chartered accountant or merchant banker. Unquoted securities like bonds and preference shares. But under black money law, quoted shares are taken at cost or average trading price, whichever is higher. Unquoted shares as it is you will take, and unquoted securities under black money law, cost scenario whichever is higher. Cost scenario whichever is higher shall be taken. Cost NRV whichever is higher you are going to take. If you have jewelry under slum sale, you shall take at open market value. If you have jewelry under slum sale, you shall take FMV. If you have jewelry under black money law, you shall have cost or NRV whichever is higher. If you have any other asset under slum sale, you shall take at book value. If you have any other assets under trusted taxation or exit tax, building will be sorry, business undertaking will be taken at A plus B minus L. Other assets shall be taken at FMB. But sir, if you have any other assets in foreign country, black money law, then undertaking will be taken at A plus B minus L. Bank account we shall take deposit. If you have any liabilities under slum sale, we shall take at book value. Under black money, under the exit tax, we shall take at book value. But under black money law, no liabilities are allowed. No liabilities are allowed. No liabilities are allowed. Absolutely no liabilities are allowed. This is the difference. Let me paste this difference in Bhula series and I will upload this Bhula series episode for you all. Basics. I will upload this Bhula series as well. If you have not checked out the Bhula series is a very excellent series. I mean, for your understanding, it will clear your concepts like beauty. You will enjoy it a lot. Just to do it once. Just to try doing it once. You will enjoy it a lot. Enjoy it flawlessly. Okay. 6 episodes are already out. It till exams, my target is to have at least 15 episodes. It is available with English subtitles, English, what do we say that? English audio track as well. We understood how do we value assets in black money law. We understood that. That was the basics. We understood that. Moving further, what our other point is. Now, what other issues in black money law are there? Now try understanding that. First thing, sir, whenever we have asset outside India, undisclosed foreign asset outside India, we might have assets in Germany, we might have assets in France, we might have assets in USA, we might have assets in Somalia, we might have assets in Japan, we might have assets in Australia as well, in China. It is in Hindi, sir. But if you go to settings, no, there is option to change your track. Audio track changes there. Auto dubbing has been enabled. It is just a 10 minutes video. You can refer that as well. And auto dubbing is as beautiful as my voice. It is, I mean, their days are not far enough that it will be available in Tamil as well. My audio will be available in Tamil as well. Tamil, Telugu, Kannada, Malayali, whatever language you want, it will be available. Even if I don't know even a word of Tamil, Telugu, Kannada, Malayali, you can change the language, okay, of the audio. Small audios, the YouTube allow the language option, but in big videos, they don't allow. Just imagine understanding entire black money law in Kannada or Tamil. I mean, I cannot even imagine. I cannot even imagine. I don't even understand a word. Very difficult. I mean, with very difficulty, I understood Parakudu and I understood Maru Makkal. That's enough. More than enough. More than enough for my understanding. See, now my point is, whenever you find any undisclosed foreign asset in different countries, sir, you will not value the assets in rupees. Value of assets is not in rupees. Okay? It is always in foreign currency. It is always in foreign currency. Now, if asset is in foreign currency, issue involved is how do we value that? I mean, India wants to tax in rupees now. How can we tax in dollar? Lawmaker says, just check out whether RBI reference rate is available on 1st April. For example, dollar reference rate is available, take that. Chinese reference rate is available, yuan, take that. Dirhams, Dubai available, take that. But sir, what about reference? It is not available. For example, I have assets in Egypt and Egyptian currency exchange rate is not quoted in India. How do we do that? Sir, convert that into $4 and then convert it into rupees. In that manner, you shall be able to do that. Use your AFM skills, and in that case, you will be able to do that. Sir, what all assets or what all incomes are covered under black money law? Lawmaker says that if you have any sir, then please do small videos. I do na, I really do. I really do. Small videos of this Mula series. I have come up. 6 videos are already live. Today penalties will also be uploaded. Tomorrow TDS rates. Day after tomorrow NR taxation rates. Then valuation rules. I have multiple things planned, but these marathons take up my entire energy. These marathons take up my entire energy. That is why most oftenly I am not able to put that. But yes, these marathons are the first priority. I have MCQ summary booklet. You will not believe that. You will not believe that. See, somebody who is watching, just let me show you. Let me show you. This is one-liner MCQ summaries. Every year I come up with one-liner MCQ summaries. That ICI case studies, 35 case studies we have now. ICI case studies, 35 case studies. Every case studies has been solved by me personally. Whatever the intricate points were there in each and every case studies were identified by me. And those case studies pointers have been pointed out. See, for example, case study 12. More than one conditions can apply to become associate enterprise. Everything that is a tricky point in this 121, I mean, in that 35 case studies has been mentioned. And that is a sheet that I have made. And this is also under process. I mean, I have too much of things planned for you all, but time is the only issue. Energy is the only issue. Okay. What Janvi says, sir, gross up versus net in September in DTAA, they didn't gross up even in DTAA. Janvi, I saw DTAA Jan September 25. They gave marks to those who grossed up. I have seen answer sheets. They gave marks to those who grossed up. So if received word is mentioned and it is a question of DTAA, it is a question of NR taxation, you can gross up. They are going to give you marks. They are going to give you marks. Did you understand? Okay, sir, we got that. Section number 4 under black money law. Sir, black money law section number 4, what it says, what all incomes would be taxed under black money law. First of all, sir, if you have any income outside India and you have not disclosed that income, if you have any income outside India and you have not disclosed that income, see, that was not given in suggested answer that you are asking now. Ki grossing up was not given in suggested answer. But those who have grossed up now, ICA has given marks for that as well. I have seen answer sheets getting full marks in DTAA with even with grossing up. Okay? Then income outside India not disclosed, then such money will be covered under black money law. Second thing, you have income outside India. You have income outside India and you did not file ROI in the current year. You did not file ROI in the current year. Third thing, if you have any undisclosed foreign asset outside India, such thing shall be covered under black money law. So there are two things excluded from the scope. For example, if you have any asset outside India that has already been declared to income tax or that has been already covered under black money law, that is excluded from the scope of black money law. How are we going to calculate the value of the asset? For example, we have a jewelry outside. We understood the cost, we understood the NRV. We took the higher of the value and we taxed that at the rate of 30%. So don't you think that we should get some deductions? If we have done some expenditure for that, if we have done some valid, legitimate expenditure, don't you think we should get deduction? Right answer is no. If any asset is charged under black money law, no deduction against that asset is allowed, even a bit. Not even a bit it is allowed. Not even a bit. Not even a bit. Bit means not even a penny deduction is allowed. Sir, what about cost? Sir, we had paid money to acquire the asset. Arey Baba, it will not be allowed. Why it will not be allowed? Just understand it reasonably. Money that you have used is the black money only, na? That is why if they would give the deduction of the black money, then what is the concept left? No cost of acquisition, no deduction would be allowed against any assets. Okay? But sir, there is a catch. For example, if you acquired Facebook shares of 10 lakh rupees each, out of the 10 lakh, 4 lakh was white money and 6 lakh was black money. As of now, these Facebook shares of 10 lakh rupees have gone to 50 lakh rupees. Then whatever the portion you have incurred in white money, that will be allowed. So how much? Absolutely 4 lakh would be allowed. 46 lakh would be your value of asset. What did I say? If you have bought some portion in white money now, then absolute amount of black white money that you have put, that absolute amount you can reduce from cost. If you have white money now, then absolute amount of white money can be reduced. Okay? Absolute amount of white money. Second thing, Absolute amount of white money can be reduced. Second thing, sometimes what happens is now if you buy immovable property out of 10 lakh rupees, now which immovable property is available at 10 lakh rupees? That's not the question. Okay. White money is 4 lakh, black money is 6 lakh. If this immovable property moves to 50 lakh rupees, now then white money is allowed on proportionate basis. See, 40% is the white money, so 20 lakh you can get deduction. White, in this case, if it is an immovable property, your value would be 30 lakh. So for normal any asset, now for any normal asset, you are don't get deduction of proportionate white money. Absolute white money you are allowed to reduce, but for immovable property, you can reduce your actual white money paid in that proportion of increase. Penalties under black money law. See, if undisclosed income has been taxed or undisclosed asset has been taxed now, then whatever the tax amount is there into three times, tax into three times is the penalty. Sir, what if you did not furnish the return with respect to foreign assets? This was asked in Jan 26. Huh? If you did not furnish return of income with respect to foreign assets, sir, 10 lakh is the penalty amount. Sir, if you furnish the return but you did not furnish the information or furnish the inaccurate information, then 10 lakh rupees is the penalty amount. Sir, if your bank account is up to 5 lakh rupees and you fail to disclose that, sir, penalty will not be applicable. Taxes would be charged, whatever the undisclosed asset is there, that will be charged, but penalty will not be charged. For example, black money law. Under black money law, your assets found are 1 crore rupees. On that, 30% taxes are charged, that means 30 lakh rupees. Plus 3 times, yani 90 lakh penalty is also charged. Sir, if you fail to pay the taxes, in that case, 100% of the taxes will be the penalty again. Taxes, 30 lakh rupees, 100%, that means 30 lakh extra would be charged. Okay? 30 lakh extra would be charged. If you fail to answer a question raised by IT authority, if you fail to sign any sign statement in a proceeding, if you non-comply any summon, in that case 50,000 to 50,000 to 2 lakh is the penalty charged. Prosecutions are same as income tax. We don't have to study that. Now listen, remember, there was a benefit given to some small foreign asset holders. Sometimes what happens is, for example, Janvi was working in Google. Example, she was working in Google. She got some ESOPs. It is possible people gives when companies do gives ESOP to their employees. Janvi received some ESOPs. Now, issue with Janvi is now whatever ESOPs she received, she came back to India and she forgot to disclose. She forgot to disclose. Now, issue involved is now if somebody forgets to disclose, this shall also be charged tax because it is undisclosed foreign asset. Undisclosed foreign asset. So that shall also be charged to taxes. Lawmaker says even though it will be charged taxes, that is a different matter altogether. But penalty on that will not be applicable if foreign assets are up to 20 lakh rupees. If you have any foreign assets, if you have any foreign assets other than immovable property up to 20 lakh rupees, na, then no penalty would be charged. If you have any jewelry, if you have any shares, if you have any if you have any unlisted companies, any assets if you have, na, partnership share, if it is up to 20 lakh rupees, bank account, if you have up to 20 lakh rupees, penalty will not be charged. But sir, what if you have an immovable property? Even a rupee of immovable property and you did not disclose, penalty would be charged. So it is just a relief from penalty. If you have assets up to 20 lakh rupees, other than immovable property, penalty will not be charged. If you have assets as immovable property, even a rupee will attract the penalty. So simple as it can be. Come on to question answers of black money law. We do have some question answers to be done. Black money law. Mr. Deepak, is 5 lakh covered in that 20 lakh? Yes, 5 lakh is covered in that 20 lakh. For bank account is for bank account it was just 5 lakh rupees, but now 20 lakh for all the assets. That is it. Mr. Deepak, age 45, is an Indian citizen settled in California, US. I said not this question. Try solving this question. Next question. Next question is important. Huh? Mr. Rohit is an Indian citizen returned to India in 2013. Okay. March 13, to assume the role of CEO of ABC Private Limited Indian Company. Okay. He served in the capacity on 1st April 2013 to 31st March 2020. 31st March 2020. This was the period. Prior to this, up from 2002 to 2013, he was working in USA. After 2022, he went to USA for permanent settlement. That means, can I say, whenever he was in India, that was his golden time. He was living his Amrit Kal. He was Vishnu Guru at that point of time. But before that, he was in United States, which is a black era. After that, also a black era. Being in the United States is a black era, but being in India is a golden era. It is Amrit Kal. Okay? This is Amrit Kal. How do you understand? How do you understand these words like Amrit Kal if you don't understand Hindi? I mean, I don't know. You know what Amrit Kal is? I mean, our honorable Prime Minister has turned up. I mean, termed a coin. Coined a term called Amrit Kal. After 75 years of independence, up to 100 years, these 25 years are Amrit Kal. How Amrit Kal? Why Amrit Kal? We don't know. But he has termed up. He has termed up. I mean, coined a term called Amrit Kal. I don't know you understand that well or not. I mean, what do you understand now? See, Rohit visits every year only 1 month during the stay in USA. Okay. So after 31st March now, for he visits only for 1 month. That means can I say for previous year 25-26 he shall become non-resident? Because if he stays for 30 days, he can never be resident. So in current year, he is always non-resident. So he can be only charged to taxes if he was resident in the year of acquisition of the asset. If he was a resident in the year of acquisition of assets, then only he can be charged to taxes. Acha. Listen very carefully. Yeah? It was found that when he was CEO, he accumulated wealth. Array, this is very common fantasy I have seen. When people are working in the United States, no assets is accumulated, no wealth is accumulated. But when people come to India, all of a sudden wealth accumulation starts. Very strange. Shares of listed company acquired in USA in December 2012. So in 2012, shares were acquired. Can these assets be covered under black money law? Right answer is no, this cannot be covered. Why? Because year of AO noticing, it is not, he is not resident. Plus, in the year of acquisition, also he was non-resident. So this cannot be covered under black money law. Acquired one apartment in London for 20th April 2015. 2015 now. April 2015. Can this be covered? Yes, because he was in the Amrit Kal. Whatever government he was in Amrit Kal, so that asset will be covered. He was resident when asset was acquired. He has established a leather manufacturing unit in Malaysia, 15th April. So after he went from India, 15th April is the time when he acquired a leather manufacturing unit. In this case, what happens? So this shall also not be covered because he is non-resident for the upcoming year. He has also earned a commission acha from foreign buyers outside India during the period April 2013 to March 2020. So for the period of Amrit Kal, for the period for which he was in India, he earned a commission as well. Oh dear God. I mean, I never understand this concept that how people can earn more when they are in India. Why they are not able to earn these things when they are outside? In April 2025, AO noticed and issues notice under black money law. Is the notice by the AO tenable? See, first of all, for this shares, it is not tenable. For apartment, it is tenable. For leather manufacturing, not. For commission up to April 2015, it is not valid. After April, it is valid because black money law came after now. So it is that only. It is this concept only. Question was easy peasy. My question to all of you is sometimes, for example, AO notices. In our case, AO noticed in April 2025 and he issued notice on June 2025. This is what happened in case of notice and issuing notice. But sir, what if AO notices in Feb 25 and issues notice on 15th May 25? What will be the previous year? In this case, now you don't have to check the date of notice. You have to check in the date in which AO notices. Year relevant is year of notice, not the year in which notice is issued. The date in which AO finds out that asset is there. Then only in that year only government can tax it. So, okay, got that point. We got that point. Beautifully, we got that point. That's it. Done with black money law. Wow, sir. Just 3 hours and 5 chapters done. 3 hours and 5 chapters done. What else we want? If we would have done these of our own, we can assure, sir, we would have taken entire day. I would not take credit for this. I would give credit to you because you have been seated here. Then only I am able to solve it. I am able to teach it. Come on to next chapter. That is come on to next chapter. That is clubbing. I know you will sit for tax audit till last. Okay? For tax audit, you will sit till last. I know. I know what's the issue in tax audit. So you will sit till last. Let me complete the other chapters in between because till the time tax audit starts, na, you have focus. Once tax audit is over, you will feel lethargic to study. So let's start clubbing first. It will take just 10 to 15 minutes to complete this clubbing chapter as well. Sir, you play with our brains. You are playing with our brains. Yes, I am. Yes, I am. Do what you can do. Now you have started watching. You cannot miss out. And since you are watching live, you cannot even skip to the good part. Come on to clubbing. Okay? See, clubbing is a chapter. Very easy chapter, but in exam, if it is asked na, in Jan 26, it was asked. One MCQ was asked, and you will not believe, but I was the one who was. I mean, I'm missing out that word, but so many bad words I heard just because people were not agreeing to my answer. You will not believe this, but when answer key came out now, I checked my answers from answer key and 28 marks I got. One question I went wrong because I knew it was wrong. As soon as I uploaded the video now for MCQs, I knew one question I made wrong because at the time of checking the answers, now, I mean, at the time of reviewing my answer sheet, I felt that I read something wrong because of which one MCQ went wrong. Otherwise, 28 marks were correct. Every MCQ that I suggested now was correct. There were many faculties for which who didn't even score 22 marks in MCQ. I will not name them, but many faculties don't even score 22 marks in MCQs. They gave suggested answers for MCQs and didn't score 22 marks. So I got a lot of hatred for clubbing as well because people didn't agree with my answer. That was the issue. And ultimately, my answer was correct. I'm not taking credit of anything. I'm just telling you, conceptually, you have to be strong to solve clubbing as well. It's not like that you already know from inter, so you will be able to solve, or skipping out is a better option. No. Even 2 marks in MCQ can create a difference between pass and unsuccessful. 2 marks can create difference between exemption and non-exemption. And for that matter, giving 10 to 15 minutes to chapter like this is important. Of course, you might study this of your own. But when I will teach you now, I will teach you from perspective of a faculty, perspective of examiner as to what questions are being asked. I will tell you Jan 26 exam question as well, and you yourself will give the correct answer without me telling you what the correct answer is. But for that matter, you have to sit till last. What is clubbing? Sir, clubbing is not relevant. Income is clubbed in your hands. In what cases? For example, if I have an asset, if I have a house, okay, and I receive rent on that house, all of a sudden I said to tenant that from tomorrow onwards, give this rent to Kumar. Provision says if you have an asset and you divert the income, lawmaker says that income will be clubbed in your hands. If you have an asset and you divert the income, whatever the income the other person is earning, that will be clubbed in your hands. Section 60. Sir, but what if I transfer the asset to Kumar and he is receiving rent? Will this be clubbed again? Lawmaker says check out whether it is a revocable transfer. What does that mean? Can I take this property again back from Kumar at any point of time according to my wish? Can I take it back? If I can take it back, then clubbing provision shall apply. If I can take that house, then income would be clubbed in my hands. But if I cannot take this house is to the Kumar. Kumar is the owner. Then clubbing provision shall not apply. If it is an irrevocable transfer, then clubbing provision shall not apply. What did I say? Asset I have, income transferred, clubbing apply. Asset also transferred, but it is an irrevocable transfer, then clubbing shall not apply. If it is a revocable transfer, I can take my asset back, then clubbing shall apply. Income will be clubbed in my hands. Of course, it might look fast. You can revise at any point of time. You can rewind the video and listen. Okay. Asset transfer to HUF. If I have any asset, for example, if I have a house, okay, I transferred this house to HUF. Lawmaker says whatever rental received by HUF now will be clubbed in your hands. If you transfer any house to your HUF at inadequate consideration or for no consideration, a lawmaker says that whatever the income is received by HUF, that is clubbed in your hands. Simple thing it is. So, for example, this is Rahul, brother 1, brother 2, and this is HUF. I transfer this out to HUF. Whatever the rent is being received by the HUF will be taxed in my hands only. It will be clubbed. But, sir, what about if this HUF undergoes partition and this house is received by brother number 2? Then this will be clubbed. Lawmaker says clear no. If HUF undergoes partition and your property is transferred to some of your brother, in that after that it will not be clubbed because your brother has become the owner. Clear and simple. But sir, after partition, what if this property is received back to you? In that case, of course, if it is received to me, clubbing, why would clubbing apply? Income is received by me, so clubbing would no clubbing concept. Now, if I am only receiving, why clubbing would apply? But sir, what if this property is received by my wife? Then in that case, it is clubbed in my hands. What did I say? I have an asset, I transferred it to HUF. HUF partitioned and this asset is received by my wife. Can I say directly, indirectly, I gave this asset to my wife only? So clubbing shall apply. If I gave this asset to HUF and HUF on partition gave this property to my wife, clubbing shall apply. Okay? Asset transferred to son's wife. Now, what do we call son's wife? I forgot. Son's wife was Maru Makkal. I forgot. What do we call son's wife? What do we call son's wife? I forgot, yeah. I really forgot. Son's wife in Tamil or Telugu or Malayalam, whatever language you speak. What do we call son's wife? Your son's wife. What do we call that in South India? Please let me know. See, if you have any spouse or if you have any son's wife, okay, so you have son and son's wife. If you transfer any of the asset to your spouse or your son's wife, free of cost or at inadequate consideration, Oh, Marumakal is the son's wife. Oh, ho, 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 ho. I thought the son-in-law is Marumakal. It is son's wife. Marumakal. Okay, okay, okay. So what is son-in-law? What do we call son-in-law? Your daughter's husband. Your daughter's husband. What do we call that? Okay. Marumakal. Okay, okay. Marumakal is son's wife. Okay, okay. I forgot. Sorry, Marumakal. I forgot. I really forgot. Really, yesterday I took example. I said the son's wife. I saw Damaji as Marumakal. My bad. Really, my bad. Now, what I was saying, yes. If you transfer any of your property to your spouse or your Maru Magal, in that case, what happens now? And if you transfer it at inadequate consideration or you transfer it without consideration, you shall be the deemed owner. Whatever the income is earned by them, that shall be clubbed in your hands. Whatever the capital gain they incur, that shall be clubbed in your hands. Whatever the losses they incur, that shall be clubbed in your hands. Simple thing it is. But sir, there is an inherent condition. I had a property. As soon as I married my wife, my better half, she said, AG, you have not given any gift to me. I said, what gift you want? She says, there is a plot nearby. Don't you think that I should have a property of my own? I said, Arey, why not? Take this property. The day property got registered in her name, all of a sudden, she fails to recognize me. I'm asking, how are you? She says, who are you? I'm asking, how do you do? She says, who are you? I mean, she fails to recognize me. the day property got registered in her name. Lawmaker says if husband and wife are divorced or they live apart, then in that case, clubbing provision shall not apply. Ideally, whenever you give any property to your spouse or son's wife, clubbing shall apply. But if the relation is not existing, husband wife relation is not existing, if son's wife is not existing, or if she is living in apart, she is living separately, in that case, clubbing provision shall not apply. Clubbing provision shall not apply. Sir, okay, fine, fine, fine. Sir, what happens sometimes? You take money from your spouse and invest in business. You take money from your spouse and invest in business. What happens in that case? Sir, this is Rahul, and I have 10 lakh rupees in my business. Out of this 10 lakh, 6 lakh have been my money, and 4 lakh has been my spouse money. And after an entire year, I earned, for example, 8 lakh rupees. Lawmaker says, whatever the profit that I earn, out of this profit, some portion would go to my wife. Whatever her contribution is there on the 1st April of the previous year, whatever her contribution in my capital is there on 1st April, that portion will be taxed in her hands. So out of this 8 lakh rupees, 40% is my wife's contribution. So 3.2 lakh would be clubbed in the hands of my spouse. That is how clubbing provision apply. Sometimes what happens is, if I have a property and I cannot give it to my wife, I cannot give it to my maru makal, I cannot give it to them. But sir, it is possible that we might give this property to third person. And that third person is being instructed that whatever benefit he receives from the property, that benefit shall be passed on to my wife or son's wife. Lawmaker says that shall also be clubbed. If a property is given to third person with an instruction that the benefit should be passed on to wife or son's wife, in that case, that shall also be clubbed. Now, section number 64, what this says, section number is not relevant in clubbing. What happens is, sir, for example, if I have a business, business means, if I have business means I have substantial interest in a business, 20% or more voting power, 20% or more profit sharing ratio, if I have a business. Or if my relative has a business, mother, father, brothers, LD, they have business means they have substantial interest in that business. And my spouse receives remuneration from that business and she is not even qualified. I have substantial interest in a business and my spouse is receiving remuneration from that business and she is not even qualified. Lawmaker says that whatever remuneration she is receiving, that shall be clubbed in your hands. If she is receiving any remuneration, then that shall be clubbed in your hands. If she is not qualified. Sir, but what if she is qualified then? Sir, then it will be clubbed in her hands. Sir, what if she is also substantially interested in your business? In that case, what will happen? Sir, clubbing provision shall apply to the ones who has higher income. Clubbing shall apply who has the higher income. Before clubbing provisions, whoever has the higher income, that in that hand, it shall be clubbed. Clear, sir? Very clear. If both of them have substantial interest and both of them are not qualified, in that case, it will be clubbed in the hands of the person who has higher income before clubbing. Section 64. Clubbing of a minor income. See, first of all and last of all, everything summarized in a line, every income of minor is clubbed in the hands of the parents except for three. Every income of minor is clubbed in the hands of the parent except for three incomes. What are those three incomes? So, income due to labor, manual work. If you have any income on account of manual work, if you have any income on account of skill or talent, or if you have any account due to disability. So, manual work, for example, if there is a minor who cleans the glasses of the car on the road, whatever income he earns, that will be clubbed in his hands. For example, we have with us Janvi. Okay, Janvi have spelling issues. Janvi. Janhavi. Janhavi. You know, Janvi is just 17 years old. One day, she was walking around. Okay. You will call this example irrelevant. This is her leg. Okay. This is her leg. She was walking around and her leg's last finger struck this table. You know, I mean, you must have seen this now. Your leg striking your leg's last finger striking the corner of the table. It's very painful, very, very, very painful. And all of a sudden, a voice came out her A voice came out of mouth that was this and that is the day she realized that she has a talent for singing. That was the day that original sur tal came out of her mouth. That was the day she realized that she has ability to sing. Since that day, she stopped preparing for CA and she started singing. She has concerts all over the India. She has concerts even in Europe. That's ऐसा करके she concerts a lot. I mean, people are crazy for her concert. Like Sunidhi Chauhan, like Arijit Singh. People are crazy for her concert. People go to her concert like they want to attend. They just want to see the Janvi. With this concert, she earns 10 crore rupees. 10 crore rupees she earns. Lawmaker says that this 10 crore would be still clubbed in the hands of the parents. Sorry, this 10 crore would not be clubbed because this is the income of her talent. She has a talent, she has a skill of singing. Realize at a very early age. This will not be clubbed. But sir, what happens if this 10 crore is invested in uh, FD and she earns a 6% per annum? That means 5 lakh rupees per month she is earning just by interest. I mean, there are many CA final dropouts who earn 5 lakh package a annum. Janvi at the age of 17 is earning 5 lakh rupees per month as interest. Tell me whether this interest would be clubbed in her hands or in her father's hands, or it would be her income only. Will this be clubbed or not? Right answer is, sir, this will be clubbed. This will be clubbed because as we started, every income of a minor is clubbed except for three incomes. If it is hard work, if it is skill or talent, or if it is because of disability, these incomes are not clubbed. Apart from that, income on these incomes are always clubbed. Even if minor earn these incomes, these are not clubbed, but income on these incomes is clubbed. Second generated income is also clubbed. So clubbing provisions shall apply to every income of the minor except for these three incomes. This shall be clubbed. Income earned by investing above income shall also be clubbed. Okay? Very fair enough. See, whenever you have a minor, okay? Whenever you have income of a minor, okay? If mean you are a parent and income of a minor is clubbed in your hands, now what happens? If income of a minor is clubbed in your hands, now you get an exemption of 1500 rupees per annum. Not deduction, it is an exemption. It is not a deduction, it is an exemption. 1500 rupees per annum. Sir, how many child? If you have 5 on 5 children, you will get deduction. If you have 10 child, 10 deduction. 15 child, 15 deduction. 100 children, 100 deduction. Give example for disability. Arya, disability is very sensitive topic. Okay, very sensitive topic. If anybody is disabled, whatever income he earns, that will be taxed in his hands. Okay. You want time pass. You know, we are studying marathon. We are in marathon. We are in mid marathon. I can take example just to say you awake. This is not an example just to remember, make you things remember. This was an example just to make you awake. Okay. So disability example, that's a very sensitive topic. I will come up with some other examples. Okay. Now, whatever number of child you have, if you have 15 children, 15 deduction, 1500 into 15 children. Any number of children you have, that will be on every children you will get 1500 rupees per annum exemption. But sir, this exemption is only allowed in old tax regime. Under new tax regime, you don't get any exemption. Sir, for example, if a parent is having a minor and his minor's income is clubbed, in the hands of the parents. Later on, parents got separated. So minor's income would be clubbed in the hands of the parent with whom this minor lives. Done, sir. Sir, normally which parents' hands it is clubbed? The parents which is having more income before clubbing provisions. Done, sir. Next, we have cross transfer. What is this cross transfer? So, cross transfer is very simple. Let me tell you. This is Rahul, and this is my brother Mehul. This is Rahul's wife, or this is Mehul's wife. See, if I give money to my wife, whatever income she earns now, that will be clubbed in my hands. And Mehul gives any income to her wife now, whatever income she earns, that will be clubbed in the hands of the Mehul. So what we planned out now, I gave 10 lakh rupees to my brother's wife. She invested 10 lakh rupees at the rate of 8% per annum. And Mehul gave 8 lakh rupees to my wife. Why 8 lakh rupees? Arey bhai, he is my younger brother, so I allow him to give me lesser amount. And my wife is intelligent. She invested 8 lakh rupees at the rate of 10%. Okay, okay. We bypassed the provisions of clubbing. We bypassed. Now, how to correct that? How to correct that? Lawmakers are very clear in this sense. Sir, sometimes the people do cross transfers to evade the clubbing provisions. In that case, cross transfers are also clubbed. If I give any money to my brother's wife and my brother gives any money to my wife, then whatever the common amount is, then a common amount. 8 lakh is the common amount. Whatever the interest is being earned on this 8 lakh rupees, that will be clubbed. Mehul's wife is earning 8%, that means 64,000 rupees would be clubbed in the hands of the Mehul. My wife is earning 10%, that means 80,000. 80,000 would be clubbed in my hands. Common amount interest is clubbed. Whatever the common amount is there now, on that interest would be clubbed. Sir, what about extra that she is earning? That will not be clubbed because that is extra she is getting, so that will not be clubbed. Fair enough? Sir, fair enough. Remember, if I give any property to my wife, income on that would be clubbed for sure. Losses on that shall also be clubbed. Capital gain on that property shall also be clubbed. Remember, this is a very important point I'm telling. Done, sir. There was a case, there was a case. I gave my property to my wife. Why? In return, did not give me any money, but she gave me love. She gave me affection. True love. Genuine love and affection she gave me. And we both argued to assessing officer, sir, how can you say that we have not given consideration? See, if we give any property to wife and without any consideration or inadequate consideration, then clubbing provision shall apply. We are arguing she has given me adequate consideration. How can assessing officer put a price tag to my wife's love? She has been giving love to me. So love is an adequate consideration. We are saying that love is a consideration. Affection is a consideration. How can assessing officer say that there is no consideration involved? How can assessing officer? Who is he? Who is he to come between me and my wife? In that case, na Supreme Court came. I don't know it was Supreme Court or High Court, but they said that love is a consideration. Of course, love is a consideration. There is no price tag attached to your love. But the fact is, it is never an adequate consideration. Okay? So somebody might argue that they love us and it is the consideration. It might be consideration, but it is not a fair consideration. Okay? Love can never be fair consideration. Now, some pointers I want you all to discuss. Two things I want to tell, and we will be done with the chapter. Two things. First of all, this is Rahul, and I have debentures. 5 lakh debentures at the rate of 10% each, and I gave these debentures to my wife. Sir, will clubbing apply? Sir, will clubbing apply? My question to all of you, whatever the interest she is earning, will clubbing apply? Sir, clubbing will apply. Why clubbing will apply? Don't you think it is an exempt transfer? I am giving any capital asset to my wife. Don't you think it is an exempt transfer? And since she is my wife, no 56 to 10 will also apply. No gifting provision shall also apply. So why clubbing would apply? I am transferring a capital asset to my wife. So no capital gain. Similarly, my wife receiving the capital asset free of cost, it is a related party. So no clubbing shall apply. Why clubbing would apply? If I am giving asset to free of cost to my wife, why clubbing apply? Sir, because capital gain is a different transaction and income on capital gain is a different transaction. Capital asset transfer is a different transaction and capital gain is exempted on this transfer of giving this asset. I mean, giving away this asset is an exempt transfer. But income generation is a different transaction. No? My wife selling that asset is a different transaction. No? I am giving this asset to my wife is an exempt transfer. But income generation is a different transaction. She selling that asset is a different transaction. Okay? So that is why clubbing apply. That is why clubbing apply. That is the basic fundamental. I will come on to this point after 2 minutes. Just for a second. You all agree with this fact that clubbing would apply. You all agree with this fact that clubbing would apply. So on this 5 lakh rupees, 50,000 is the interest amount. This will be received by her, but clubbed in my hands. Correct? She will be the one receiving this interest, but it will be clubbed in my hands. Clubbing does not amount to receipt. It is very obvious that if somebody is receiving something, it does not mean that clubbing would not be done. Okay. Receiving some receipt might be done by somebody else, but as per Income Tax Act, income would be clubbed in my hands even if I am not receiving. Clubbing is not equal to receipt. Okay. So it is possible that my wife is receiving the interest, but clubbing would apply in my hands. It is possible. Sir, my wife invested this 50,000 rupees in FD and she earned 6,000 rupees on this FD as well. She earned 6,000 rupees on FD as well. Lawmaker says whether this would be clubbed or not. Right answer is no, this would not be clubbed, which means clubbing do not apply on second generated income. On accreted income, clubbing do not apply. On accreted income, clubbing do not apply. Second generated income, clubbing do not apply. If it would have been minor, if this would have been minor, then clubbing applied. But if this is second generated income, then clubbing would not apply. So that's fine. That's we got. Let me take an example. Let me take an example. For example, this is Rahul, and I have a son marrying, son getting married. Son's wife is coming to my house. And during my marriage, I thought that my son is nalayak. My son is nalayak. My son is bilkul useless. But son's wife is very intelligent person. So I gave a house to my son's wife. As in the marriage, I gave this house to my son's wife. This house yields rent. Provision says whether this rent would be clubbed in my hands or not. Sir, we are giving asset in the marriage, so isn't it exempt to transfer? Arey Baba, if I give my house to my wife, if I give any debentures to my wife, it is also exempt transfer, but exempt transfer is only from the capital gain point of view now. Capital gain would not be attracted in my hands, but capital gain is different thing. Income generation is a different thing. Income generation would be clubbed in my hands only. And if son's wife transfer this asset, again this will clubbing provision would apply because from my hands, I am transferring this house to my wife now. This is not clubbed. If I transfer this house to my wife now, it is not the capital gain applicable. But if my wife sells it, sorry, if my son's wife sells it, then clubbing provision would apply in that case. Income generation would also attract clubbing provisions. Exemption is only in the first step, only in the single step where I transfer this asset to the wife. Exempt transfer doesn't mean that ownership exactly transfers to somebody. I might become deemed owner of the property based on clubbing provisions. So two provisions can go simultaneously, and this was the same thing that is asked in exam. Just before 2 minutes, you said that if I transfer my property to my wife, you only said now. If I transfer my property to my wife, clubbing provision would apply. This is the basis of the clubbing provision that department doesn't want you to allow to transfer your income to your wife. This is the basic provision. Even though it is an exempt transfer, but still clubbing applies now. If you transfer your property to your wife, clubbing apply because department doesn't want you to transfer. So why do you think that in marriage, if you transfer your property to your son's wife, clubbing would not apply? Department in that case also doesn't want you to transfer the income to your son's wife. So exempt transfer is a different concept. Clubbing shall apply in exempt transfers as well. Clubbing is a different concept. Did you understand this point? This was the exam question that is being asked. Question answers of clubbing. So clubbing question answers. We will solve questions from clubbing also. Why not? Why not? Why not? Tax assessment officer Raghav was completed on 25th December 2024. Tax due was 28 lakh rupees. He has fixed deposit of 24 lakh. Can this be used to recover the asset? Yes. He has receivable of 27 lakh. Can this be used? Yes. He has a land that has been given to his son before 4 years and market value is 28 lakh rupees. Can this be used? Sir, son, if asset has been given to son, then clubbing don't apply. Asset given to wife, clubbing apply. Asset given to son's wife, clubbing apply. Asset given to HUF, clubbing apply. But asset given to minor child, clubbing apply. But asset given to son, a major son, clubbing do not apply. Diamond necklace to son's wife, can clubbing apply? Yes. Apartment in Australia, can clubbing apply? Yes, it will apply. It will be applied. Sir, but our tax due is just 28 lakh rupees. Why would clubbing be applied in all the assets? See, tax due is 28 lakh, but interest penalties we don't know. Therefore, we just have to tell what all assets department can use to recover the taxes. Now I think it's the right time to have a lunch break. Shall we have a lunch break? After lunch break, we shall have tax audit. Okay? For sure, we will have a tax audit. We will have tax audit. Okay? See, I am not in a hurry to finish the syllabus. I am not in a hurry. Because whenever I do Harinam, the next day my throat throttles. I am not able to take classes the next day. Okay, so I have tomorrow's class will be even bigger. It is day 2. Day 3 we will be having a category topic marathon where I have to cover capital gain, PGBP, IFOS, assessment of various entities, TDS, trust assessment. We have a lot to cover tomorrow. So I cannot put a pressure to my throat. I might go slow today, but yes, it will be as efficient as it is supposed to be. I'm taking lunch break. It is 2:15. Any provision regarding married minor daughter clubbing shall apply. The provision is in that case that she will be the deemed owner, but provision shall apply. Clubbing provision shall to married minor daughter also apply. That is not relevant. If I have a debenture, if I have property, if I give this property to her, she earns any rent, clubbing shall apply again. But yes, owner she will be. She will be the owner. Once she gets major, she can sell this property, then clubbing would not apply. That is the concept, not relevant as of now. 2:15 it is. I am giving you break till 2:40. You might have a lunch. After lunch, we shall start off with tax audit. I shall tell you how to write the answers, how to read the provisions, what all clauses are important. Sir, you said this before last break as well. Again, I'm saying the same thing. See you guys after the break. Welcome back from break. Are you all back from break? Welcome back from break. You know what? One thing I was willing to do, if you all agree. If you all agree, I was willing to start with penalties. I was willing to start penalties first, then we shall do tax audit, then we shall do club set off, and then we shall do deductions. If you all agree. Or you want penalties separately in Hula series. That would also work. So let's do tax audit first, then we shall decide. Meanwhile, you can tell. Meanwhile, you can tell. Sir, chapter tax audit and ethical compliances. Chapter is not a single chapter in itself. It has two folds actually. First one is basic tax audit. Second part is ethical compliances. In tax audit also, it is not linear tax audit. We have multiple provisions as to who is required to get tax audit. And then we have 44 clauses of ICDS as well. So we have multiple provisions. Not It is not a simple chapter, not a small chapter. Now, who is required to get books of accounts audited? Provision is very clear. If you are into business and your turnover is exceeding 1 crore in a previous year, then you have to get yourself audited. But here is a catch. If out of your total receipts, 5% are cash receipts and total payments into 5% are cash payments, then this limit of 1 crore would become 10 crore. Remember, whenever you take total receipts now, this shall include cash receipts, this shall include cash receipts as well. This shall include sales as well. This shall include capital gain receipts as well. This shall include rental as well. This shall include interest as well. Every receipt in the business, capital receipt, revenue receipt, every receipt shall be taken. Similarly, every payment, capital payment, revenue payment, every payment shall be taken. Cash payment, every payment shall be taken while considering the limit of total payments and cash receipts to cash payments. This is the case for business. If you are into profession, sir, if you are into profession like 44 AA, we have, if you are chartered accountant, company secretary, lawyer, advocate, if you have engineer, IT professional, doctor, architect, in that case, if your gross receipts exceed 50 lakh rupees, you have to get yourself audited. Third thing we have, if you are an SSC opting for 44 AD and ADA. For 44 AD till last year, you were paying 8%, 6% taxes. In current year, you declared lesser than 8%, 6%, then you have to get yourself audited. Similarly, for profession purpose, if you have professional income lesser than 50%, you are offering lesser than 50%, then you have to get yourself audited. Of course, your basic exemption limit should be more, sorry, NTI should be more than basic exemption limit. At last, sir, if you are 44A or 44BB or 44 triple B wale SSC, that means if you are going for presumptive taxation and you want to declare lower than prescribed percentage, in that case, you have to get yourself audited. But remember, whenever you pay taxes under presumptive taxation means 44AD, 44ADA, BBA, BBC, whatever presumptive taxation we have now, if you pay taxes under presumptive taxation, then audit is not required. At last, sir, if you fail to get your books of accounts audited, then what is the penalty applicable? 0.5% of the turnover or 1.5 lakh, whichever is lower. 0.5% of the turnover or 1.5 lakh, whichever is lower, is the penalty amount. When you have to get yourself audited, at least 1 month prior to ROI. So ROI due date, if it is 31st October, 1 month prior, that means up to 30th September. Or if you are a transfer pricing assessee, that means 30th November. So at least 1 month prior, that means up to 31st October. This is the due date till which you have to get yourself audited. Very simple it is. Whenever you calculate turnover for the purpose of audit, now how do you consider things while calculating the turnover? Whatever the sales are there, you shall take that. If there is any discount, sir, if there is any Returns, returns of current year, returns of last year, returns of last to last year, returns of last to last to last to last year, any year returns that have been returned in current year, now that shall be reduced from current year turnover. If you had sold goods 5 years back and they have been returned today, then too you have to reduce it from current year's turnover. Always understand this thing. So sales minus returns shall be taken. If you have given any trade discount means 40% off on all products. If you have given some turnover discounts, that is a part of your trade, that is in the nature of trade discount only. These discounts are simply reduced from turnover. Simply reduced from turnover. But sir, sometimes you give cash discount. What are those cash discounts? For example, if you sold goods and payment is to be received after within 10 days. If you make payment within 10 days, you will get 1% extra off. So this is a kind of finance charge. Any kind of cash discounts are never excluded from turnover. This is a finance charge debited to P&L separately. This is never reduced from turnover. Sometimes a special rebate is also given. For example, if you went to shopping and your bill amounts to 10,400, so you pay less than, you pay 400 less. This is what happens whenever you buy things at a price, for example 2100, so you pay just 2000 rupees, so 100 rupees is the rebate amount. Lawmaker says, yeah, provision says rebates, special rebates which are with respect to sales, this can be reduced from the turnover as well. If you are into share trading business, if you have a stock in trade as, if you have share securities as stock in trade, in that case what do? Sir, whatever the share sales are there, that shall form part of turnover. But if you have securities as capital asset, then they shall not form part of your turnover. At last, whenever you have multiple businesses, turnover of all the businesses are to be clubbed to determine the limit of the tax audit. Simple, sir, simple. Whenever you have to get yourself audited, you need to get two reports furnished from chartered accountant. It is either 3CA oblique 3CB plus 3CD. 3CA in some cases or 3CB in some cases, either of the two, plus 3CD you have to get furnished. When 3CA is furnished, when 3CB is furnished, it is important for MCQ. When chartered accountant is auditing the financial statements, giving the opinion on already audited financial statements. That means if accounts are already audited under any section, any Companies Act, any LLP Act, any Cooperative Society Act, if audit has already been done under any of the different acts, then chartered accountant is not required to give any opinion on the financial statements. Therefore, he issues 3CA. No opinion on financial statements required. Therefore, he issues 3CA. But sir, in case audit is not being done under any act, under income tax only audit is being done, it is a partnership firm, it is a proprietor, so lawmaker says in that case, whenever you sell now, whenever chartered accountant issues, the 3CB is issued, because in this case he has to express his opinion on financial statements also. So if already audited financial statements are there and auditor has to express your opinion, in that case the 3CA is issued. But if financial statements are not audited, auditor is required to present the opinion on financial statements as well. In that case 3CB is issued. Fair and simple. 3CA and 3CB is to be issued by the auditor. In along with that, there is a statement of particulars called 3CD. 3CD is a statement of particulars where management feeds the data, auditor has to cross-check and reports its opinion that whether the data given in 3CD is true and fair or not. True and fair or not, that is what auditor has to tell. Whether the data given in 3CD is true and correct, not true and fair, but true and correct is to be reported. ठीक है, subject to information given by the management. Whatever data that is fed in the 3CD is only based on books of accounts. Always remember, always the basis of 3CD is books of accounts. Clear cut. Sometimes what happens is some clauses are not applicable. For example, if I am a proprietor and I am being asked to tell the profit sharing ratio, I will have no profit sharing ratio. In that sense, I have to mention not applicable. Sometimes it is given. See, always this is a very important thumb rule. Whenever you feed 3CD, it is based on books of accounts only. It is always based on books of accounts only. Sometimes what happens is a single item is applicable in multiple clauses. In that case, what you have to do, you have to choose the most suitable clause and decide. Sometimes you are required to do the audit of old years. In old years, there was some different requirement. In current year, we have some different requirements. For example, in 2016, whatever the money at the time of demonetization you deposited in bank is to be reported. But in current year report, we don't have any such clause. So in current year, now whatever the most relevant clause is there, which resonates to such money deposit, you can report in that. Otherwise, you don't have to report. So you have to do audit based on current current tax audit report, not as per old tax audit report. Now there comes 3CD, basic and most important thing. We have 44 clauses, or to be precisely speaking, we have 50 clauses nearly 50 clauses. Out of that, only 11 or 12 you need to learn, and I will mention that 11 or 12. But I am telling you every clause for explanation purpose, so that in exam, if some of the other clause comes to your question now, you are able to at least click that, acha, that was a part of 3CD. You should be able to click that. That is why very briefly, very fastly, I am explaining all the 44 clauses. All the 44 clauses. Okay? First one is name. Name, if you are a branch, then name of the parent as well. Second is the address, registered address of the company or individual, address communicated to ITO. PAN number. Can SSC have more than one PAN? Right answer is no. PAN number you have to tell. Clause number 4. If you have any registration under indirect taxes, custom, excise, GST, VAT. If you have multiple GST, all the GST you have to mention. Your status like individual, HUF, AOP, BOI, artificial juridical person, mention that. Previous year assessment year. Under which clause of tax audit you are being audited? 44 ABA, ABB, ABC, ABD, ABE. This is what you have to mention clause numbers. Clause 8A. This says under which act, under which section you are filing return. 115 BAA, BAB, BAC, BAD, BAE. Are you opting for these regimes? You have to mention here. If you are a partnership firm, mention the profit sharing ratio of each partners, and if there is change in profit sharing ratio, mention that as well. Clause number 10. What is the nature of business that you are doing? And if there is change in nature of business, you shall tell. If you are doing more than one business, tell the list of all the businesses. Clause number 11. Did you maintain books of accounts as per 44 AA? If yes, what books maintained and where those books are kept? Does your P&L include any profit which is taxed as per 44A or as per any presumptive taxation? For example, I have P&L, I have sales, and some profit is transportation profit, transport profit, 10 lakh rupees. So you have to report in clause number 11, 12, so that department can take it off from here and charge in presumptive taxation, not relevant. Clause number 13. Which method of accounting you have used? Cash system of accounting or accrual system of accounting? If any of the method has been changed, if you have changed from cash or accrual, then what has been the impact of that? And clause number 13, see what this says. See, sometimes you prepare financial statement as per accounting standard, and same item is differently shown as per ICDS. Accounting standard might say valuation of inventory as 10 lakh rupees, whereas ICDS might say valuation of inventory as 8 lakh rupees. So there is 2 lakh decrease in income. So whatever the impact of ICDS is on your income computation is mentioned in clause number 13, part C. What was the method of valuation of the stock? Whether you valued your stock at cost plus method, FIFO method, LIFO method, what method you followed, and if there is change in method, what impact in the P&L has been given. Up to question number point 14, you don't have to learn anything. If you remember your basics, if you convert your capital asset into stock in trade, capital asset is stock in trade, capital asset is converted into stock in trade. It is possible that we might convert our capital asset to stock in trade. What happens if we convert? Lawmaker says if you convert your capital asset to stock in trade, now the date of conversion is important, and FMV of the date of conversion is important. Based on that, now we are charged capital gain, and later on we are charged PGBP. So whatever capital asset have been converted into stock in trade now is reported under clause 15. Description of capital asset, date and cost of acquisition, and amount of capital asset converted into stock in trade, everything is being mentioned here. Clause number 16. Clause number 16 is important. Up to clause number 15, we don't have to learn anything. We don't have to learn anything. Wow, sir. Wow, sir. Unexpectedly, we are very happy. Unexpectedly. Because willingly or unwillingly, 15 clauses not to learn any. One third of the clause is not to learn. First 15 clauses not to learn. Wow, sir. Wow, wow, amazing. Clause number 16 is important. Clause number 16 says items which are not credited to P&L are to be reported. What can be the case? Items not credited to P&L. What can be the case? First of all, item falling within the scope of section 28. See, there are certain incomes that are referred under section 28. What are the incomes referred under section 28? For example, import entitlements, duty drawback. These are the incomes that are part of 28. For example, you got some Thailand trip, that is also taxable now. If you did not credit that, so that has to be reported under this clause. If you got any refund, if you got any pro forma credit and that has been accepted by the authorities, then you have to mention here. Any escalation claims accepted, any other item of income that is not credited, any capital receipts that is not credited, you have to mention here. Clause number 17, not important. See, if you remember, if you have a land or building which is transferred at a price lower than SDV, if you have any land or building and that land or building is transferred at a price lower than SDV, then SDV shall become your consideration. If that capital asset is capital, if that asset is a capital asset for you, then 50C would apply and SDV shall become consideration. If that land or building is a stock in trade, then 43CA apply and then again SDV shall become your consideration. We have understood. We have to report here only. If land or building have been transferred at a lower than SDV, then SDV shall become consideration. That is what we have to report here. Clause 18. Depreciation. Whatever assets you have in your business, you have to tell depreciation. Depreciation, you have to tell what depreciation you have to tell. See, every category wise, every block wise. If you have 15% plant and machinery, opening plus purchases minus sales minus depreciation is equal to closing. Then 40% plant and machinery, then 20% plant and machinery. Then likewise, you have to mention depreciation for every block. Clause 19. If you remember section 35, sir, we had capital expenditures, very capital expenditure. For example, 33 ABA. If you are into tea, coffee, rubber business, you get 40% deduction if you deposit to NABARD. If you are into petroleum natural gas business, 20% standard deduction you get if you deposit it to site restoration account. This exemption you used to get. If you are into scientific research, you buy any capital asset. If you are into telecommunication license and spectrum, if you are into skill development, or if you are into agriculture extension project, if you are doing any VRS expenditure, if you are doing any amalgamation related expenditure, if you are doing any VRS related expenditure, so preliminary expenses, all these expenses if you have incurred now, this have to be mentioned in clause 19. Clause 20, very important clause from examination viewpoint. I personally think clause 20 is going to be tested in exam. I personally think 20 is going to be tested. Clause 20 talks about two things. Whenever you pay any sum to the employees as bonus or commission as a part of profit. If you have a profit, say 10 lakh rupees, you decided whatever profit I would earn out of that 5% I would go to employees. That would go to employees. 5% of the profit would go to employees. You have fixed that. Done, sir. Details of contribution received from various employees of various funds. Sir, if any employees contribution has been received, whether it has been paid up to that fund or not, that is reported under clause 20B. Okay? Remember, employees contribution received, whether it is paid up to that fund or not. Remember, there was a clause. Okay? There was a clause that if you receive money from employees now, that should be paid up to the due date of that fund. If you delay after that fund now, that is always disallowed. Always disallowed. There was some argument, sir. What if we pay up to ROI? Because, sir, it is a kind of contribution only. So if we pay up to ROI, it should be allowed. 43B should allow that. Lawmaker says no. 43B excludes employee contribution. 43B excludes employee contribution. Everything paid up to ROI should be allowed as per 43B. But 43B specifically excludes employee contribution. So even if you pay after the due date of ROI, it shall still be allowed. But if you pay after the due date of that fund, it shall be never allowed. It shall never ever be allowed. So very important clause according to me in exam. This is going to be tested, I think. Clause number 21. Again, very important. Till now, I have only told you three clauses: 16, 20, 21. Now, what is clause 21 speaking about? See, clause number 21 is very simple. Clause number 21 is very simple. What this clause number 21 says, see, clause number 21 talks about only the PGBP expenditures. All the PGBP expenditure that has to be disallowed. Let me tell you. See, if you have debited any item which is a capital nature, debited item to P&L which is the capital nature, any personal expenditure debited to P&L, any advertisement related expenditure or any political party. So any capital, personal, political party or any kind of violation of law, these are to be disallowed. Not just report here and department will disallow. Any item inadmissible on which TDS was to be deducted but did not deducted, or deducted but not paid to ROI. So TDS deducted, not deducted has to be reported under clause 21 as well. I will tell you clause number 34. Again, you have to deduct TDS. Again, you have to report TDS as well. Items debited to P&L being salary, bonus, commission to a remuneration inadmissible under 40B. What does this mean? See, if you pay any remuneration to partners, then up to a certain limit is allowed, 90%, 60% limit is allowed. If you pay beyond that, it shall be disallowed. So that has to be reported here. Apart from that, if you pay more than 12% of the interest to the partners, that shall be disallowed. That is reported here. Any payment made in cash in violation to section 40A3 is to be reported here. Provision for gratuity, if you have made, that has to be reported here. Any payment made by employer towards unrecognized provident fund, that has to be reported here. If any contingent liability has been debited to P&L, report here. Any expenses with respect to exempt income, for example, agriculture income is credited to P&L, take it off. Agriculture income's expenditure has been debited to P&L, added back. Amount inadmissible under section 36. What does that mean? See, for example, if you remember, if any asset is put to use, taken on loan, if any asset is bought on loan, till the date asset is put to use, now whatever the interest expenditure is there, that has to be added to cost. What did I say? If any expenditure, or if any loan has been taken for an asset, till the date asset is put to use, now we shall add the interest expense to the cost. So whatever the interest expense that has to be added to cost, that will be reported here, so that it can be disallowed from P&L. So these all the disallowances of P&L are reported under clause number 21. Very important. Majority of the questions will revolve around question number 21 on clause number 21 only. Clause number 22. If any item is inadmissible under section 23 of MSME Act, or any of the item inadmissible under 43BH. Remember 43 base, this was only asked in exams. In Jan 26 exam, there were some important areas I told that this was important. Clause number 22 was in my important list. In my important list, and that is why it came. I mean, not that is why, but it came in exam as well. So I personally think this time clause number 21 is likely to be asked. Let's see, fingers crossed. I will share the important ones. Clause number 21 speaks out any item inadmissible under MSME Act or 43BH has to be reported here. I personally think now this is not relevant. Clause number 23. Important. What does this say? If you have paid any sum to your related party, any sum paid to related party, it has to be reported here. Whatever the excess you have paid, then FMV, that shall be disallowed. That is why it has to be reported here. Important here. Clause 24. Now, clause 24 is difficult to remember. Let me make you remind. You remember section 33 AB. Section 33 AB. Tea, coffee, rubber business. Petroleum, natural gas business. 40% if you keep to NABARD, then you get deduction. 20% you keep to site restoration account, you get deduction. If you remember, in that business, there was condition that whenever you take out money from NABARD, such money shall be utilized in the year of withdrawal. First condition. Whenever you take out money from NABARD, that shall be used for the purpose prescribed. It shall not be misutilized. And third thing was, whenever you buy any asset, it should not be sold within 8 years. These were the three conditions with respect to the money taken from the NABARD. If you violate, then these were taxable in your hands, and that is what is written here. Profit tax, the profit deemed to be PGP under 33 AB in case of violation. Clause number 24, not to be learned. If you have any profit, under section 41, what is 41? 41 is deemed PGBP. For example, bad debt recovered. We have a trading liability cease off deemed PGPP we had. So that is also a part of 41, clause 41 that has to be reported here. I don't think that is much relevant here. Clause 26. Clause 26 talks about two things. That under section 43B, under section 43B, you had certain payments which were to be paid before the due date of ROI, then only these payments were allowed. So whatever the payments that were due have to be paid before ROI are to be reported here. If they have been delayed in current year, na, they shall be disallowed in current year. In addition to that, for example, if any expenditure was to be paid last year, but we did not pay last year, but in current year, if we paid now, if we paid in current year, it shall be allowed in current year. That is why that has to be also reported. So clause 26 has two requirements. First requirement is outstanding balance of the last year paid in current year, and current year balance outstanding till ROI. Both of them are to be reported here. Clause 26 important. Then we have clause 27. Any of the GST credit availed utilized. See, GST opening balance credit plus availed minus utilized will give us the closing balance. At last, any prior period expenditure incurred debited to P&L, that shall be taken off. That shall be reported. Clause number 27. See, clause 27 done. With just joyfully, we just did 27 clauses. Out of that, how much to learn? Sir, clause number 16, clause number 20, 21, 23, 26. 5 clauses I have asked you to learn in 27 clauses. That's fair enough. 28 cut down, 29 cut down. Wow. 29A, what does this clause talk about? See, if you have forfeited advance money, if you sell your asset now, you receive advance money. If that advance money is received before 1st April 2014, then the advance money is reduced from cost. If you forfeit after that, then it is taxable under IFRS. You just have to report it here. Then what we have, sir, if you have any money received as gift under section 56 to 10, that has to be reported here. Clause number 30 also not relevant. If you take money on account of hundi in cash and you repay that money on account of hundi in cash, that has to be reported here. That's so that they can make your income. Clause number 30 A, B, C, all of three important. All of the three are important. Clause number 30 series 30 A, B, C. What this talk about? Sir, for example, if you have done an international transaction, if you have done any international transaction, and on that international transaction you have given some benefit to associates, so whether there is a primary adjustment required to be done or not. If yes, what is the amount of primary adjustment to be done? If yes, then whether excess money that has been given to associate, whether it is repatriated back to India or not, or at last, sir, if not repatriated, how much interest you have charged as secondary adjustment, you have to report in clause number 30A with respect to transfer pricing, primary adjustment and secondary adjustment. Clause number 30B, what it says, if you have paid any sum to your associated enterprise as a form of interest, then 30% of EBITDA shall be allowed. Lawmaker says how much you have paid to your associate, you shall report here. Clause number 33, whether you have entered into any transaction which is impermissible. If you have entered any transaction which is impermissible, just mention the nature of the transaction and what is the benefit that is arising out of the aggregate transaction. This is clause number 30C. Clause number 31, again important clause. If you take loan in contravention to Tuition SS, you take deposit, you take advance in respect of immovable property in contravention to SS, or you repay the loan, repay the deposit, repay the immovable property in respect of advance in respect of immovable property in contravention to 269T, or you contravene ST. That means you take more than 2 lakh in cash. Everything is reported here. 31. 32. Furnish the details of. What does this mean, sir? Furnish the details of any brought forward losses if you have depreciation. If there is change in shareholding, I will teach you this in set off that the year in which you incur the losses now. So in that year, whatever the shareholding is, that at least 51% of the shareholding shall remain in the year in which you want to set off the losses. So if there is change in shareholding by more than 50%, you have to report. Any speculative loss, any specified loss is to be reported here. Not relevant. 33, section-wise details of deductions that you are going to get ATC, ATD that you have to report here. Clause number 34, very, very important. Very, very important. Why very, very important? This talks about three things. If you are supposed to deduct a TDS on a transaction, under which section? Nature of payment, amount of payment, amount on which TDS is to be deducted, amount of TDS to be deducted, amount actually deducted, amount actually paid. These are the things you have to report with respect to TDS. Other than that, once TDS has been understood now, you have to tell which forms of TDS are applicable to Q24, Q26, Q27, Q27, EQ. You have to report till when you have filed these return TDS forms. And at last, if you have paid any interest on TDS, now you have to report in clause 34 only. Clause number 35, if you are a trading concern, then whatever the goods you have, opening plus purchases minus sales is equal to closing, you have to report. If you are into manufacturing concern, then raw material separate, finished goods separate, opening plus purchases minus transfer to finished goods minus sales minus equal to closing. Similarly, for finished goods, opening plus purchases transferred from raw materials minus sales minus closing. That is how raw materials to be accounted for. 36A, if any of the money is received on account of 222E, that is deemed a dividend, that has to be reported here. Clause 36B, it is important, I think. Money received on account of buyback. Money received on account of buyback and cost of acquisition. See, buyback has been very favorite topic of ICA since last 3 attempts. I don't know what they may ask in this topic. We shall be very prepared. With buyback, we shall be very prepared. Clause 37, if there has been any cost audit done against you and if there is any qualification, how these qualifications have been done. If excise audit has been done against you, what disqualifications, what qualifications have been disagreements have been mentioned in the excise audit. 39 removed. 40 is nothing but turnover of the SSC, GP ratio of the SSC, NP ratio, stock turnover ratio, material consumed of finished goods, that you have to report. Clause number 41. Other than income tax, if you have received any refund, if you have received any interest, if you have received any outstanding demand, that a refund or demand under any of the act other than income tax, that has to be reported. GST refund received, report that. Clause number 42 is important. If you are a snitcher, you remember before first break we studied that if we buy shares of a company, then company is going to report to department. If we buy more than 10 lakh of foreign currency, then this authorized dealer is going to report the department. This is what this provision says, that reporting, if you are an SFT reporting entity, then you have to mention which form you have furnished, what is your reporting ID, reporting entity ID number, form number, or due date of furnishing, actual date of furnishing. This is what you have to tell. Clause number 23, relatively important, sir. If your country is required to do CBC reporting, you can cut this, not important. If your country is required to do CBC reporting, then what are the details, what are the CBC reporting you have asked to do, you have to mention. In last clause number 44, this talks about whatever expenditure you have incurred. If it is revenue expenditure, categorize it differently. If it is a capital expenditure, categorize it differently. Revenue expenditure based on exempt purchases, normally taxed purchases, you have to report. From unregistered purchase, you have to report. Similarly, capital assets also you have to report in this format. These are the clauses. And what are those important clauses out of these? Let me mark that for you. Clause number 16 is important. Clause number 20 is important. 21 is important. 23 is important. 26 is important. 30 A, B, C are important. 31 is important. 34 is important. 36 B is important. 42 is important. And I have given only very less clauses I have given here. I want to give more clauses. How come I have given so less clauses to learn? Only these clauses you have to learn. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 clauses only you have. Only 10 clauses. Easy peasy. Easy peasy. Can you all recall all these clauses with me? 16th clause was any amount not credited to P&L. Clause number 20 was employee benefit to PF. Employee benefits of to PF. Clause number 21. Sir, what was clause number 21? Oh dear, listen here. Oh dear, listen here. Clause number 21 was items debited to P&L which are to be disallowed. Clause 23 is related party payment. Clause number 26 is amount disallowed under 43B or amount allowed under 43B. Clause number 30 is transfer pricing. 30B is interest repayment. 94B. 30B is 94B. And 30C is GAR. 31 is 269 SS and T violation. 34 is nothing but TDS deduction. 36B is buyback and 42 is nothing but SFT reporting. These are the important clauses that you need to learn to be able to solve questions of tax audit well. So there is concept of revised tax audit report. I want you all to focus for a minute. In real life, you must have done tax audit many number of times. And you must have got tax audit report revised as well. You must have revised tax audit report as well. Lawmaker says there are only 3 bases of revising the report. Other than these 3 bases, any other basis invalid. That means tax audit report is not legally revised. It can be revised but not legally revised. What are those 3 bases? Understand this thing. If TDS has been deducted but not paid to ROI. If you do the tax audit report, it was not paid. So it was disallowed. But after tax audit date, before ROI date, it was paid. In that case, tax audit report is to be revised. Second thing, 43B. If any payment is allowed on payment basis, if any expenditure is allowed on payment basis, it is not paid up to tax audit report, but paid up to ROI. So tax audit report is to be revised. Third thing, if you have any regime selection on the date of tax audit now, regime was different, but later on you decided to go for next different regime on the date of ROI, then in that case you have to revise the report. Otherwise, any other case you forgot, you did a mistake, revision is invalid. Whatever revision you did now is absolutely invalid. Absolutely invalid. Okay. These are the 3 bases of revised tax audit report. Now we have ethical compliance. It's very logically listen. Very logically listen. Very logically listen. Oh, I know it's summer afternoon. I know you have come after lunch. I know it feels sleepy. I know it is difficult to focus attention. But believe me, this topic is really important. Really important. Such important that you are not able to understand the value of 6 marks in exam. Focus. Sir, during the course of proceedings, there are instances where the tax auditor is going to argue with the management. You have also argued. According to you, 194J for TDS was applicable, or management says 194C was applicable. You might argue with management. Whenever there is argument between management and auditor, now what auditor's duty is to? Auditor's duty is to report both the things in tax audit report 3CD. According to auditor, 194J is applicable. According to management, 194C is applicable. Auditor shall report both the sections under 3CD. Both the sections are to be reported. And this difference of opinion is to be specifically mentioned in 3CA or 3CB. Whenever 3CA is prepared now, 3CA is prepared, this has to be specifically mentioned in 3CA as well. That there is difference of opinion in 3CD clause number 20, clause number 34. This has to be specifically mentioned in 3CA as well, that there is difference of opinion in clause number 34. Fair enough. And if management puts the limitation on the auditor now, then he shall give adverse opinion, he shall qualify the report. If there is limitation of resources on the auditor now, in that case, auditor shall qualify the report. So 3 basic requirements of the auditor I am telling you. 3 basic requirements auditor should follow. First thing, if there is difference of opinion, mention both of them. If both of them are mentioned, appropriately disclose that both of the opinions are mentioned in 3CA and 3CV. And at last, sir, if there is sufficient not sufficient information given by the management, then you might qualify report as well. So these things auditor should do. Now, if auditor does not report according to clauses, or does not appropriately describes this thing in 3CA 3CB, or third thing, sir, auditor fails to qualify the report when there is an indication for qualification, in that case what would happen? Sir, auditor shall be guilty under CA Act. Under CA Act, guiltiness can come out of multiple causes. Sir, there is first schedule or there is second schedule. First schedule is for normal crimes, but second schedule is for heinous crimes. In this second schedule, we have part 1 and part 2. I think part 1 is professional misconduct and part 2 is other misconduct. Out of this part 1, you shall study clause 7 and clause 8. That's it. Second schedule, part 1, clause 7, clause 8. These are only clauses available in income tax. What is the reporting requirement of this clause 7 and clause 8? What clause number 7 says? If auditor was grossly negligent or he did not apply due diligence. If auditor would have checked more, he would have got more things to discover. Therefore, auditor is grossly negligent. And if auditor is grossly negligent, in that case, he is guilty under clause 7. Grossly negligent or did not exercise due diligence, then he shall be guilty. Fair enough. Sir, clause 8 will be guilty. Clause 8 will be applicable if auditor is supposed to obtain sufficient appropriate audit evidences, but he did not get sufficient appropriate audit evidences. Or he get the evidences, but later on, there are new evidences obtained which negate the opinion of the auditor. In that case, clause number 8 shall apply. So clause number 7, grossly negligent. Clause number 7, did not exercise due diligence. Or clause number 8 talks about simple thing, that is, did not obtain psi or obtain psi, but later on, new evidences are obtained which negate your original opinion. These are two guilts. These are the two professional misconducts under CA Act for income tax. In this entire process, sometimes you might see that there is overlapping of session. You might think 7 is applicable, that 8 is in fact applicable. Somewhere you might think 8 is applicable, but in fact 7 is applicable. In that case, you have to play safe. Either mention both of them or either mention don't any of them. But never ever mention the wrong clause number. If you have mentioned wrong clause number, now there is nobody in the earth that could save you. I hope I am able to clear up my point. Come on to question number 91. Acha, just before that now, let's solve first question number 91. I have to tell you how to solve the questions as well. That is also the intention of this topic. I have to teach you how to write the answers in text audit. Otherwise, it will be not worth understanding the entire chapter. Answer writing is a art in tax audit. Let me try teaching you how to write the answer. Let us first understand this case. See, listen. Take off your specs. Beat yourself with a slap. Wear your specs again if you are wearing specs, and then focus. Okay? I know difficult to focus a day before exam. If you are watching this as recorded, please. I have already solved this question. I don't know, maybe 15, 20 times in this attempt only I have solved. What this clause number 9, question number 91 says. A search was conducted under section 132 of Income Tax Act in case of Element Dwellers. Acha, Element Jeweler search is conducted. Oh, what is the reason of search conduction? Why search is conducted? Because people don't subscribe to YouTube channel, so search might be conducted. See, just look at you. You can be also under search. You can be also under search if you have not subscribed to the channel or not liked to the video. I am warning you. I am not sure about anything, but search can happen to those who have not subscribed to the channel. Okay. In case of Element Jewelers, a gold jewelry retail chain. Oh, okay. As a part of post-search inquiries, data from billing software was analyzed, and on the basis it was found that companies involved in violation of Section 48(3) in a major way on the tune of 20 crore rupees in purchase of some old gold. Oh my God! LMN software says that it has purchased 20 crore rupees of old gold in cash. Oh my God. That means 20 crore rupees paid in cash. That means it should be disallowed now. It should be disallowed. But department is cross-checking in order to confirm the verify in order to verify the finding culled from the digital data. Some customers whose whereabouts were available in the computer records were contacted and their statement were recorded on oath. So department collected the data of the customers and called the customers record their statement. What customers said? Listen, the customers admitted that under the oath that they had sold old gold and received amount more than 10,000 in cash. The fact which emerged from the inquiries is that Element has purchased and made payment for these purchases in cash in many cases if they exceeds for 10,000 rupees. Now, search conducted, software they analyzed, and it is found that more than 20 crore rupees have been paid in cash for old gold. Even customers also agreed to this. Customer also agreed to this. What was auditor doing? I mean, see, expenditure is to be disallowed. That's a different matter. But what was auditor doing in this case? Let's see. Let's see what is the reason of auditor. However, tax auditor mentioned yes in response to statement of clause 1 of clause 21D on whether the expenditure covered under 48(3) with rule DD have been made by account paycheck demand draft electronic clearing system. See, what does this mean? Under clause number 21, if you remember, we had discussed any kind of disallowances is to be reported in clause number 21 only. Now, clause number 21, it is clearly mentioned that yes, auditor has agreed to this, that yes, every payment has been done by account paycheck demand of electronic system. Auditor has wrongly reported, or in management has wrongly reported, auditor has wrongly approved that thing. Are you understanding this point? Auditor has wrongly approved 20 crore of disallowance, and auditor is not able to see. What type of foolish auditor it is? Don't be like this auditor. Acha, fees must have been less. Fees must have been less. That is why the auditor submitted that standing instructions were given by the management of the entity to the employees to make payment above 10,000 through account paycheck and permissible, and copy of this instruction have been verified. Oh ho 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 ho. Wow. Wow, wow, wow. Auditor is saying that management has given the standing instruction to the employees. And I have seen this management instruction. Yes, management instructions are given. Yes, yes, yes. Arey, instruction to I also give to you now. I also give to you that solve question answers, solve the exam paper. Did you solve it? Just because I am giving you instruction, does that mean that things are followed? Can auditor just rely on my words for you to solve the questions? Do you solve or not? It completely depends upon you now. It completely depends upon you. What type of auditor he is? Relying on management instructions. And he says, I have verified. Arey Baba, what it means? If I give you in writing that solve questions, any validity it is. So very foolish auditor it is. Let's see. He further submitted that he has also taken representation from the management that it have not paid payment. Oh ho ho ho. Auditor has taken management representation letter as well. Oh my God. You are asking a thief to give a representation letter that he has not stolen anything. You are asking the management, your duty is to find out whether management has done things or not. You are taking management representation letter that they have not. Why in the God's name they would agree that they have done anything wrong? Why would in the God's name they would agree? He has also mentioned that he has done test checks which do not tell the any violation. So test check he has also done. So he has done three things. He has seen the management instructions. He has taken the management representation letter and he has done the test check basis. Now, based on this entire process, whether auditor is correct or not, I want you all to answer. First of all, try answering whether auditor is correct or not. देखो, first question is whether auditor has done correct things or not. According to you, what should be the answer? Whether whatever auditor has done is correct or not. Sir, auditor is damn guilty. Auditor is damn guilty. Absolutely guilty. But that is not what is going to fetch us the marks. How we are going to get the marks, it depends upon how do we write the answer. And how do we write the answer? Sir, we write answer in three formats, or I mean for one format, but in three parts. Part one. Whenever theory question, I'm giving you a brief. Not correct, yes. Whenever you have a theory question can be from tax audit as well. It can be from advanced ruling as well. It can be from GAR as well. It can be from assessment as well. It can be from appeals as well. It can be from GST as well. It can be from audit as well. It can be from law as well. Format of the answering shall remain same. What is the format? Let me tell you. Answer is always in three parts. Part 1, Part 2, and Part 3. Part 1 is always about legal text. Whatever the things according to you in your question is containing the legal text, now write it down. If question is of 4 marks, then 2 paragraphs of legal text. If question is of 6 marks, then 2 or 3 paragraphs of legal text. But this is the legal text is the paragraph which is going to give you nearly 60% of the marks. This is what is going to give you 60% marks. If your legal text is incomplete or it is incorrect, examiner is not going to give you any marks. And legal text has to be factually correct. For example, in advanced ruling, sometimes you answer that if tax amount exceeds 100 crore, then a resident can go to advanced ruling. Arey Baba, tax amount is not 100 crore. Transaction amount is 100 crore. So legal text has to be factually correct. Okay? And legal text carries 60% of the marks. In our case, what is the legal text? Sir, first legal text is explaining 40A3. Any expenditure done exceeding 10,000 rupees in a single person to a single person in a single day shall be done by account, paycheck, demand of electronic clearing system. Any payment done in cash shall be disallowed and it shall never be allowed. Likewise, we have to mention the legal text of 40A3. Second paragraph of legal text is 21B. 21, not 21B, but section clause 21, which talks about, sir, auditor, it is the auditor's responsibility to find out the disallowances or check the disallowances that management has reported. Clause 21B or 21. Third paragraph is ICI guidance note. Now you are not aware of this, but that's okay. See, ICI guidance note allows the auditor to do the tax to do the tests on sample basis. I say allows that because without sampling you cannot do. Even auditing standards also allow the sampling. That's fair. But these three legal text paragraph, once you write now, you are done with the legal component. Majority of the thing you know, examiner understood. Part 2 talks about in the given case. Now, in the given case, you have to mostly repeat question. Mostly repeat question and sync it with legal text. What does that mean? See, in our case, there is 20 crore of disallowances. That too payment made in cash, and that should be disallowed. But auditor has not reported. Apart from that, auditor has taken management representation letter, which is not a full audit evidence in itself. Apart from that, instructing just management instruction might not be sufficient because internal controls might be lacking. Or sometimes you might write, sir, this is the nature of the business. This is the nature of the business. See, old gold is the high risk area of material mismanagement. This is the gyan that you have to give. You have to relate the case. Buying old gold is a bigger area of risk. You have to mention this thing. Buying old gold as a company, it is always difficult. Buying old gold is always high risk area, high material. I mean, it always carries high risk. It is the major business of the jeweler, so this should have been handled with due care. Therefore, sample basis is not sufficient. So what did we actually write in this given case? In this given case, what did we write? See, test check basis is not fully sufficient. Management representation letter is not sufficient. Audit update. Matlab in the given case, whatever it is being done now, you have to relate it with the legal text. And at last, auditor failed to discharge duty. He failed to mention disallowance. Therefore, he is guilty. Clear cut, बिल्कुल no बकवास वाली बात, बिल्कुल clear cut answer. He is guilty under clause 7 and clause 8. Because he has not applied the due diligence, he has been grossly negligent, and in addition to that, he has not even obtained sufficient audit evidences. He has just done the text check basis. He has eaten up the fees, and he has not done the work at all. That is how you have to write. If you see the answer in 3 paragraphs, they have also written. First paragraph is 48.3. Second paragraph is clause 21, and third paragraph is guidance note. Then these 2 paragraphs talk about the in the given case that whenever any payment is made, it should be disallowed now. So 20 crore payment have been made and it should have been disallowed. Auditor's opinion that he has done on test check basis is not justified because risk is high in this business. Likewise, you have to explain the in the given case. And at last, so considering the nature of the business, auditor has failed to do the sufficient audit evidences. In addition to that, he could have been more diligent enough. So he shall be guilty under clause 7 and clause 8 of part 1 of second schedule of Chartered Accountants Act. That is how you are going to answer these type of questions. There is a concept now. See, MSME. Who is an MSME? There is a concept. Let me reframe that to you. See, MSME are of 2 types. Actually, MSME includes 3 things: micro, small, and medium enterprises. Under 43BH, benefit given to micro and small enterprises, not to other enterprises. What is a micro and small enterprise? See, up for Jan 26, now it was different. For Jan 26, it was 1 crore, 5 crore, 10 crore, 50 crore. But for May 26, this has changed. For May 26, this has changed. 2.5 crore, 10 crore, 25 crore, 100 crore. Old rates we don't have to check for micro and small. Only new rates 2.5 or 10, 25 into 10. That is 25 into 100. This is the amount of MSME limits. 2.5 crore is the PP, 5 crore is the turnover, 2.25 crore is the PP, and 100 crore is the turnover. Okay. I hope I am able to teach you how do we write the answers. Come on to deductions. What deductions are to study? Just give me 2 minutes or just take a 4 minute break. We will resume. It is 3:41. Take break till 3:45. Just give me 2 to 3 minutes. I'll be back. I'll be back. Deductions. See, whatever deductions are left now, we shall have to do only remaining some portion of deductions, not the entire. So I will tell you what are the important and I'll give you a summary as well. See you guys after the break. Anji, deductions from gross total income. See, this chapter has almost lost the importance. Okay? Once a new tax regime is being asked, this chapter has almost lost the importance. Only few things are to be studied from this chapter. I will be super quick, and in just the next 20 minutes, I will be completing this chapter. But that is not important. Whatever I am asking you to learn. See, Kumar, don't worry. Let leave things on me. Till now, whatever doubts you have now, I have cleared them, and I know what doubts you have. So I will clear those doubts as well. Don't worry at all. But just believe me, I will be very fast. After completing, I have prepared a summary. I will refer that summary to you as well. But whatever deductions I am telling now, only that things you have to learn. Otherwise, you have to skip out every other thing in this chapter. Okay. First of all, deductions are always below GTI. Deductions can never overpower your GTI. Deductions cannot be more than your gross total income. And deductions are not allowed under any of the income which is taxed at special rate. Any income which is taxed at special rate, deduction is not allowed. Sir, first of all, we have ATC, individual and HUF, 1.5 lakh deduction is allowed. Sir, 1.5 lakh deduction is allowed on life insurance policy. You might buy it for yourself, spouse, children. You don't have to learn anything. Anything, don't learn. Just listen to what I'm saying and just ignore it. If policy has been taken after 1st April 2012 now, then 10% of the policy or premium paid, whichever is lower. If it has been taken for a disabled person, then 15% or premium paid, whichever is lower, deduction shall be allowed. Remember, policy is taxable or exempt, not relevant, you will get deduction. Any PPF, any national savings certificate, any repayment of housing loan principal, any fixed deposit, any tuition fees in India for 2 children, that is eligible for deduction. 80 triple C, not relevant. 80 CCD1, not relevant. 80 CCD1B, not relevant. 80 CCD2 is important. If employer contribute to your pension fund, if employer contribute to your pension fund, sir, the first thing is it shall become taxable in your hands first, and then you get deduction of that salary. How much? If you go for 115 BAC, in that case, employer's contribution or 14%, whichever is lower, you are going to get deduction. If you are going for old regime, then 10% of the salary or employer's contribution, whichever is lower. But under old regime, also for government employees, 14% is allowed. Apart from that, we have ATCCH. What does ATCCH talk about? ATCCH talks about Agniveer corpus. If you are any Agniveer who is a part of Agnipath scheme, in that case, whatever your contribution to Agniveer corpus is there, you get deduction of that. Whatever your corpus is, whatever your contribution towards the corpus, Agniveer corpus is, you get deduction of that. But sir, whatever government contributes now, it is first tax in your hands and then you get deduction of it. It is first tax in your hands and then you get deduction of that later on. Okay. Third thing, whatever Agniveer corpus money you get at the time of redemption, it is absolutely exempt. In this entire process, ATCCH2 is very important. When government contributes to your Agniveer corpus and it is added to your income and then you get deduction now, it is also available under new tax regime. Not in just old, it is available in new as well. ATD. If you buy medical insurance for yourself or for your parents, in that case, if you buy other than cash now, then 25,000 or total payment, whichever is lower, is allowed to you. But if you are a senior citizen, that means 60 years of age or more, plus you are a resident, then total payment or 50,000, whichever is lower, is allowed. Similarly, in addition to your premium, if you pay premium for your parents as well, then 25,000 or total payment, whichever is lower. Otherwise, sir, what is how much? If your parent is senior citizen plus resident, then 20 total payment or 50,000, whichever is allowed to you. ATD not relevant. ATDDB not relevant. ATU is the flat deduction for disabled people. The disabled people get flat deduction of 75,000 or 1,25,000 basis on disability. ATE relatively to be heard. See, if you take educational loan, then whatever interest you pay for educational loan, that is allowed to you. How much interest is allowed to you in this case? Provision says any amount of interest that is allowed, provided interest is paid maximum for 8 years, it is allowed. Loan can be taken for yourself, spouse, children, any of the student for him for whom you are a legal guardian. And loan shall be taken from notified bank or financial institutions. Indian bank or Indian financial institutions loan shall be taken. ATE. ATEEE, simply cut it down. ATEEB, electric vehicle, interest on electric vehicle, not relevant. Donation. Whatever donation you make, you get deduction of that. If you donate to any of the national fund, national defense fund, sports fund, children fund, duck control fund, then 100% you are allowed. If you donate to PM care fund, PM relief fund, Armenta citizen fund, you are allowed. CM relief fund, Zilla Saksharta Samiti, or any other army fund, then 100% unlimited it is allowed. 100% unlimited it is allowed. Category B, PM drought relief fund, sir. In that case, now 50% is allowed to you, unlimited wise. Category C, if you are into family planning, if you are donating to somebody into family planning, or if you are donating for any sports association, then 100% limited is allowed. If you are donating to any charitable trust, temple, housing authority, or minority interest, then 50% limited is allowed. 50% limited. What is this? See, category C, family planning and family planning and sports association, plus category D, total donation we shall take, and 10% of adjusted total income, whichever is lower, shall be given to us. What is adjusted total income? GTI minus deductions. This will give us the adjusted total income. Sir, whenever trust is registered under 80G, it has to submit form 10BD. 10BD is to be submitted up to 31st May of the assessment year, and based on 10BD, name of the donor, address of the donor, PAN of the donor is mentioned in form 10BD. Based on that, small 10BEs would be generated, and this would be communicated to donors, and based on 10BE, donation would be allowed. 80GG, cut it down. 80GGA, cut it down. 80GGB and GGC, it is relatively important. If you donate to any political party, if company donates to a political party, then deduction is allowed 100%. If any of the other person donates to the political party, then 100% deduction is allowed. Seems fair? Indian company donates to a political party, 100% deduction allowed. Any other person donates to a political party, then 100% deduction is allowed. Then income-based deductions, 80 double Z double A. 80 double Z double A. If you hire new employees for your business, then on such employees, whatever the additional employee cost is incurred, that is allowed as deduction into 30%. Whatever the new employee cost is being incurred now on those employees, 30% is allowed as deduction. In that there is a catch. Now what's catch there? Understand carefully. In that there is a catch. Sir, this expenditure is allowed to only those who are audited under 44AB, and you get deduction for 3 consecutive years. Now people always get confused as to how many times you get deduction. Sir, you get deduction for 3 years. In first year, whatever employees you hire, new employees you hire, you will get deduction on those employees. Second year, whatever new employees you hire, you will get deduction on those employees. Third year employees, you would get deduction on those employees. Does that mean that employees that I hire for first year, I will get deduction on them for 3 years? Does that mean? Right answer is legally no, clearly no. Whatever employees you are hiring in current year, these are only the new employees, you get deduction on these employees only. Next year, whatever new hiring you will do, that will give you deduction. That's enough. Now, important point, sir. On what employees deduction would not be given to you? Very important, very, very, very important, sir. First of all, if any of the employees' salary is more than 25,000 rupees per month, deduction will not be given to you. If employee do not participate in RPF, deduction would not be given to you. If employee is employed for less than 240 days, deduction will not be given to you. But in case of leather manufacturing, apparel and footwear manufacturing, in that case, even 150 days employees is employed, then you will get deduction. At last, sir, any employees whose entire contribution for the pension has been paid by the government, those employees are also not considered. Any employees whose salaries has been paid in cash, bearer check or cross check will also not get deduction. Fair enough. Sometimes what happens is, if an employee has come to me for employment purpose and I know that this employee will not be employed for more than 250 days because it is nearly October, November going on, I know if I hire them I will not get deduction, so I might not hire them as well. Therefore lawmakers have said, if employee has been employed in current year and he has been working for less than 240 days, less than 150 days, assume that he is employed in next year only and you can take his deduction in next year. Fair enough. ATIAC. So ATIAC, it is technically very good section, but real life it is very good section, but in examination point of view, very least relevant. If you are into an eligible startup, now what is an eligible startup? Eligible startup is nothing but a startup into innovation, development, product, process, service, and technological development, improvement of product, employment generation, wealth creation. So many bhari, heavy words which makes no sense as a student. Any startup whose turnover is up to 100 crore rupees in first 10 years of incorporation, it has interministerial board of certification as a valid startup, then such a startup would get 100% deduction on the profits for any 3 consecutive previous years. Remember, plant and machinery should be new and he shall get its books of accounts audited. ATIBA, what this says, developing housing projects. ATIBA talks about if you are into housing project. If you are into housing projects, or housing project means you own a property, you get the construction done and you sell the houses. That housing project you are into. In that housing project, 100% profit that you get now will be eligible. But there are certain conditions. So the project should have been approved and completed before 31st March 2022. Sorry, that must have been approved up to 31st March 2022. That project completion should take place within 5 years. If not done, then whatever the proportionate properties are left, that shall be taxed in your hands. Shops, carpet area should not be more than 3%, not relevant condition. See, if you give any property to person, then second property should not be given to his wife or his minor child. Very important condition, sir. Whenever you want to claim deduction under 80 IBA, in that case, now you should never execute a work as a works contractor. What does that mean? Sir, for example, if I own a piece of land, I construct it and I sell it, it is absolute valid business. But if somebody else comes, if somebody else has given me a piece of land and asked me to get it constructed, if somebody else has a piece of land and I am requested to do the construction work, I am requested to do the construction work and he will only sell it. This is a works contract. On works contract, you are not given any deduction. Condition with respect to size not relevant. Then we have 80IA to 80IE. These are 4 or 5 big businesses on which 100% deduction is allowed. 100% deduction is allowed. 100% as such. 100% as such. If business is incorporated before 2017 now, then 100% deduction for 10 years is allowed. This is the basis of these 10 businesses. 80 JJA you can cut down. 80 LA. If you are a IFSC unit who is into business, or who has a capital gain income on helicopter, aircraft and ships, in that case 100% deduction for first 15 years. In first 15 years, any 10 consecutive years, you will be given 100% deduction. You shall take approval from IFSC authority and you shall have a certificate in form 10 CCF. 80M, really very important section. Intercorporate dividend, a deduction that is allowed in new tax regime as well. What does this section mean? First thing, sir. First thing, any deduction, any dividend received. For example, received 6 lakh. To earn this dividend, I have paid interest as well, 2 lakh, and distributed 4 lakh up to ROI. How much deduction under ATM would be given to you? Sir, zero. Always remember, at least 1 month prior to ROI should be distributed. Okay? This was tested in RTP. If you have distributed on 15th October, that means 15 days before ROI, you will not get ATM. How this is to be processed, let me tell you. Whenever you have dividend income, always take this dividend income received as 6 lakh rupees, 6 lakh rupees. On this, you will be given section 57, deduction under section 57. You will be given how much deduction that will be given under section 57? Sir, 20% of dividend. That is 1.2 lakh, or interest paid 2 lakh, whichever is lower, 1.2 lakh would be allowed. That means your net dividend received would be 4.8 lakh only. This will become your GTI and you will be given ATM. How much ATM would be given to you? Net dividend 4.8 lakh or dividend paid 4 lakh. That means 4 lakh would be allowed to you. That means 80,000 rupees would be your income. 80,000 rupees would be your income for dividend. What do I say? If a domestic company receives any dividend and pays also some dividend, in that case ATM is allowed. How much ATM is allowed? Dividend including deemed dividend received from the companies, any company, foreign company, businesses, deemed dividend, any dividend that you receive, now that shall be taken as dividend received, or dividend distributed 1 month before the date of ROI, whichever is lower shall be allowed as ATM. Whichever is lower shall be allowed as ATM. ATP, triple star rated, triple star, very, very, very important. I mean, no other section is important as ATP. I personally think it has been attempts that cooperative society has not been asked. If it is asked, it will surely create a havoc for you all if you don't remember. What does this mean? Cooperative society. If you are a cooperative society, then you are eligible for ATP as well. Now, what is ATP? If you are a cooperative society which is into 9 businesses now, this 9 businesses, then 100% deduction on the profits that you do. 100% deduction on the profits you do. Sir, what are those profits? See, 5 profits are good, but 4 profits are five businesses are very good, but 4 businesses are very bad businesses. 5 are very good, 4 are very good, 4 are now what is the difference? Listen. If a cooperative society provides credit facility to the members, if you are a society taking money from members, distributing to members, earning interest, it is absolutely 100% deductible business. But remember, deduction would not be given. This ATP would not be given to a cooperative bank. Cooperative bank is not eligible for ATP. What is the second easy business? If cooperative society is into cottage industry, if cooperative society is into fishing industry, if cooperative society is into earning interest and dividend from other cooperatives, not cooperative bank, but if you are earning interest dividend from other cooperative societies, okay. If you have rental income from godown and warehouse, these are the 5 easy peasy incomes of cooperatives which are 100% deductible. What are the wala deductions? What are the bad wala? First of all, if you are marketing the agriculture produce grown by the members, this is a bad business that is difficult to learn. If you have labors, if your members have labor and you are doing collective disposal of the labor of the member, or if you are processing the agriculture produce without aid of power, and if you are a primary cooperative society supplying milk, oil seeds, fruits to federal cooperative society, then you are eligible for deduction. What did I say? 5 are easy peasy, 4 are wala. What were them? 5 are easy peasy. I mean, credit facility to members, cottage, fishing, interest dividend from other cooperatives, and rental income from godown and warehouses. 4 are bad. What was them? Sir, agriculture produce grown by the member, marketing that. Processing of agriculture produce without power. Members have labor, we are collectively disposing them, and if you are a primary society, we are supplying oil, milk, seed, fruits to federal cooperative society. These are 9 business on which whatever business you do, 100% reduction is allowed. See, these 9 business, at least 8 should be learned to you. In my batches, I force you to write it and send to me. But in this marathon, I cannot force you. I can just request you to write these 9 businesses of your own. Even after seeing, write them and mention this in comment box. If you are watching this lecture recorded, if you are watching this, write down the 9 businesses in the comment box and comment this thing so that you are able to learn this. I personally think cooperative society is going to be asked in this attempt. Apart from that, if you are a consumer cooperative society, if it is specifically mentioned that it is a consumer cooperative society, then 1 lakh deduction is allowed. And if you are any other cooperative society who has a business income, 50,000 deduction is allowed. ATPA removed from syllabus. ATQQB. If you earn any kind of royalty on books, quality books per royalty, quality books per royalty, quality books per royalty, QQB. If you are a resident person, you earn any royalty on books, then whatever royalty you receive or whatever the 3 lakh rupees is, whichever is lower shall be allowed to you as deduction. Sir, if you are receiving lump sum royalty, then any royalty received of 3 lakh. If you are receiving percentage royalty of books sold, then 15% maximum royalty shall be eligible for deduction. RRB is royalty from patents. Whatever the royalty you receive now, that you shall take, or 3 lakh, whichever is lower. If you are receiving royalty outside India, that money should be brought to India up to 30th September of the assessment year. ATTT, if you are a senior citizen, sorry, if you are a normal person who has a savings account and at bank, post office or cooperative bank, and you are earning interest, then interest amount or 10,000, whichever is lower, shall be allowed as deduction. If you are a senior citizen now, resident senior citizen, and you are having interest in FD savings and RD, bank, post office, cooperative, then interest or 50,000, whichever is lower, shall be allowed to you. I hope I am able to clarify every deduction to all of you. Every deduction is clear to all of you. Come on to a special series, not special series to be precise, but a effort that has been made for all of you. A genuine effort has been made for all of you. Let me see if you are able to take advantage of that. See, next 5 minutes are very crucial for deductions. Okay, next 5 minutes. Chapter 6 deduction not allowed against any income which is taxed at special rate and cannot exceed GTI. If I broadly classify what all deductions are in your syllabus, then there are some investment expense based deduction. I might classify them as ATC 1.5 lakh, ATCC triple C, CCD1, CCD1B. I asked not to learn. ATCCD2, employer's contribution to pension. This was also there. ATCCH, Agniveer Corpus. ATD, medical insurance for you yourself, parents. Then this I asked not to learn. This also I asked not to learn. ATG, not learn, not learn, not learn. See, political parties, these are the expense based deductions. Whenever you spend some money, you get deduction. ATO is free wala deduction. If you are disabled, you will get deduction for sure. There is nothing to be done. Then we have some income based deduction where we have ATTT and TTB, interest on savings, interest on FDRD. Then we have some other income based deduction, that is ATZZA employee cost into 30%, ATIAC startup, ATIAB housing property, house construction, ATIA to IE big businesses, ATJJA, NTU single A. Bioprocessing it is, ATLA IFSA unit, ATM intercorporate, ATP cooperative, ATQQB books royalty, ATRRB patent royalty. I hope you are able to grasp the section number. Section numbers are not relevant here. In this entire process, understand what my pointers are. This 80 to IA to RRB deductions are called Chapter 6A Part C deductions. Chapter 6A Part C deductions. To get these deductions, you have to maintain separate books of accounts of these respective businesses, and you have to file return on time. You cannot delay the return after 139 due date. Sir, at the time of assessment, if income is enhanced, if income of assessee is enhanced, in that case, deduction would be given on this enhanced portion of income as well. Sir, deduction from profit. Sir, whenever you have any interest income, on that you are not going to get any above income based deduction. Any grant, any insurance receipt, on this you are not going to get any income based deduction. Any 3580 10 double available, then chapter 6A part C not available. AMT calculation, every deduction under chapter 6A part C is added for AMT calculation, but remember 80P is not added. ATD is a section, ATDD. ATDD was nothing but if you're taking care of a relative, 80 DDB, if your relative has a specified disease. 80U is nothing but if you are a disabled person. 80 QQB is quality books per royalty. 80 RRB is royalty on patent. 80 TTB is a senior citizen earning some interest. These 6 deductions are available only to resident. These 6 deductions are available only to resident. Rest all deductions are available to non-resident as well. All non-resident as well. But there's an exception that 80M is available only to domestic company. That is always understood. That is understood as well. Domestic company only. 80M is available to domestic company only. Of course, for 80 IAC for startup, you understood. Individual deductions we only consider. These 6 deductions are available to individual. Rest all are available to resident, non-resident both. Now, in this entire process, 80 CC2, that employer contribution to employer contribution to pension fund. 80 CCS2, government's contribution to Agniveer. This was allowed now. 80 LA IFSC unit. 80 AAA, that means new employee you are hiring. 80M intercorporate dividend. These 5 deductions are available in new and old. Rest all the deductions are available only in old regime. 80C. Remember 80C. 80C, what it was? Life insurance policy, housing loan repayment, whatever you do. Lawmakers, a tuition fees also. If you even pay in cash, bank, everything is allowed. Everything is allowed. Even 80D, 80G, 80GGB, in these say 4 sections, sir, you cannot make payment in cash. Can you pay in bearer check? Yes, here bearer check is allowed. Here cross check is allowed. Here uncrossed check is allowed. Only hard cash is not allowed. 80 AAA, it is specifically mentioned that you have to make payment via account paycheck only. Now, under these entire deductions, now whatever I have highlighted, just take a screenshot. These highlighted ones are only ones you have to study. Otherwise, there is no other deductions that is required. Even for DTAA purpose, you don't have to study any other deduction. Okay. At last, sir, there is a concept, a small concept I want to take you through. Very small concept I want to take you through. For example, there is a Reliance which has a power generation business. Business income is 2 crore rupees and brought forward losses 40 lakh rupees. After setting off, our business income is 1.6 crore rupees. Our interest is 50 lakh rupees. Our total income is 2.1 crore rupees. How much 80 IA would be allowed to us? Sir, whether 80 IA would be allowed to us 1.6 crore or 2 crore, right answer is always before loss you will be allowed. Always before loss. Whatever the business income is there now before losses, that much amount of 80 IA would be allowed to you. Sir, what if we don't have a after what if how can we claim that? Lawmaker says that it's allowed. Whatever the business income is there now, up to that extent you can claim 80 these income based deductions, but maximum to the extent of GTI. So it is possible that if we take 2 crore deduction now, out of that 1.6 crore will be set off against business income and 40 lakh will be set off against IFOS income. That's okay to us. You are entitled to 2 crores of deduction just because your loss they reduce your income. We don't care. If your loss reduce the income, we don't care at all. This was said in case of Reliance Power Limited case law. This completes our deductions. I guess this much deduction, the summary that we did in the last is more than enough. Not anything required more than this is to be done. Just give me 15 to 20 minutes and we'll be done. Just 15 to 20 minutes. Set off and carry forward. I hope, Kumar, I have answered your every question. Set off and carry forward. Listen very carefully. See, there are two words intertwined here. Set off and carry forward. Always understand, do not link them. These are two different terms altogether. Set off is a different term, carry forward is a different term. Set off is of two types. Sir, intra-head set off or inter-headed set off. For example, you have business loss and you have business income. Can you set it off? Right answer is yes, that is intra-head adjustment. If you have business loss, can you set off this loss against capital gain? Most welcome. If you have business loss, can you set off against this profit? Can you set off this loss against the capital gain? Can you set off this against your IFOS gain? Yes, you can set off. This is inter-head. So within the same head, intra-head, Beyond the same head, it is interhead. Once you do intrahead, then you have to do interhead. If something is left out, then it shall be carried forward. Now, what are the rules with respect to interhead adjustment? Ideally, there is no such rule as to interhead adjustment. Any loss under one head can be set off against the income of any other under the same head. But there are four exceptions to this. Four exceptions. Cut down the fifth one. Four exceptions. Why? Any long-term capital loss can be set off against long-term capital gain only. Long-term capital loss can be set off against long-term capital gain only. Why it is being said? There is a reason to it. There is a reason to it. Why there is a reason to it? Understand this carefully. Long-term capital gains are taxed at 12.5%. So if income is taxed at 12.5%, why do you think that government will allow the losses to be set off from 30% income? If government allows this losses to be set off from business income, taxation is just 12.5%. So losses can reduce your income by 30% tax rate. Not allowed. Therefore, losses can be set off against long-term incomes only. Horse races loss can be set off against horse races income only. Speculative loss can be set off against speculative income only. And business loss can be specified business loss can be set off against only specified business only. See, conditions is always with respect to losses, not the income. Speculative income can be set off from any losses, remember. Like speculative losses can be only utilized for speculative income only. Once you are done with intra-head adjustment, you shall come on to inter-head adjustment. Inter-head adjustment means one head to other. Ideally, there is no such rule as to what inter-head adjustment you can do, but there are 7 conditions as to what you cannot do. Sir, long-term capital losses can be only set off against long-term capital gain. No inter-head adjustment allowed. Horse races loss can be set off against horse races income only. No inter-head adjustment allowed. Speculative loss can be set off against the speculative income only. No other rules allowed. No other inter-adjustment allowed. Specified business loss can be set off against a specified business only. No inter-adjustment allowed. Short-term capital loss can be set off against short-term capital gain or long-term capital gain. Inter-head adjustment is not allowed for short-term capital losses. PGBP loss can be set off against any head of income except salary, because PGBP and salary cannot go simultaneously. If you have a house property loss, remember, if you have a house property loss, you are opting for old tax regime. In that case, what would happen? Sir, you can maximum have loss of 2 lakh rupees. That 2 lakh rupees loss can be set off against any head of income. Maximum 2 lakh rupees loss you can have. Under old tax regime, you can have any loss. Maximum loss that you can set off inter-head adjustment is 2 lakh rupees. Under old tax regime, you can have any amount of house property loss. Maximum loss that you can set off is 2 lakh rupees. Under new tax regime, for self-occupied house property, loss is not possible. Let out house property loss is possible, but inter-head adjustment is not allowed. Inter-head adjustments and carry forward for this house property loss is not allowed. Sequence always, first of all, we shall do intra-head adjustment, then inter-head adjustment, then carry forward. Now, IFOS losses cannot be carried forward. Similarly, house property losses and new tax regime cannot be carried forward. Very, very important adjustment. For example, if I have business loss in current year, business loss in current year can be set off against any other head except for salary. Any other head is allowed. But what about if we carry forward this business loss to next year? Lawmaker says once it is carried forward to next year, now business loss can be only set off intra-head adjustment. We cannot do inter-head adjustment from subsequent years. First year you are allowed to do inter-head adjustments. Second year you are not allowed to do. Once it is carried forward, now you are not allowed to do inter-head adjustments. Sir, these provisions are only applicable to losses, but sir, depreciation, unabsorbed depreciation can be carried forward any number of times. It can be set off against any other head. Even after 1 to 2 years, it can be set off against any other head. Our salary is not allowed. Sir, once losses are carried forward, how long these losses can be carried forward? Sir, basically 8 years. And whenever you want to carry forward, na, you shall file ROI on time. You shall file ROI on time. House property losses, you can carry forward for 8 years. ROI on time not mandatory. Even with late ROI, you can claim. Business loss for 8 years, ROI on time is necessary. Speculative loss, 4 years assessment years, ROI on time is necessary. 3580 indefinitely you can carry forward, ROI on time is necessary. Capital gain losses 8 years, ROI on time is necessary. Horse races losses 4 years, ROI on time is necessary. Unabsorbed depreciation carry forward indefinitely, ROI on time is not necessary. Now, sir, or normally 8 years, but 4 years for speculative business plus horse races. Indefinite period for 35 AD or unabsorbed depreciation. And ROI on time normally, but except for two cases, house property and unabsorbed depreciation. Sir, if we late furnish the ROI, can we carry forward the losses? Normally, you cannot. Sir, house property losses, house property losses are allowed. Unabsorbed depreciation, sir, unabsorbed depreciation also you can carry forward. Perfect, sir. If income is exempt, then losses are ignored. See, for example, agriculture income is there. If agriculture income is there, we don't tax. But sometimes agriculture can have losses as well. If agriculture losses we have, it cannot be set off. It cannot be set off, carry forward, nothing can be done. There are certain incomes against which no losses are allowed. There are certain incomes against which no losses, no unabsorbed depreciation is allowed. Like casual income, any casual income cannot be set off against any profits, any losses. Any online gaming, any undisclosed income, any virtual digital asset income, these are the special incomes against which no losses are allowed. There are certain losses which can neither be carried forward, which can neither be set off. For example, if you have lottery losses, virtual digital asset, which are um, exempt losses, or if you have online gaming losses, this cannot be carried forward, this cannot be set off as well. IFRS losses cannot be carried forward. Now come on to important amendment. This is an area which can be tested in exam because this is an amendment. Major amendment took place. Listen, till last year, what used to happen? If there was an amalgamation and one of the entity had losses, so this new entity was allowed to carry forward the losses for fresh 8 years. Let me tell you what I'm saying is, for example, this is Rahul. I have losses of say 10 lakh rupees, and this has been since 2017-18. How long I can carry forward? For 8 years I can carry forward. So 2025-26 is the last year I can carry forward. This is the last year I can carry forward. On 1st April 2024, I amalgamated with Pinky. I amalgamated myself with Pinky. So lawmaker says that whatever time that has lapsed now, we shall not care. For fresh 8 years, loss can be carried forward by Pinky. Till last year, this was the provision. But this has undergone changes. Lawmaker says that if amalgamation took place on or after 1st April 2025, if amalgamation took place on or after 1st April 2025, in that case, clearly speaking, lawmakers are very clear that instead of fresh 8 years, remaining of 8 years shall be allowed. That means in 2017-18 was the first year. Now, so 25-26 will be last year. 25-26 will be the last year of losses. 25-26 will be the last year of losses. That means if I amalgamate myself, I have to set off this losses. Current year only, I cannot carry forward. So this is the amendment. In case of amalgamation, earlier we had fresh 8 years of losses of carry forward. But in now, as per amendment, only remaining of 8 years shall be given. Original plus new total carry forward will be given 8 years only. Same for demerger. For demerger, we already had this 8 years. Conversion in conversion also we used to get fresh 8 years, but now remaining of 8 years. Unlisted company converted into LLP, again remaining of 8 years. Remember, very important thing, sir. What losses anybody can have? A capital gain losses, house property losses, business losses, or stressing losses, unabsorbed depreciation. These are the things that are possible. Lawmaker says that whenever you amalgamate, convert, sir, only business losses are allowed to carry forward. No capital gain losses, no house property losses, no horse races losses, only business loss. And in this business loss as well, normal business loss, speculative loss also cannot be carried forward. Unabsorbed depreciation can be carried forward. Unabsorbed depreciation is not losses, but whenever there is amalgamation, demerger, only business loss can be carried forward. No speculative business loss, no house property, no capital gain, no horse races, nothing. In case of demerger, how losses are allocated? For example, Reliance demerges Reliance Jio or Jio Financial Services. How much losses would be given to Jio? See, if Jio is the only loss-making entity, then entire losses would be given to Jio. But if Jio is not loss-making entity, then in the proportion of the net assets, losses would be given to Jio. In case of amalgamation between banking companies with specific banks, industrial undertaking with a hotel, public sector company with public sector company, there are certain conditions to be fulfilled for loss carry forward. There are certain conditions. What are those conditions? Very carefully listen. I don't think these are very much relevant, but just listen. Okay, for 2 minutes, just assume that I am blabbering. If you are a public sector company amalgamating with public sector company, you are an amalgamating company. Lawmaker says before the amalgamation, for at least 3 years, you must have done business. You must have done business for 3 years. Plus, whatever the assets that are transferred on the amalgamation now, at least 2 years prior to that, you shall, whatever assets you had as on now, you shall have at least 75% of the assets. Then only it is a valid amalgamation, and we shall assume the losses can be carried forward. What did I say for amalgamating company? Before amalgamation for 3 years, this company must have done business. Second thing, before amalgamation, at least 2 years back, whatever the assets were, now at least 75% of the assets should be there in the old company. These are the conditions. What about amalgamated company? See, whenever amalgamation take place, this new company shall do 5-year business. It shall reach 50% of the capacity in fifth year, 50% of the production capacity. And it shall also hold whatever asset it received, at least for 5 years, it shall hold 75% of the assets, and therefore losses shall be allowed for remaining of 8 years. If any of the condition is violated, then it would be taxed in the year of the violation in the hands of the amalgamated company. Everything kept aside, सबसे important section, most important section for the day, that is section number 79. Most important section of the day. If you are a closely held company, what is closely held company? A unlisted company. Very important section. Focus for now, like last 10 minutes, and last 10 minutes focus. If you are a closely held company, lawmaker says the year in which you incurred the losses, whoever were the shareholders in that year, those shareholders shall continue to hold at least 50% of the shareholding in the year in which you want to set off. What did I say? The year in which you incurred the losses, whoever were the shareholders now, such shareholders at least hold 51% of the shareholding in the year in which you want to set off, then only you are allowed to set off. Let me take an example to illustrate you. For example, this is 2024-25 Vihan Private Limited had a loss of 50 lakh rupees. In 2026, there is change in shareholding. Case number 1. Originally 34, 36 and 30% were held by XYZ. Right now, X has 34, Y has 36, but Z has sold its shareholding 30%. Sir, original shareholders had 100%. Now these original shareholders have just a 70%. Can we set off this losses? Right answer is in case number 1, we can set off this losses. But in case number 2, how things have changed. X has 34%, now he has just 8%, so 26% gone. Y has 36%, now he has 8%, so 28% gone. Z has 30% and now he has 10%, so 20% gone. Overall, 74% have been transferred to somebody else. Can I say those shareholders who had shares in the year in which loss was incurred are now holding lesser than 51%? These three people who were the shareholders in the loss year are now holding lesser than 51%. Therefore, loss cannot be set off in the second year. Very important clause. Very important clause. Very important clause. If you have incurred loss in a year, whoever are the shareholders in that year, such shareholders shall be holding at least 51% in the share capital in the year in which you want to set off the losses. Then only losses shall be allowed. Now I have to tell 4 pointers with this regard. First of all, these provisions are not applicable on unabsorbed depreciation. These provisions are not applicable to unabsorbed depreciation. This is only for losses. Second thing, sir, in case of eligible startups, what is eligible startup? That startup we understood now has turnover of 100 crore in first 10 years of incorporation. It has interministerial board of corporation, board of certification, 100% deduction allowed for 3 years. We studied in ITAC. If you are an eligible startup, see, startups sell their equities very easily. In that case, what to do? See, lawmaker says that if startup is there now, you have to see whatever your loss is incurred now, whoever are the shareholders shall continue to be shareholders. What am I saying? In normal business, shareholders shall hold at least 51%. Those shareholders who were shareholders in the year of loss shall hold 51% in the shares, 51% in the shareholding in the year of set off. But in eligible startup, whoever are shareholders shall continue to be shareholders. That's it. Earlier, I might have 50%. Right now, I might have one share allowed. You can still set off. Now change the role. Now try answering. X had 34%. Is he a shareholder? Yes. Y has 36%. Is he a shareholder? Yes. Z has shareholding. Is he a shareholder? Yes. Can this loss be set off in case number 2? Yes. But whereas it cannot be set off in case number 1 because Z has sold all its shares. So what the point is, in normal business now, shareholders, 100% shareholders shall hold at least a 51% shareholding in the year of set off of losses. But sir, if it is an eligible startup, then shareholders shall continue to be shareholders. There is no limit as to how much shareholding you shall have. This is the second point I have told you. Third point, sir, sometimes, for example, X has transferred the shares to Z on account of death, or X has transferred the shares on account of gift to somebody else, or anybody has transferred shares on account of insolvency proceedings. Because of insolvency proceedings, if shares are being transferred now, in this case, these provisions do not apply. These provisions do not apply. Section 79. In case of succession, see, normally succession does not allow carry forward of losses. But sir, in case of inheritance, if losses are given, for example, if there is a proprietor had a loss and he died, his legal hire continue the business. In that case, loss can be carried forward. Similarly, for partnership firm as well, if there is a partnership firm and one of the partner died, normally losses of his share cannot be carried forward. But if his legal hire continue, then losses can be carried forward. No loss set off can be allowed against undisclosed income, and no loss that can be set off against the income which is determined during the search. Whenever you have intraday trading, it is speculative. Whenever you have any shares held as stock in trade, it is called PGBP income. If it is held as stock capital asset, then capital gain income. Any derivative will be considered as business income. Sequence has been given, not much relevant. Come on to next topic, that is ICDS. Income computation and disclosure standards. Sir, is it really necessary to do? I think whatever is relevant, believe me, I'll teach you. Till now, I don't think anything has been so difficult for you not to grasp, okay, that you might not get grasp. Very easy things have been going on. Income computation and disclosure standards. First of all, sir, ICDS are applicable to all SSCs. But those SSCs which are individual and HUF who are not liable for audit, for them ICDS might not apply. But for every other SSC, ICDS are applicable. What is the purpose of ICDS? Sir, ICDS help in capital gain house property salary? Right answer is no. If you want capital gain house property salary, go to regular provisions of Income Tax Act. If you follow cash system of accounting, ICDS do not apply. Normal provisions of accounting standard shall apply. If you want to maintain books of accounts, then to ICDS are not going to tell you anything. In DS and AS shall prevail. ICDS just gives you computation standards, how income is computed, how PGBP and IFRS is computed for taxation purpose. What did I say? How PGBP and IFOS is calculated for the taxation purpose, that is what ICDS teaches us. Sir, even if you opt for presumptive taxation, that means 44A, sometimes if you opt, ICDS shall apply for presumptive taxation as well. If you pay taxes as per MAT, then ICDS are not applicable because MAT is the book profit based on Companies Act. But if you pay taxes as per AMT, then as per AMT, whatever type profits you arrive now, on that ICDS are applicable because that is total income as Income Tax Act. If there is conflict between AS rules, accounting standards, and Income Tax Act, who shall prevail? See, first of all, Income Tax Act, then rules, then ICDS, then accounting standards. This is a sequence of follow. ICDS are 10 as of now. What ICDS we need to study? Let me give me just 5 minutes. ICDS recognizes going concern. That means business shall be continued. ICDS recognizes consistency. Whatever the accounting of method you are following, whatever the method of inventory valuation you are following, that shall be continued. ICDS recognizes accrual system of accounting. Accrual system. But ICDS does not recognize this. Prudence does not recognize materiality. You remember, most of the provisions are not allowed because provisions are allowed as per accounting standard, but these are not allowed as per ICDS because ICDS doesn't recognize this prudence. ICDS doesn't recognize this materiality as well. For example, if you have done 10 crore of expenditure, but it is revenue in nature, so it will be debited to P&L. So there is no materiality concept in ICDS. Substance over form. If you want to change the method, if you change the accounting policies, it can be changed, but there has to be a reasonable basis for that. Inventory valuation. See, inventory valuation as it is accounting standard, but I need to tell you two things. Inventory is valued at cost, NRV, whichever is lower, but at the time going concern is hit. At the time of dissolution, then inventory is valued at NRV only. Okay. ICDS 3 construction contract. See, whenever we have construction contract, we have one method, percentage of completion method. That's it. We have studied this in 43 CB. I am not referring that. ICDS 4, revenue recognition. How revenue is recognized as good as accounting standards. For example, you sold goods when there is significant transfer of risk and rewards and there is reasonable certainty of collection. For service contract, it depends upon type of contract. If it is smaller contract, then percentage of completion method. Then if it is for longer period, then percentage of completion method for longer and project completion method for shorter projects. Interest or IT refund receipt basis, dividend receipt basis, royalty accrual basis, other things as per accounting standard, everything as per accounting standard. ICDS 5, tangible assets. Tangible assets are recognized as per section 43(1) as we have studied. What are to be added? What are things added to cost? Second thing, depreciation is being charged as per section 32 of Income Tax Act. And no revaluation is allowed in case of ICDS. No revaluation on assets is allowed as per ICDS. Sir, in exchange, for example, you have an asset and you give away that asset. You receive a new asset in return. Whatever asset you receive, FMV of that asset shall become the cost of asset. Exchange gain or loss, no need to study this. Government grants. See, if you receive government grant for purchase of an asset, reduced from the value of the cost of asset. If you receive government grant in the form of asset at a concessional price, don't do anything. Whatever the price you pay for the concessional asset, just recognize that. For example, land is available at 2 crore rupees. You got that land for 1 crore. So just recognize land at 1 crore. It is assumed that you have considered that grant. Sir, if you receive grant for any other purpose or for a non-depreciable asset, in that case, what happens? See, for example, if we received a grant for a langar, a bhandara, a common kitchen, Annadanam. Yes, I learned that word. If you received a grant for Annadanam, in that case, what happens? For example, if you want to do Annadanam in 4 parts, take 4 parts. Whenever first part is done, recognize the 25% of the grant. Then second part is done, recognize 25%. So whenever some certain conditions attached to the grant is fulfilled, you can recognize grant as well. Refund of grant not relevant. Securities. See, ideally securities are recognized. See, securities valuation, if they are held as capital asset, it is done as per capital gain chapter. But if securities are held as stock in trade, then you have to refer ICDS 8. What this ICDS 8 says. Initial recognition. See, ideally, whenever securities you buy, which are held as a stock in trade, you shall recognize that cost plus incidental expenses. If you exchange the securities, whatever the asset you received, take FMV of the asset received. Sir, for example, if you buy any bonds, take it. On that bonds, you pay some interest. For example, you have bought bonds and 3 months interest have been accumulated. Lawmaker says that always recognize interest bearing securities at X interest price, not at common interest price. X interest price you should recognize. What is subsequent measurement? Very important. This is the most important thing for which I have to teach ICDS. See, ideally, accounting standards says inventory valuation shall be done cost or NRV, whichever is lower. On securities held as a stock in trade, also cost or NRV, whichever is lower. Security wise is to be done as per accounting standard. But as per ICDS, we do not follow accounting standards. Here we have category wise. What does that mean? Let me tell you. If I have a share 1 which is cost 100, NRV is 70. Share B, cost is 200, NRV is 210. If you check cost NRV, whichever is lower, 70. Cost NRV, whichever is lower, 200. Security wise valuation is 270. This is what accounting standards say. But ICDS say something different. Take the total of cost 300, take the total of NRV 280, take the lower of 2, that will be 280. So category wise you have to do. Shares will be done this way, bond will be done this way. Well, I mean, category wise, you have to do the valuation, not the security wise. Borrowing cost. What does borrowing cost say? See, any of the cost that has been incurred till the date asset is put to use. Any loan taken for an asset is put to use. Then such interest shall be added to cost. At last, sir, contingent assets, contingent liabilities, provisions. Contingent liabilities are not recognized by income tax. Contingent assets are recognized only if there is reasonable certainty of collection. Provisions. See, asset related provisions never allowed. Liability related provisions are only allowed if there is reasonable certainty and fair estimates, then only they're allowed. Basically, two types of provisions are allowed. For example, wage revision. If you know that every 3 years there is wage revision happening now, then wage revision is allowed. Any wage revision related provision is allowed. Second thing, provision for warranties, it may be given. For example, you know that every year warranty is to be paid 0.5%, then 0.5% provision shall be allowed. It was as in RTP. So two provisions till now have been allowed by ICA. Otherwise, every other provision like gratuity, leave encashment, every other provision is disallowed. Provision related to gratuity disallowed, bad debt disallowed, but employee benefit shall be allowed. This is the entire ICDS, and this is what completes your small topics as well. 10 chapters, nearly 5.5 hours, pure content with question answers done at the level best. I really enjoyed doing that. How was your experience? Do let me know in the comment section once the class is over. Tomorrow, we have to meet for A category topic. Almost entire syllabus we have to do, which is left out. And believe me, it will be done as if you are watching a regular class only. It will be an 8 hour, 9 hour, 10 hour session. Maybe it might go to 10 hours. For Hindi, it went for 10 hours. So it might go for 10 hours as well tomorrow. Fingers crossed. We shall meet at 9 a.m. tomorrow morning with same energy, excitement as well, because I am really, really, really enjoying delivering content in English. Expecting the same support tomorrow, expecting the same excitement, enthusiasm, joy, and excitement for tomorrow. Hope you like the session. Share it with your friends. Do like the video, subscribe to the channel, and also mention in the comment box what specific videos do you want for your syllabus as well. I will be more than happy to come up with those videos as well. All the very best. See you guys tomorrow.